homes to be built in the next 5 years. Now, that's a large number. So that can be seen as positive because homes is a many-sided multiplier impact. And on that note, why don't we get the man of all, the last word on housing. KK Mistry, the former CEO of HDFC, is with us. Mr. Mistry, first thoughts on the entire budget. Extreme fiscal rectitude, way better than what the market was expecting. As well, housing. The key point for you is 20 million rural homes is the target that they have set themselves for in the next 5 years. So clearly, the Rural Awas Yojana is getting a huge pep up.
Absolutely, Lata. I think it's a fabulous budget, truly a fabulous budget. There is something in this for everyone. And I think the biggest strength, as you said, is the fact that the fiscal deficit has been kept much lower, significantly lower than what anyone expected. People were talking of 5.5 and at best 5.3, and we end up at 5.1. So I think that's great for the system. As far and there is something in this budget for everyone. For each and every individual, there is something in this budget. I don't think we could have expected changes in the tax laws, because that, to my mind, would come after the elections in the final budget. So I don't think that was expected. One can always debate on what those changes can be in future. But growth for everyone, growth in infrastructure, target on housing, as you said, 3 crore houses have got done under the Rural House Program. Another 2 crore houses. The target is to do another 2 crore houses. And we must remember that housing creates a huge amount of multiplier effect in the economy. So it's not just the people who are employed in the housing sector, in the construction sector. It is also a multiple of industries, cement, steel, paint, power, and multiple other ancillary industries which are benefited when housing gets a benefit. So I think all in all, fabulous budget.
Okay, and I guess thank you very much for that, Mr. Mistry. Please stay on. The bond yields have now gone below 7.1 to 7.08. And I think as the matter, seeps in, that even the gross borrowing is far less than this year. This year it was, I think, 15.7. They're reducing it next year to 14.7, when $25 billion is likely to flow. So something like 2 lakh crore of foreign funds money is going to come in because of the index inclusion. So that's a very light load on the banks. That will mean that bond yields have still space to go down. And that's very positive for the corporate sector, because after all, you price it over a spread over the sovereign. So the sovereign yield falls, the cost of capital for corporates also falls. So I think this is actually a very pro. It's almost like a tax cut. I mean, it's almost like a rate cut. You don't get a rate cut from the Reserve Bank, but if the yield falls by 10 basis points, it's as good as a rate cut. So I would be very surprised if the banks did not show some kind of positivity.
For now, the reaction is coming on bond markets. Equity markets are absolutely flat. It's actually just turned into the green. And I was wondering, maybe the reaction on equities is also just interim. And it'll pick up. As Lata, you said, I mean, as the markets digest what has happened, right? And the favorable fiscal math, which should percolate through banks and, I mean, various other... And of course, Mr. Mistry said there is actually, we've only barely scratched the surface in terms of the big fiscal numbers, but there is a fair bit for... I think pretty much all sections. Madhu Khela is also with us, founder at MK Ventures. Madhu, great to have you with us here. Good afternoon. You heard the budget speech. What did you make of it? Status quo on taxation and those matters, but on the fiscal side seems to be very, very favorable.
Yeah, I think overall it's a fantastic budget. I would say that, given the election year, there was slight bit of nervousness that the government may deviate from the fiscal path, but not only they have adhered, but they have also given a clear direction for 2026 of adhering to 4.5% of the fiscal deficit. I think from a market perspective, this is the best possible outcome for this budget. Also, the next year borrowing number actually is slightly lower than the current year, which is again a very, very good news, I would say, from the market, from a market perspective. So I would say, given that it was an election year, and given that, there was all the reason to be a little bit more populist than what they have been, I think it's a very good news for the markets.
Oh, absolutely. This is actually a big signal to the market, right? And I think now the market is starting to pick up a bit The Nifty, the Sensex have moved into the green, although by a very small amount. But the glide path to fiscal consolidation is something that will continue, and I think the street is going to take that very, very positively. Madhu, the other big signal that has come through from this budget is that it is a through and through budget that's focusing on infrastructure and housing, right? We spoke about a big boost to housing, but even the FY25 Capex outlay is up about 11.1%. That's largely in line with expectations, but that's been the main focus area for the government. How are you looking at these two spaces, infra, Capex, as well as the housing sector?
I think it's a clear continuation. If you look at the first part of the finance minister's speech, we don't realize how much road has got traveled, whether we talk of affordable housing, whether we talk of infrastructure, whether we talk of job creation, loans being given to smaller entrepreneurs, Mudra Yojana. So, on a year-on-year basis, it is not looking, as impactful as when it is spoken for the last 10 years. So I think there's a clear-cut continuation. And though personally I may would have liked to see the Capex number a little bit higher than what they have done, but considering that it is an election year and there will not be much of the movement in the first 3-4 months of the year, this number is still good. But I think fantastic continuation for housing and infrastructure of the old policy, which again, I would say is a great news from a market perspective.
Yeah, actually the total Capex expenditure is 11.1 lakh crore compared to 10 lakh crore. So it's about an 11% increase in the Capex bill. I'm coming to you, Mr. Mistry, but the man who would be most delighted with the fiscal deficit cut would be Sajid Chinoy. Sajid, you were voting towards the 5.2%. You were the most optimistic, by the way, or if I want to say most conservative. She's done better than that. Your comments.
I think the budget needs a huge congratulation. The foundation of macroeconomic policy is to be counter-cyclical. And when the economy needed, we saw a big push over the last 3 years. Now growth is recovering, and it was really important for the fiscal to scale back for two reasons. One is what we're not seeing is that even as the center is consolidating this year, state deficits have widened. So the consolidated deficit is larger than is believed. And this was a year where, despite strong growth, public debt to GDP actually will inch up. And that tells you the deficits had to come down for peace times. I think the government has hit exactly the right chord. We need fiscal conservatism. And what's really important is that the capital expenditure was not compromised at the altar. So we've got both a combination of Capex being held steady and the deficit coming down. I'll be curious to see how much of the consolidation happens on the revenue side, where we had more buoyancy last year, how much will happen through asset sales, perhaps announced in the July budget, and how much happens through expenditure rationalization. But for now, I think this is just what the doctor ordered. And this is what, the focus now has to be macroeconomic stability, given the focus on growth the last few years.
The tax growth is seen at 11.9%, not even 12. Very legit,
very conservative. That's very conservative. I think there'd be upside to that. And what happened this year, taxes were budgeted conservatively so that the entire consolidation happened on the revenue side, not on the expenditure side. So,
I think it's more conservative than that, Sajid, because from what I see, and I haven't seen the actual budget table, I'm only going by the memory of the speech. She said that the total net tax receipts are 23.24. The budget estimate itself was 23.3. So looks like the revised estimate is not taken into cognizance the better performance this year as well. It looks like that, but I could be speaking too early. I'm only speaking by what I heard. If on this lower, conservatively estimated base, they are seeing a 11.9%, then the actual estimate is even more conservative. But I could be corrected. I could stand be corrected. She has not revised the number higher, though the actual performance of the first 10 months is much higher. So I could have,
And again, we have last installment yet to come. The last installment is yet to come.
Oh yes,
and
the
that could be
fourth
very,
quarter is
very
yet to come. So it could be much better. There's no doubt about that. Mr. Mistry, what do you see in the housing sector now? With overall interest rates itself, the sovereign borrowing so much cheaper, are you expecting rates to go down even without a rate cut? The effective borrowing cost coming down?
I think liquidity in the system should hopefully get better over a period of time. And as liquidity gets better, rates will certainly start coming down. But the buoyancy in the economy is so high the feel-good factor in the economy, the feel-good factor amongst people is so very, very high that a 0.25%, 0.5% difference in interest rates is not going to make a very material difference in terms of people's willingness to go and buy a house. I think that demand is strong. We've seen 60% growth for housing loans in the system on a base which is continuously increasing 16% year after year. And in my opinion, the growth prospects in the years ahead could be upwards of 15 to 20% over the next several years.
Okay. Now, this is something both Mr. Mistry and Sajid should hear. The assumption of dividend from the RBI and public sector banks is 1.5 lakh crore. That is the revision in the FY24. I'm still FY25, they're expecting the same amount of 1.5 lakh crore from RBI and PSU banks. Now, PSU banks are going to do very well. So I think the assumption of this non-tax revenue is a very big buffer. So overall total receipts, I think, is going to do much better than tax receipts. That's my guess, but I'm still waiting for the entire table. Madhu, you have to tell us something about stocks, yaar. Looking at this, are you a buyer? You're a buyer in what sectors? Public sector banks, just for your information, if you don't have the screen in front of you, they're all jumping higher because mark-to-market gains on the bond book is very much there. Your thoughts? Anything you would go out and bet on now, sector-wise? Madhu?
Yeah, I think, Lata, we continue to be very positive on the public sector banks. You have heard me many times, so I'll not repeat it again. We continue to be positive. We continue to be positive on the overall Capex space, specifically the EPC companies, which are yet to be discovered by the market. But Lata, the broader theme is that, what we spoke even last time, the broader theme is that it's like a sigh of relief for the overall market that government has adhered to fiscal consolidation even in a year of election. So that's, I think, the biggest message. So the party in the market continues, it's a buffet out here. You choose what you want to buy.
Absolutely. I think you're underlining an important point. Why would a government not go and be, a spend on budget? Because they're pretty confident politically. So that is also perhaps a message. Yes, Mr. Kanaba.
One thing which I didn't hear was anything on disinvestment, because given how the PSU shares have moved up, really I was hoping there would be some announcement to say this is what we are wanting now to do on disinvestment because the prices
I am sure it is there in the table. I'm sure it will be there in the table, but she's decided to keep it a short speech, so she hasn't told us, but it's quite possible that there is going to be a better divestment number. But let me get more guests in. Ramdev Agarwal, chairman and co-founder of Motilal Oswal Financial Services with us. Ramdev, first thoughts. What do you make of the budget?
Yeah, so I think the fiscal deficit coming at about 5.1 is a kind of a way beyond anybody's expectation.
Absolutely.
And that has its implications in the government borrowing, government expenditure growth. And so I think one has to see the details, but clearly it is positive for the bond markets. The rush for the bonds will be less, and hence the yield will fall, which market immediately signals that. And in any case, we are talking about globally interest rate drop kind of a situation on a 12-month basis. So maybe it is good for the equity markets as we go forward on a lower interest rate scenario.
Ramdev, hi, good afternoon. For banks and financial services, where people have made such big bets, so far has not really worked out. What does this mean? I mean, we were discussing this earlier, and you also briefly mentioned it. Cost of funding, cost of money perhaps reduces without actually seeing a rate cut.
Yeah, so let's see. I mean, right now, there's a lot of dichotomy in the sense that credit growth is 15-17%, your M3 growth is only 9%. So there is a lot of liquidity squeeze, and I'm sure the RBI is keeping it for keeping the inflation under control. Maybe you ask all the economists who are coming there why there is a gap and how does it get resolved. Good thing is that economy is speeding past at the rate of 7.5%, and that is a government has got that growth rate. So I don't think they want to put further fuel. Last year before, economy was coming out of COVID and all, so they really upfronted the capital expenditure. Now, since the economy has got its pace, I think they want to take a breather, and they want to allow the private sector to take up the things. But we'll see how exactly the interest rate scenario shapes up and how strongly the private sector responds in a given situation.
All right, well, markets are absolutely flat right now. So let's get you some more opinion coming through. Let's cut across to Shireen, who is joined by NK Singh and the former CEA, KV Subramanian. Shireen, over to you.
Well, guys, it really has taken Nirmala Sitharaman to show the country what an interim budget looks like, at least in terms of the duration of the speech, 57 minutes, and we're done. No one was expecting it. Joining me here, of course, are the two budget editors, veteran of many budgets, NK Singh, the chairperson of the 15th Finance Commission. Also with us, of course, KV Subramanian, former chief economic advisor and ED at the IMF. Mr. Singh, straight to you. Fiscal consolidation. Everyone was talking about 5.5, 5.4, 5.1. That's the number that Nirmala Sitharaman has delivered.
Quite extraordinary, isn't it, Shireen? Because considering that I was also the chairman of the Fiscal Responsibility Management Act, from the fiscal perspective, 0.7% expected consolidation, considering what GDP, 1 percentage point of GDP looks like, in absolute terms is a fairly daunting target. It's a clear signal on the government's continued commitment to a path of macroeconomic stability, fiscal consolidation, and I have no doubt that the debt numbers would also show this kind of a fiscal resolve and look in a southward direction, which is very important by way of signals to investors and to rating agencies on India's continued adherence, even in an election year, to a continued belief in the path of fiscal consolidation.
And I think that context is important because, Mr. Subramaniam, as we were speaking in the morning, the expectation was that there could be some big ideas, some big schemes like PM Kisan. In fact, they haven't even touched PM Kisan, which was the big expectation that they would hike the number from 6,000. That hasn't happened. I think there is a tinge of disappointment on the Capex number. You would agree because you were hoping for a higher number as well. At 11 lakh crore rupees, you know, that a little bit of a disappointment there?
So let me start by giving my initial big picture assessment. I have 3 words for the budget: JNV, judicious, non-populist, visionary.
JNV, judicious, non-populist and visionary. That's a nice acronym there.
And the reason I actually say that is in an election year, resisting the populist pressures. And I remember mentioning earlier as well, for instance, I never viewed the PM Kisan scheme as a populist scheme because of the economic benefits that it brought. So it is consistent with the theme of this government, which is actually focused on judicial macroeconomic management. As I said, it's non-populist. But there is one big idea which I'll come to just in a minute. Visionary because it has actually, done, there are 2 aspects to it. One, what has already worked very well, they're continuing on that rather than trying to change too much. And at the same time also laying out a vision. And now here's where I want to talk about the big idea that I have seen, which is the 1 lakh crore for innovation and research and development. As a researcher, that gladdens my heart enormously because, I think if India has to be a developed economy, and you would recall, Sharon, we had written a chapter on innovation in 2020. For the first time, India broke into the top 50 nations on innovation. I think that momentum needs to be carried forward. 1 lakh crore, 50-year loans, which is, almost interest-free, would I think be a big spur to R&D and innovation. On Capex, I actually do think that there is space. I do think that as long as the money goes into Capex and delivers growth, thereby making sure that the R minus G differential is negative, I am not someone who actually believes in the 3%, 3% fiscal deficit, 66%. That's from the Maastricht Treaty, which is a political document. So for me, I think given the demand for infrastructure, I would want to see a greater allocation for capital expenditure.
Mr. Singh, state Capex loans for FY25 to continue at 1.3 lakh crore rupees as well. There has been no change there. Your big takeaway as far as the announcements that have come in from the finance.
So let me put it this way. Subra used a different way of describing. I want to go back to something that she herself said, which is TCB trust, confidence, and the blessings. Things which have worked well, do not tinker with them unduly.
So why fix it if it ain't
Why
broke?
fix it if it isn't broken? It reinforces trust of government's continued path of what is said on fiscal and overall macroeconomic management. It exudes confidence, as I said at the beginning, because notwithstanding other kinds of populist pressures, it had stuck to delivering something which is responsible, credible, and embedded in India's long-term growth story. You talked about the states, Shireen. I think that's a very big change. If you look at the document which was put out by the Economic Division, it looks as though the states have begun to utilize this in a very purposive way. The utilization last year has been close to about 86, 90%, over 90%, which means that the states themselves have switched over their expenditure pattern into believing on the long-term multiplier growth. So from that point of view, continuing to trust the states in providing this additional thing will add to the long-term growth story, a decisive move towards Viksit Bharat.
A decisive move indeed. So just again, for the benefit of our viewers who might just be joining in, FY25 PM GKY outlay at 2.05 lakh crores, and for the MNREGA, the outlay for FY24 BE was 60,000 crores, and I think it is unchanged at that. And the PM Kisan, the FY25 MNREGA allocation is now increased to 86,000 crore rupees versus the BE of 60,000 crores. And as far as PM Kisan is concerned, the allocation remains unchanged at 60,000 crores. So broadly, what's the expectation now, given what has been delivered, on what we should expect from the full budget?
So I think the emphasis on Capex, and just to add to what Dr. Singh was saying, that given the utilization of the 50-year interest-free loans, you would recall 1.3 lakh crore had been provided for, and 98,000 crores of that has been utilized, which has resulted in a 47% increase in Capex by states. I think that's again, it builds back to the big theme I said, what has worked well, they've actually doubled down on it. So the 75,000 crore that was announced by the Honorable FM, I don't know what, again, that is interest-free loans for states. What category is it in? Is it a subset of the 1.3 lakh crore? I'm actually not clear. I hope, that'll get clarified in the press conference. And also the loans for tourism development to states. Again, that is part of the same theme, which is what has worked well. When states are being given incentives to do Capex, they're responding. And I think that is so overall the emphasis on Capex, growth multipliers, just a visionary, sort of move, I think, in the budget.
Mr. Singh, I'll just come back to you in 1 second. We've got the State Bank of India Chief Dinesh Khara joining us as well. Bank stocks are on a tear. Mr. Khara, many thanks for joining us here on CNBC-TV18. I think the big headline as far as the banks are concerned, as far as the financial sector is concerned, is that fiscal deficit number much ahead of what anybody was estimating, much ahead of what anybody was expecting. Your first takeaway from Nirmala Sitharaman's sixth budget?
I think when it comes to the fiscal prudence, that is something which is very clearly demonstrated. And on the top of it, the kind of tax revenues which are coming in. So actually the tax to GDP ratio has improved significantly. So I think this is a very, very promising budget in terms of the revenue going up, and also enabling the government to shore up the Capex also is something which is very encouraging. And I think it's actually quite a growth-oriented budget. Apart from that, I would also like to mention that the new solar program, which has been indicated in the budget, I'm sure it will go a long way in terms of not only showcasing the value of solar for individual households, but also it will also help in terms of conserving the fossil fuel and also improve the green index of the economy across the globe. So I think this is quite significant in terms of the country's commitment for achieving the zero carbonization kind of initiatives also. So I think it's quite a laudable budget. I would like to say like that.
Growth-oriented budget. But Ramdev, just to pick up on some of the themes that, for instance, we just heard on that rooftop solar scheme, which we'd heard from the Prime Minister, the budget is taking it forward. The concessions that the IFSC entities will now get beyond the earlier sunset. In terms from a market's perspective, the themes that you believe this budget will now take forward and markets will play on.
Yeah, I think the current the expansion of the market through retail of about 30-40 million customers coming every year, that itself is a revolution itself, and that is because of the digital infrastructure and conducive environment of the attitude of the regulators and all. That is happening. On top of it, now in this budget, they are saying that fiscal deficit will be significantly lower, and that should have a little more play in terms of lower interest rate. Globally also the interest rate environment is likely to be a little more easier. So I think all of it is going to play out, and economy is likely to grow at about 7.5%. So everything looks perfect, and this consolidation, fiscal consolidation is going to come as a boon for the markets.
You wanted to make a point.
I wanted to make 2 points, Shireen. First is to elaborate on a point that Dinesh just made. For the first time, the revenue numbers added together will exceed 18%. This is after a very long time. The revenue numbers both for the central government and for the state government look in the direction where we would like to be. This is not the end of the story, of course, because the finance minister has not touched the revenue rates. But in terms of the overall compliance effect and in terms of the kinds of structures which is already built, it has resulted in an improved tax GDP ratio, which we have been hoping for quite a long time. So that is on the revenue side we need to recognize that it has been a major contributor in realizing the daunting fiscal numbers. Second, I think I want to make a comment on this story of the push towards a green economy and towards India's adherence. Now, you see, this solar rooftop program, apart from the numbers and the allocations which have been made, has one very important policy thrust. One of the difficult tasks in terms not only from the viewpoint of the environment, but wearing the hat of the Finance Commission, which I chaired, the biggest elephant in the room of state finances is the state of the state electricity boards and the power distribution companies. Now this program of the solar rooftop, if it can spur, incentivize and push the repair of the state power distribution companies, it would be a deep structural reform for the Indian economy.
Well, that is an important point that you make, but let me toss it back across to Lata, Prashant and Sonia in the studio. Guys, over to you.
Okay, well, we now have some more assumptions of the budget, the macro assumptions, and I want to toss them to the economist, both K.V. Subramaniam and Sajid Chinoy, who's with us. Sajid, the assumption of nominal GDP growth is only 10.5. So it is, okay, we don't have, okay, we should get to Sajid in just a minute. So it's only 10.5. There were expectations that they could assume 11% growth, but only assuming a 10.5% growth in nominal GDP, still the tax growth assumption is only 11.9. That works out to about a 1.2%, 1.2 times tax buoyancy, which going by the performance of the current year where tax buoyancy is almost 1.4, this is an extremely conservative assumption. Another conservative assumption is that current year they have collected far more taxes in the first 10 months, and yet the revised number is not revised higher. It is revised lower by a few rupees only. It was 23.30 lakh crore. They've actually revised it down to 23.27 something. So the point is that the base can be revised higher. The actuals will be higher unless you assume a real fall in taxes in the fourth quarter, which is no one's base assumption. So if the revision is higher, then actually they're assuming even lower tax revenues, which explains perhaps this buoyancy in the bond market. They may not even borrow 14 lakh crore gross and 11 lakh crore net. So it seems. Mr. Khara, you think that there is a big Diwali waiting to happen in the bond market? You're going to have a lot of mark-to-market gains?
Yeah, it should be there, but I think apart from this, immediate reaction, I think on an ongoing basis also, it should actually moderate a little more, and which will actually push the interest rate regime also towards the lower side. So I think this is a welcome development, particularly for a developing economy like us. This means quite a lot.
Yep, I'm going to come back to all of you and to the former CEA on the macro numbers. Just hold on for a minute, gentlemen. We have to address the stock markets as well. And Prashant Khemka has joined us. Prashant, what do you make of what is an excellent macro budget, but no details in terms of, a transfer of incomes to the lower classes, which was what was one of the expectations? First, your overall comment.
No, thank you, Lata. I think overall it's a good budget, a budget of continuity. Over the last several budgets, particularly the last budget, was very well received by the market and investors at large. So continuing the policies of the prior budget is again a positive. There's no major negative in the budget. That's always a positive in itself. There were some concerns of it being a pre-election populist budget that hasn't played out. In fact, as you highlighted very much, the most significant positive of this budget is the budget fiscal deficit estimate of 5.1%. Yeah, so the concerns on populistic budget has been dispelled. At the same time, the capital expenditure outlay has been increased by double digits on back of a 33% jump last year. So within a span of 2 years, a 50% jump in capital outlay that goes a long way to towards building the capital stock or the infrastructure stock of the country. So for an interim budget, I think in 3 succinct points, I would say it's a budget of continuity with big positive in fiscal deficit, at the same time increasing the capital outlay.
All right.
Okay. I want to get a word on stock market. Sorry.
Yeah, sorry, please.
Ramdev, to you. See, there are two positives. The immediate positive for people like Mr. Dinesh Khara, the mark-to-market gains on bond holdings. So those kinds of stocks are doing well. But basically, if the government is going to pay only 7.07% now, 10 basis point fall in the 10-year benchmark paper, if the cost of capital is falling, won't it also mean fall in the cost of capital for corporates? So, do you see EPS gains, other kinds of gains for corporates? Your thoughts?
Yeah, so when the interest rate tends to go down and the global environment is also for softening of the interest rate, in that case, the attractiveness of the fixed income vis-a-vis equity markets, that equation further tilts in favor of equity markets. And then if the cost of borrowing for the corporates are lower, the operating leverage will tend to work, financial leverage will tend to work, and for a given growth at EBITDA level, I think the net profit growth will be a little higher. So higher profit growth, lower cost of money, so a higher multiple, I think that should be directionally positive for the equity markets.
By the way, another pack which should benefit is life insurance companies. I mean, in terms of the fallen yield, mark-to-market. I mean, I think life insurance, I'm not sure if there's a reaction or not, but that's another pack worth watching. Ramdeo, how much of this is priced in? That's the question, right? The government over the last so many years has opened up so many sectors. Railways has become pretty big now in terms of, they talked about converting 40,000 wagons into Vande Bharat. So 16 bogies a train, that's about 2,500 trains. I mean, if you go by what we have so far. But I think 1,000 trains, the government has already spoken about over the next couple of years. We have about 40 right now. So it's a big program. Maybe that's has been expanded. We'll have to check. Defense is another area there was some focus on. But the point is, markets price a lot of this ahead, right? So how much of all of this is in the price in that sense?
Yeah, so actually in this budget there's no specific provisions, at least not in the budget speech. In the papers there might be some further detail, but since the government has not expanded that big because of fiscal consolidation, there I think total budget expansion is only 5-6%. So in that situation, I think almost like a status quo kind of situation, that whatever happened last year in the name of Capex, I think Capex is more or less just about 1 lakh crore higher or something like that, from 12.5 lakh crores to 13.5 lakh crores, something like that. So I don't see, and for the 12.5 lakh crores, market is clearly aligned. So I don't see too much of surprises for the markets from that allocation point of view. So they are fully priced. I mean, fully into the budget speech per se has not given any surprise. So today is the day of surprise, and surprise has come from the fiscal deficit number for the 24-25. So I would think that it is more to do with the banks, particularly banks they have been underperforming for last 12 months or so. So I think this might be the turn of this. It's a very large sector. It's almost like the largest profit pool and almost 30% of the market. So if that turns around, you can imagine what it can do.
Yeah, absolutely. The top gains, if you take the CNX 100, Bank of India up 3%, Union Bank up 2.6%, Bank of Baroda up 2%, Canara Bank, Axis, HDFC Bank. I mean, it's the banks who are up and away because of this big gain they will have in their mark-to-market. What you say, Ramdev, about the infrastructure stocks is well taken. I think the market was running away with the expectations that there could be a 20% rise in the Capex bill. It is more like a 11% rise in the Capex bill. As Ramdev pointed out, it's more like 11.1 lakh crore, the central government's own expenditure. Plus, if you take the PSUs, it comes to about 13.5, as you pointed out. It's more or less in line with expectation, and therefore L&T has reduced its losses from, I think it was -4%, it's now come down to -2% in terms of the stock performance. But I think it's in the price that the Capex will benefit them.
I think also the railway stocks, right? All the railway stocks are under pressure right now and selling off quite a bit, IRFC, etc. The railway Capex as well was expected to perhaps be much higher, considering that the expenditure in railways has been the highest in year to date. But that didn't come through. It was slightly lower than expectations. So we're seeing a little bit of profit.
Another such a bumper. You had all those stocks running up 130%, 150%. So now I think it's the day of reckoning.
So this is the interim budget. July we'll get the full budget. Is there a chance we'll get wildly different numbers in July? Or what's the tradition, I mean, here? From the interim to the actual budget?
Historically, numbers have been quite consistent between the interim and the final budget.
Wow.
So you will probably get more of the same. I mean, you will get more granular detail, you will get specific tax cuts or announcements. My own sense is that if the market and general economy continues to perform as well as it has through till July, you probably can see a watershed budget again in July. I mean, I would think, given the first year, given where the economy is, given that even this budget seems to have been well accepted by the market. And I think, Lata, the point you made, most important, we are completely underestimating the tax collections. We think we will come up significantly higher, and that's really what the bond market is really elated about, because that higher collection effectively means much lower borrowing by the government.
Mr. Kanabar, you wanted to come in, please.
2 points. One is, as Ashok rightly mentioned, generally the final budget really it takes on from this. But given that, assume for a moment that this government is back in power, there will be the first budget they will present for the next 5 years. So I would see a lot of policy changes really come about, and new announcements, new policies, etc. And of course, a lot of tax things. Here we have seen nothing. But normally in any budget, you would see at least anywhere between 60 and 150 changes. So there is nothing here. So all that is for the shape of things to come. And Lata, you were mentioning, a small little point regarding those tax write-offs. Very interesting, nothing really earth-shattering. But for the government to come back and say that if there are old dues right up to 2009, of 25,000 rupees a year, we are unable to trace those people just carrying forward write-off, and then beyond 2009 to 2014, 10,000 rupees write-off. What we'll do is to clean government's books. Today, the amount due to what is collected is a very poor ratio. We'll just improve that ratio.
I think the focus on the budget is, it's a very business-like budget. That's to me comes as the word. It's a very business-like budget, telling us that I'm getting into a new era of next 5 years. And this next 5 years is going to be very different and very business-like.
Exactly. I think we should get the economists in. Dr. Singh and Dr. Subramanian have been waiting by patiently. First to you, Dr. Subramanian, the numbers, I mean, the assumption is only 10.5%. Okay, that is a conservative. And then you have a conservative tax assumption of 11.9%, which I think is conservative considering that this year we have done well. It's also conservative because this year's number has not been revised higher. If you look at the year-to-date available numbers, taxes have grown by about 14.5%, taking direct and indirect. And the assumption was 11. So they have not revised that higher. So we must expect higher taxes. I mean, your comments on all this, very conservative assumptions, you would say?
So Lata, I think this has been part of the trend. If you've seen the budgets in the previous years, starting from the COVID budget, it has been a case of under-promising and over-delivering. If you look at this year's, the target was 5.9% fiscal deficit, and what has been delivered is 5.8%. Now, to come to the assumptions, I actually think that the 10.5% growth number, nominal growth number itself is quite conservative. You know, the reason I say that is if you take real growth to be 7% and the GDP deflator to be 4%, which I think should be reasonable given, you know, the WPI, the huge increase 2 years back and then the negative territory last year. The median of 4% deflator I think is reasonable to expect. That translates into a nominal growth of 11.3%. Now, I want to make a small correction. The tax buoyancy that is assumed here for a tax growth of revenue growth of 11.9% is actually 1.13. I think that's very conservative given that if we look at the tax buoyancy has been 1.6 this year, and I've looked at, you know, over the last decade itself, it has been between 1.5 to 1.6. So a tax buoyancy of 1.2 is very reasonable to expect. So my sense is that once again, you know, we will have nominal growth about 11.3% and actual tax or overall revenue growth will be closer to 13.5%, assuming tax buoyancy of 1.2. So again, I think that 5.1% number that has been promised for FY25, my sense is that we may be actually seeing 5% or 4.9% come next year, unless there is a drastic change in the budget that is presented in July. If you just go by the numbers right now, I think it's again a case of under-promising and over-delivering, you know, on the fiscal front in the coming year as well.
Okay, and that's always a good thing, right, from a market standpoint as well. By the way, the market has not moved an inch. It is absolutely flat. I guess it's a very mature reaction because nobody expected too many things to come out of the interim budget. We have Sunita Reddy, who's also joining into the discussion. She's the MD of Apollo Hospitals. Sunita, welcome to the panel. I'll just come to you in a bit. We have Dr. Singh as well, who's been sitting by waiting patiently. Dr. Singh, your views, how would you rate this budget on a scale of 1 to 10? And what do you think is the biggest takeaway, apart from, of course, what we spoke about, which is fiscal profligacy?
Well, let me say this, that I don't want to get into this arithmetic of 1 to 10 business, but I rate this budget as an outstanding response, looking at the impending elections, staying away and steering away from a path of any kind of a suggestion of fiscal profligacy or making it populist, a great degree of confidence that the achievements already speak for themselves. You do not really have to add to that, and a great confidence of what they will do in July. I think few governments which go into an election in the next few months exude this kind of a confidence in the interim budget. This is the 14th interim budget from the inception of our budgetary process, and very few interim budgets have reflected this kind of a confidence. This is one. Second, I fully agree that this is a case of overperforming and under-promising. I think this has been done more than once. And I think that this is based again on the fact of an assurance of continuity in the growth story. I think that definitely both on the real GDP and on the deflator, there may be some room. And I think this is, if anything, really a conservative estimate of 10.5. It will definitely be better. On the revenue, looking at the performance in the last 1 or 2 years, definitely these buoyancy numbers are on the conservative side. As I said, that the GST is improving every month, and this is notwithstanding the fact that we have abstained from making deep rate rationalization, because in the case of GST, there is a very credible case that the GST rates need to be rationalized further, which will give a new fillip on the GST buoyancy numbers. So I fully agree that this is a case of under-promising in the expectation that it will be more than realized in the full budget is coming. This is yet another demonstration of the renewed confidence and the renewed expectations that the government has on returning to power and returning to office without a shadow of doubt.
Take your point, sir, that they don't even need the prop of unwarranted populist measures or giveaways. That confidence is demonstrated, and that political stability is something which the market will take home. At the moment, of course, in the grip of the FOMC announcement and a 1% fall or almost a 2% fall in US markets. So perhaps the reaction is slow to come now. There are more position adjustments. But I just want to make one more math before I come to you, Sunita Reddy. The tax to date, that is April to December tax collection, is higher by 14.3. And the assumption of the revised estimates is only 10.7. Now, one would assume that they will assume at least a 14% growth in the full year. They have not taken that assumption in the current year. They've taken a lower base. So that is why I think that there are two good reasons why this year the fiscal deficit is absolutely much lower than what even the numbers that the budget is reflecting at this point in time. They are going to make much more money on taxes. Well, with that, let me invite Sunita Reddy into the conversation. Ma'am, thank you very much for your patience and your first takeaway from the budget.
Thank you. I think all the economists on the panel have spoken about healthy economy, growth, and a very good movement in terms of fiscal deficit coming down from 5.6 to 5.1%. So let me talk about the source of growth, which is the focus on women and maternal health, which I think is very much needed. Cervical vaccination for women, for children from the age from 9 to 14. The fact that we are going to add more medical colleges and therefore get more women into the workforce. And I think overall the focus on women and childcare is something that is going to increase the number of women coming into the workforce. What has really excited us at Apollo is the amount, 1 lakh crore amount kept for research and innovation, which will hugely benefit research, clinical outcomes. And this is interest-free loans for a period of 50 years. So long-term guarantee of better clinical outcomes for the country. And I'm sure that, with this leverage, we will be able to do much more for the country as well as attract international patients to India.
Right. Okay. That point is well taken. A stable macro and unchanging tax regime, a stable tax regime should be very big attractions. But more importantly, I think it's the macros that usually attract outsiders. Mr. Khemka, what do you say for this? It looks like the cost of capital for corporates in general is likely to fall because the government borrowing rate yield has fallen. How do you approach the market now? Will banks be your favorite because they make money on their bond book? Or will it be across the board corporates because the cost of capital falls?
Certainly. So, see, the banks, particularly the PSU banks and those with bank bond portfolios, would benefit to the extent of the treasury gains. But otherwise, on the whole, there were not dramatically different expectations from the budget, given that it was budget of continuity. As we already talked about in case of infrastructure, despite a double-digit jump in the interim budget to the layout, still the infrastructure stocks aren't really reacting, positively. So it's the case of a company where if expectations are already very high, even if the company delivers on a high note and delivers what was expected, the stocks might not react positively. So the outcome in that the market is reflecting today is not surprising in that case. So not any particular sector that I would say which stands to materially benefit over and beyond was what was already factored in at this point, and all the eyes would now be on the July budget, Lata.
Would you be a BFSI bull now? I mean, if you were, I don't know if you were.
So we tend to structurally have much higher allocation to financials, particularly the banking and also the NBFCs, and we continue to be in that position at this time as well.
Dinesh Khara is listening to you. As you say, the banking sector already, most investors bullish on that segment. If we can get KV Subramaniam in again, Dr. Subramanian, like I've been saying, the assumption of tax collection for the current year is far lower than the demonstrated collection in the first 9 months. The first 9 months growth is 14.3. The budget is assuming a 10.7 growth. I mean, way lower than what has already been demonstrated. What is the usual practice? Will they revise higher in July?
So actually, that is what I expect. The 5.8% fiscal deficit number that the Honorable Finance Minister mentioned for this year, my sense is when the revised estimates will come, it'll be lower than that. So I think the actual fiscal consolidation path will be even stronger than what has been spoken in the numbers that the Honorable Finance Minister mentioned. I actually will mention, you would recall, Lata, that there was a break from the past that was done when off-balance sheet items would be hidden, there would be no transparency. From there, actually, to put everything upfront transparently and to be conservative in projections has been, these have been two key changes that have happened in the last few years, and this is a continuation of that, I think, which is an excellent, in general, I'm someone who actually likes governance to be one where you under-promise and over-deliver, and I think emerging out of COVID, that kind of fiscal math, I think, will give a lot of credibility, and hopefully the rating agencies are paying attention. I had written about it when I was in office as a CA. My successor has written about it as well. I think it is absolutely high time that the sovereign rating agencies look at actually their models and modify the rating. The current rating makes absolutely no sense, in my opinion, given how credibly the government has been delivering on the fiscal numbers.
Absolutely, and point taken, sir. By the way, just a quick look at the insurance companies. I think that is the only sort of pack of stocks which is moving on the back of what's been announced, and it's an indirect move. Apart from, of course, what's happening with banking and financial services. Look at SBI Life, look at ICICI Pru, look at HDFC Life. Most of these stocks are about 4-5% off the lows from before the budget speech started. Last time, remember, for insurance companies, there was a fair bit of negative and stocks sold off. This time there is no negative, and at the margin, perhaps, bond portfolios benefit. Mr. Dinesh Kumar Khara is still with us.
Just a word on the banks, Prashant. Of course, please go to Mr. Khara, but he would also like to hear. Now the bank Nifty itself is up 0.6, and the public sector banks are like absolutely going through the roof. UCO Bank is up 4.6, Union Bank 4.5, Bank of India 4.3, PNB 4.2, Central Bank 4.2, Canada nearly 4%, 3.7, Bank of Baroda 3%. I mean, it's like huge. State Bank, the mighty giant, which has already been rising, up 1.5%.
And not that they needed any particular help, because they've been doing so well over the last so many months now. Mr. Khara, you run a fairly sort of large insurance subsidiary, one of the largest insurance companies in the country. Is there a significant impact because of bond yields falling for insurers, life insurers as well?
Yeah, that will also impact them. But the fact of the matter is that what you mentioned about the last budget, there were some kind of restrictions which were imposed in terms of the tax relief for buying insurance beyond a particular threshold. So that was the reason why they had seen some kind of a dip. But this time, overall, when the investment market becomes positive, insurance has got a lot of income which flows through the investment portfolios. So that will certainly be of advantage to them. And in any case, all of them have got a reasonably decent ULIP portfolio. So in the ULIP, when it comes to this debt market instruments and falling interest rate will certainly be to their advantage. So that is the other reason why they can create more value for their insured customers.
Got it. All right. We have Nilesh Shah of Kotak who's joining us into this discussion now. Nilesh, I'll come to you in a bit. I have Sajid Chinoy who's also waiting by. So before we come to you, let me just get a final word in from Sajid. Sajid, there are no SOPs or big rural transfers that were announced this time around. So some of these FMCG stocks have come under a bit of pressure. But I guess it's good to see that there are no major populist measures despite it being a pre-election budget. What is your take on how things on the rural side are going to shape up? Because clearly this has been a pocket that has struggled at least for the last 4 to 5 months. Do you expect something big to come through in the main budget in July?
I was just saying earlier, I think the effectiveness of policy is to be counter-cyclical. And I think what today's budget has done is to demonstrate that counter-cyclicality is symmetrical. I think the need of the hour was to bring the deficits down, given where starting points were. The need of the hour was to ensure that capital expenditure was not withdrawn. So we've seen that maintained as a share of GDP. And of course, the welfare support will need to be targeted. Now, just a couple of quick clarifications. Lata had brought this up. If you look at gross tax to GDP, that has been budgeted much higher in the RE compared to the BE. But net taxes are lower because the transfer to the states is higher. So we have to be cognizant of that. Number one. And number two, for next year, the accounting is conservative. Nominal GDP of 10.5, one should expect a buoyancy of higher than 1.1. What that will do is let the deficit be consolidated more on the revenue side than the expenditure side. Currently, if you look at next year's B, most consolidation is on revenue expenditures, which from a quality of expenditure perspective is good. But if you do end up getting more tax buoyancy, and I've been harping on the asset sales for a long time. If in the July budget there's a focus on asset sales, then essentially you can get more consolidation on the revenue side and protect expenditures even further. But the accounting in general has been very conservative, and the need of the hour was just to double down on a fiscal consolidation path, which I think this budget has done very effectively without compromising capital expenditures.
All right. In fact, Nilesh Shah is also joining in. So let me get his thoughts in. Nilesh, as Sajid was saying, the need of the hour is to double down on fiscal consolidation. And that's pretty much what the government has done. You think it's a win-win situation from here on? And from a market standpoint, is there anything in the budget that can help the market see incremental gains?
So one, the fiscal consolidation path given by the budget is way ahead of the street. No one was expecting 5.1% fiscal deficit. Hopefully that will give confidence to the market. Second, on infrastructure allocation, there was fear that this year maybe the allocation will not be enhanced as much. 11.11 lakh crore on the revised estimate of 9.5 lakh crore is a 17% jump. That's fairly positive. And overall, clearly, our economy today faces two challenges. One, consumption at the bottom end of pyramid is not growing as fast as the top of the pyramid. And private sector Capex is not growing as fast as the government Capex. In this budget, at least there is supply side availability for private sector Capex. Net borrowing program aided by debt FPI flows will leave enough credit in the banking system and market for private Capex. And some of the steps announced on housing, fisheries, agriculture will hopefully support consumption at the bottom end of the pyramid. It will be fair to say that markets will be satisfied with the vote on account as it achieves the impossible trinity of creating inclusive growth, spending on infrastructure for future, and yet maintaining path of fiscal prudence.
Well, I must point out to Dr. Subramaniam, to Sajid, to Nilesh, you as well. The amount of bonds that are getting redeemed this year is 2.7 lakh crore. When I say this year, I mean FY25. So we were expecting a 2.7 lakh crore difference between gross and net borrowing. It's actually the difference is only about 1.2 lakh crore. What I understand is the entire compensation, GST compensation cess, is being used to redeem those bonds. So the difference between gross and net is not the assumed 2.7 lakh crore. It's much less. It's half of that. The other half is being taken from the compensation cess fund of the GST. That's just by way of information. We are getting it as we read the fine print. So net. Yeah, go ahead, Nilesh. Yeah.
But there is also possibility that there will be a switch between government and the RBI in the days to come. And that would reduce the net borrowing program probably. No, the
switches have been announced at 1 lakh crore. That is also there. But I think this is separate from that. And that explains why the borrowing is so attractive for the market that you're seeing the bond prices jump, because they are not going to borrow from the market, but adjust it from the compensation cess. Sunita Reddy, if the cost of capital falls, do you see that as an attraction for investment? Already, hospital chains and healthcare is a burgeoning sector. Do you think if the cost of capital falls, cost of money falls, that is a very big, injection, fuel injection for you all?
Yes, certainly. I think that especially at Apollo hospitals where we're looking at adding over 5,000 beds, the cost of capital is key and it will bring down the cost per bed, and therefore I think the whole country will benefit from this and our sector especially.
Yeah, Prashant Khemka is also with us. Prashant, afternoon. You know, I'm sure your team must also be feeding you information in terms of what they are doing as the speech comes through. Although it's an interim budget, it was short. Anything actionable which you've kind of discovered? I know you're not a very short-term kind of a sort of a person in that sense and how you operate the fund, but anything strikes you across sectors?
No, thanks Prashant for the question, but nothing really exciting necessarily from the budget that would prompt any action. I think we do spend time analyzing and understanding what the longer-term direction of the policy is, and what we've discussed so far is that it's a continuation of what was laid out last year and what has been the direction over the last 10 years. So there's that in itself is a big positive and would be very well taken by investors, particularly the global investors. Nothing in the budget that negatively surprises, and it's the message of continuity, which is a very good message.
Okay, Prashant, will you all be positive on the public sector stocks, the ones that already ran up a goodish bit, but is there any juice left in any of them?
So again, see, in a portfolio that is constructed with in a manner that doesn't necessarily trade in and out on a daily basis, 2-3% move is not something that would prompt action. As I was saying earlier, BFSI, which is the most significant beneficiary of the most significant positive of this budget, which is the fiscal deficit estimate coming at 5.1, that it's already is a very big, the largest allocation in our portfolio. Structurally, it has been the largest allocation in the portfolio. So in a way, we find ourselves in a position that we might have brought ourselves into if we weren't already there. So as a result, there's nothing that we believe at this time, at this point, on an incremental basis, we need to do.
So we are itching to go to the CII because they will be, best placed to say what they can do with the cheaper cost of capital. But Shireen, before I come to you, just one word from Nilesh Shah. Nilesh, does this make debt attractive? Debt was the stepchild, debt mutual fund was the stepchild of the previous budget. Now with bond prices rising, is there a macro-oriented positivity in debt funds?
So undoubtedly, there will be some catalyst, but we still need to deepen our bond market. It's a work in progress for long. And debt mutual fund to grow will also require some sort of support or level playing field. Today, if you invest in NPS and you are a salaried employee, you get 10% tax exemption. You get tax exemption up to 10% of your salary. At the highest slab, that's 3.9% incentive. In insurance, some tax concessions have gone, but below 2,50,000 rupees, there is a tax incentive. So debt market will need to be deepened, and debt mutual fund will require level playing field before investors actually start allocating to debt mutual fund.
Absolutely, and easing bond yields should also give some relief to borrowers, right? Home loans, personal loans, etc., which will eventually lead to higher disposable income for individuals. So that's a positive as well. Thank you for that. But let's toss it across to Shireen now. Shireen, back to you.
Well, thanks very much, guys. And, we were just talking about this with KV Subramanian. What does this mean now as far as the monetary policy is concerned? We've got one coming up in another few days. What kind of room does this make available to the MPC?
I think I would say ample. Primarily two considerations. One, of course, the global environment. And this is something that we discuss in the fund very regularly. If we look at the overall inflation trend, globally it's been coming down. And that will prompt monetary easing by several other central banks. I think the Fed and ECB should be this year, lowering interest rates. Together with the I think the very judicious policy mix that has been adopted in this budget with a strong fiscal consolidation, which I actually think will be stronger than what has been announced, given the very conservative assumptions, that leaves ample space for monetary policy to loosen. And my sense, I was hearing some of the discussion on the banking stocks expanding. My stance is that the yield curve with the risk-free yield curve coming down, and then that will mean lower cost of capital for a lot of borrowers, which should increase the supply of bank lending, and that might be the part that is actually getting reflected in the banking stock. But overall, I think just to reiterate what I said, JNV, which is, it's a judicious budget, it's a non-populist budget, and it's a visionary budget.
Well, the MPC will meet, so we will have to wait to see what is delivered. But the governor, in his conversation with me just a few days ago, made it very clear that there is no question of acting on a rate cut just at this point in time.
May not be immediately, but later.
Sure. Sunil Vachani, many thanks for joining us.
Thank you,
the budget came early for you because the cut in tariffs from 15% to 10% came a day ahead of the budget. But overall, on balance, what do you believe this does now in terms of consumption, in terms of demand?
Yeah, I think first talking about the steps which were announced yesterday, a day before the budget, I think the finance minister has sent a very clear signal that when it comes to manufacturing for the world, India is the place to be. And I think just to explain what these duty cuts actually mean to the industry, I think they're very significant because first what they do is that they improve the competitiveness of the Indian industry as far as manufacturing for the domestic market is concerned. Two, I think these duty cuts will also help expand the market for mobile phones because obviously these duty cuts will be passed on to the consumers. And I think they're quite significant. So I think definitely it'll give a huge boost to the mobile phone industry in terms of consumption. And we've seen that the market has not been really growing in the last couple of years. So I think this is a very positive step. And I would say this also helps in our global competitiveness because even though the philosophy, the policy is that we will not export our duties and taxes, but eventually when the custom duties are high, and the tier 2 and the tier 3 suppliers do not get a refund of these duties, we end up exporting these taxes and duties. So the lower duty structure would also mean better competitiveness in the global markets.
Well, yes, that certainly is the hope. But, in terms of private capex now, and there were, of course, allocations, etc., made for semiconductors and so on and so forth. But given where you find yourself in terms of demand visibility and now to push the export story, including the domestic story, capex at this point in time, would you need to put in any fresh money?
Yeah. So, Shireen, I think if you look at the Make in India policy, I would call it Make in India 1.0. I think it's been very, very successful in our industry, which is the ICT industry. And the numbers definitely speak for themselves. If you look at the total consumption of ICT products, which includes mobile phones, laptops, and all appliances and TVs, the total demand is about $130 billion. And it's probably for the first time that almost $100 billion worth of goods, of ICT goods, were manufactured in India. So I think now what is demand, you think? Is the domestic demand, $130 billion. Out of that, 100 billion was manufactured in India. The first level of manufacturing was done in India. And now I think what we need is a very strong and robust component ecosystem to make this sustainable. So I think as an industry and as a company, I think we would see now CapEx coming in into the component side of it, and also definitely the semiconductor. But of course, the first step would be the ATMP, and of course.
So what are we talking about? Ballpark capex numbers?
Are you talking about Dixon?
Dixon specifically.
Yeah. I think if you look at the last couple of years, it's been around 350 crores. This year we'll end up probably at around 500 crores. And I think next year will definitely depend on the projects, some of the projects that we're working on, which I won't be able to talk about right now. But I think if we leave that aside, I think the numbers will be similar, around 500 crores.
Well, on that note, we are going to have to listen in to what the Prime Minister is saying. He is addressing the media post the budget.
Inclusive और इनोवेटिव बजट है. इस बजट में कंटिन्यूटी का कॉन्फिडेंस है. ये बजट विकसित भारत के 4 स्तंभ युवा, गरीब, महिला और किसान सभी को एम्पावर करेगा। निर्मला जी का ये बजट देश के भविष्य के निर्माण का बजट है। इस बजट में 2047 के विकसित भारत की नींव को मजबूत करने की गारंटी है। मैं निर्मला जी और उनकी टीम को बहुत बहुत बधाई देता हूं। साथियों, इस बजट में युवा भारत की युवा आकांक्षाओं का, भारत की यंग एस्पिरेशंस का प्रतिबिंब है। बजट में 2 महत्वपूर्ण निर्णय ले गए हैं। रिसर्च और इनोवेशन पर 1 लाख करोड़ रुपए का फंड बनाने की घोषणा की गई है। बजट में स्टार्टअप्स को मिलने वाली टैक्स छूट के विस्तार का भी ऐलान किया गया है। साथियों, इस बजट में फिस्कल डेफिसिट को नियंत्रण में रखते हुए कैपिटल एक्सपेंडिचर को 11,11,111 करोड़ रुपए की ऐतिहासिक ऊंचाई दी गई है। अर्थशास्त्रियों की भाषा में कहें तो एक प्रकार से स्वीट स्पॉट है। इससे भारत में 21वीं सदी के आधुनिक इंफ्रास्ट्रक्चर के निर्माण के साथ ही युवाओं के लिए अनगिनत रोजगार के नए अवसर तैयार होंगे। बजट में वंदे भारत स्टैंडर्ड की 40,000 आधुनिक बोगियां बनाकर उन्हें सामान्य यात्री ट्रेनों में लगाने का ऐलान किया गया है। इससे देश के अलग अलग रेल रूट पर करोड़ों यात्रियों में आरामदायक यात्रा का अनुभव बढ़ेगा। साथियों, हम एक बड़ा लक्ष्य तय करते हैं, उसे प्राप्त करते हैं और फिर उससे भी बड़ा लक्ष्य अपने लिए तय करते हैं। गरीबों के लिए हमने गांवों और शहरों में 4 करोड़ से अधिक घर बनाए। अब हमने 2 करोड़ और नए घर बनाने का लक्ष्य रखा है। हमने 2 करोड़ महिलाओं को लखपति दीदी बनाने का लक्ष्य रखा था। अब इस लक्ष्य को बढ़ाकर 3 करोड़ लखपति दीदी बनाने का कर दिया गया है। आयुष्मान भारत योजना ने गरीबों की बहुत मदद की है। अब आंगनवाड़ी और आशा वर्कर, उन सबको इस योजना का लाभ मिलेगा। साथियों, इस बजट में गरीब और मध्यम वर्ग को एम्पावर करने, उनके लिए आय के नए अवसर बनाने पर भी बहुत जोर दिया गया है। रूफटॉप सोलर अभियान में 1 करोड़ परिवारों को सोलर रूफटॉप के माध्यम से मुफ्त बिजली प्राप्त होगी। इतना ही नहीं, सरकार को अतिरिक्त बिजली बेचकर लोगों को 15 से 20 हजार प्रति वर्ष की आय भी होगी और ये हर परिवार को होगी। साथियों, आज जिस इनकम टैक्स रेमिशन स्कीम की घोषणा की गई है, उससे मध्यम वर्ग के करीब 1 करोड़ लोगों को बड़ी राहत मिलेगी। पिछली सरकारों ने सामान्य मानवी के सिर पर दशकों से ये बहुत बड़ी तलवार लटका कर रखी थी। आज इस बजट में किसानों के लिए भी बहुत महत्वपूर्ण और बड़े निर्णय लिए गए हैं। नैनो डीएपी का उपयोग हो, पशुओं के लिए नई योजना हो, पीएम मत्स्य संपदा योजना का विस्तार हो और आत्मनिर्भर ऑयल सीड अभियान हो। इससे किसानों की आय बढ़ेगी और खर्च कम होगा। मैं एक बार फिर सभी देशवासियों को इस ऐतिहासिक बजट के लिए शुभकामनाएं देता हूं। बहुत बहुत धन्यवाद।
Well, that is the Prime Minister there on the budget speech that's been delivered by Nirmala Sitharaman, her 6th budget. We've got a packed house here at the CII. Gentlemen, I have to say, Nirmala Sitharaman, speaking to you at CII, had made it clear this is going to be a vote on account. She's delivered on that. Perhaps one of the first few finance ministers really sticking to the script on what a vote on account is and what a vote on account should be. Dinesh.
Yes, totally agree. As you said, it was on our event where she mentioned this. I think she has walked the talk. But equally so, she has given the direction in terms of what it's going to be. So I think that's great.
Oh, absolutely. She made it very clear we're coming back for the next 5 years. So that pitch was made. But Rajiv Memani, nothing for you to do today. No changes as far as direct or indirect taxes are concerned. But, you know, we were discussing the fiscal conservatism, and that was the point that you were making as well.
Yeah. So just to answer on your first point, I think it's this is a budget of a very confident government, both politically and economically. So no big softies announced and everything. Just a very good articulation of what they've achieved, of what they've done over the last 10 years. And then a broader vision of what they intend to do going forward. And even if I look at the macroeconomic thing, you know, all of us have been covering and seeing the tax growth. Direct tax growth of almost more than 20%, indirect tax growth of 11, actually GST growth of 11.5%. So everyone was estimating that the revenue, the tax growth this year will be higher than budgeted, and the expenditure will also be higher than the budgeted.
It's actually lower, a little bit lower.
Both of them are slightly lower. So my guess is when we eventually end up, you know, and the gross number and the net number. So I'm assuming they are doing a lot of refunds will be given in the next few months, and next year what they've assumed is that the gross tax revenues will be 11.5% growth and the net tax revenues will be 12% growth. So I mean, we are threading, but I think overall just a lot of conservatism, or I would say realism, built in the numbers. So there's enough cushion. We are living in a world which is volatile, uncertain. So there's enough cushion that's built in, and you know, they've always delivered in the last 3 years on the numbers that they've set. So this 5.8% to 5.1, my presumption is maybe lower than 5.8%, the budget, but coming down to 5.1%, I think that's really great.
Yeah, that was the point that KB Subramaniam was making as well, that the 5.8 number is likely to be lower as well. But this point about delivering on the numbers, and that's a valid comment coming in there from Rajiv Memani.
In fact, actually, you know, an aspect that I want to highlight is that, you know, even if you look at the previous vote on account, 2019, many people reckoned that the PM Kisan was a populist scheme. No, at that time I actually had said as well that it will bring in investment, and as I've said, research by Pulak Ghosh has demonstrated that. Yeah. So the theme that I want to say is that this government actually has shown judiciousness, you know, not profligacy in an election year, even previously. So this is consistent with its theme. It's not different at all compared to, and I think that reflects the overall, and having had the privilege to, to work very closely with both the Honorable Prime Minister and the Honorable Finance Minister, this reflects their themes. They actually think about, about running the economy well, and handing it over to the next government, which quite likely is going to be them, but is still handing the baton over in a very judicious manner. So the non-populist part and the judicious visionary. I will emphasize once again the R&D part. I think not too many people have paid that much attention, but I think that is a very important stem which ties in with the equivalent of the National Science Foundation that was actually announced in the 2019 budget, and I think steps have been taken to action that. When you put the two together, I think that can be a big big idea really in the budget. Innovation fund. Yes,
the innovation
1 lakh crore actually, and that's 50-year money. Industry 50 years is in fact, see, having some of my early research was on innovation, and gestation periods are long, so 50 years actually, but not 50 years. So that's a very large, very, very important step.
Yeah, CB?
No, I think, again, it's a prudent budget. I would think it's prudent because of the fiscal, what we talked about, the borrowing part of it. And I think that really puts in a lot of ease into both the real and the nominal interest rates. I would think that's going to be very critical. And I really like the texture of the spending in terms of, while we can talk about that capital expenditures, I mean, that could have been more.
We needed Vinayak back, because Vinayak had said here on CNBC-TV18 that 13.5 lakh crores will be the number, but of course it is lower than that. Still, if you look at it over the previous year as well, it is a significant growth.
It's a significant growth, number one. And number two, if you really look at the way it has been balanced over physical infrastructure and the social infrastructure, and really going into the rural housing and rural infrastructure, I think that's very, very critical and important.
Well, let me also invite Sanjeev Puri to join us here at our CII budget headquarters. Sanjeev, many thanks for joining us. As you take your seat, from a consumption point of view, from an FMCG perspective, what do you believe the budget has delivered? He's sitting. No time to sit. No time to sit.
That's as usual.
Hit the ground running.
So you see, consumption, of course, is an outcome of the manner in which the economy progresses. It's one facet of it. And what we have seen is consistency of vision and strategy, and really laying down the roadmap for execution. That's what we've seen in the budget, and the whole focus is on creating productive deployment of resources. And with all that is being done, for example, in certain agriculture sectors, in the housing sector, in the rural, and I'm sure the public Capex also will find its way, its fair share, more than its fair share in rural. There's also the support to the state that is coming in as far as infrastructure. That also has a footprint in rural. So I think all of that over time should enable or strengthen the virtuous cycle, so that we start getting uptick in consumption.
On consumption, Sanjeev, is there concern, because the expectation was that at least in the hands of the farmer, in the hands of the rural economy, that disposable income would perhaps be enhanced by way of additional sweeteners. That has not been the case. Even PM Kisan, which was widely expected to be enhanced, has not happened. So what does that mean then as far as volume growth is concerned? I mean, are we to contend with a volume growth of 2 to 4%? Is that what we should continue to budget in?
You see, look, as the economy progresses, it's a matter of time when consumption will pick up. So I do not see any reason to believe that is going to be the trend. It's a matter of time when it will pick up. See, whilst you may find that direct money may not have been specifically called out, but there are many avenues that will create productive utilization of the human capital in rural areas, that will pump in resources into the rural areas. I think once agriculture gets competitive, incomes will improve. The fact that you are having Lakpati Didis, that will have a footprint in agriculture. There are a lot of them actually can become village level entrepreneurs to support agriculture. Rural housing will create employment. So all of that is potential. Even when you expand the coverage of healthcare, ultimately the discretionary or the incomes in the rural end also go for health. If you kind of provide it in another fashion, then the rest of the money is available. So I think the deployment of resources in rural has been done in a more productive fashion, following the themes of the prior years. So over time, I'm sure it will lead to an uptick in consumption.
Yeah, you want to make
I just want to actually bring out, if we look at overall the rural economy, the fact that the spending on Manrega has declined, because we know very well Manrega is distressed, is demand based, and it's higher when it's distressed, when the rural economy is distressed. The fact that that is not happening is actually symptomatic of the fact that the rural economy is doing fine. One more aspect, and I think which is something that I think economists need to pay far more attention. I mentioned it earlier too. If you look at the participation rate of women, that has increased by almost 15 percentage points in the rural areas, and that is in a space of just 5 years, 15 percentage from about 25 something to 40. I think that's phenomenal, and the reason it has happened is because now women have more time from the productivity. They actually need less time to cook. They don't need to go as far to actually bring water, etc. And that is also reflective of the strength of the rural economy. So I think what the government is basically seeing is that there is no need for, as such, at this point in time, an additional impetus, given all the PM Awas Yojana, the Manrega, all these actually that are already working well.
Yeah, no, I just wanted to add 2 points to what has been discussed here. So if you look at this government, I think from even during COVID and post, their focus has been on making sure the spending is for productivity increase and inclusive growth. So rather than actually put money into the hands of the consumer, they have made sure that the consumer or the society becomes more productive, thereby getting more money. So if I look at the 2 other aspects to whatever we spoke about, one is the focus on MSMEs and especially their transition for both sustainability and also the making sure that they can transition properly into the digital growth. So if I look at these 4-5 pillars coming together, then I think going back to Sanjeev's point, it will have a trickle-down effect to both the rural and the economy to aid consumption.
If I could just add one more very important point, a very innovative step being taken, this whole facet of incentivizing reform at the state. Now, you see, that can unlock the potential of agriculture also. That's similarly, there are other reforms that in fact are awaiting last mile execution and very progressive reforms. So I think that also will unlock the potential of the economy, and that's, I think, a very, very positive development.
So I think one other area which we should really focus on, especially when it's coming with the global challenges and where we talk about SME and Indian manufacturing, is the focus on both technology and R&D and green manufacturing. And I think that's going to be very critical. And the fund type of when we are talking about a 50-year fund and encouraging even the small scale to transition to a green, I think that will be very, very critical for when we look at a very strong, robust, connect with the global supply chain.
No, so gentlemen, at the end of this now, let's talk about private capex. Sanjeev, let me start by asking you, what should we expect now in terms of private capex? We've been talking about incipient signs for a while now. Are we likely to see private capex picking up?
So I think it's already starting to pick up. The situation on the ground as far as domestic is concerned is fine. The global situation is very weak. So we have a little bit of a mixed bag, but capacity utilizations are up. I think all the macros favor investment because there is liquidity, balance sheets are good, health of financial sector is good, corporate income tax have been rationalized some time back. So I think all the enablers are in place and it is already starting to pick up. Things related to infrastructure, cement, chemicals, pharmaceuticals, the industry that I come from, multiple industries, we are seeing investment. Tourism is seeing a lot of investment from hotels. Real estate is seeing a lot of investments, right? So it is already starting to happen. It could have been faster if the global situation was better. But I think as we move ahead, this will only... I think the finance minister also today acknowledged that in the speech.
Every time you say that the capital outlay, the capex has been increased in the budget, but when will private sector? Today you had the acknowledgement of the private sector already started saying that.
But I would say even the strong capital markets. I mean, India has had the largest number of listings. And I think so the capital provision also that's required, the confidence that's required, a lot of that has gone to pare down debt. So I feel pretty confident that the investments will happen, and I think it will be led obviously in the existing sectors, but this entire energy transition that's happening, whether it's electrons or green electrons, green molecules, I think that's going to be the big bucks where the big...
But the 15% sunset extension, that hasn't come through, and we didn't hear her say anything on FAME specifically, though she did talk about electric mobility.
So I think that I would say amongst everything, if you have to pick up one thing which I was expecting, which would happen, hasn't happened. They have extended for sovereign wealth funds, they've extended for GIFT, IFSC and others. So all those things they have done. But I think this one is one area where we were all anticipating that they would do, given the lift that's happening in manufacturing, which is not happening.
Just I think 2 data points here. I wouldn't actually call the private capex, incipient, because if you look at the data, capex by corporates, and this was, the CA's report showed that it increased by 28% in, FY22,
23% in FY23, and 10% in the first half of the year. So, that is demonstrative of, Capex coming. And one more, with some caveat on the, on the deflator. If you look at the gross fixed capital formation to GDP in real terms, not in nominal terms, that is touching 35%, which is also a good sign. The other third indicator which I would actually mention is if you look at non-food credit, take personal loans out of that is increasing at 13%. And I think that is for sure would be going into private capital expenditure. My sense is that, whatever uncertainty there is, actually, corporates are waiting for the elections. And here I would want to mention, this is a sort of a clarion call to the corporates, to not look at the global situation that much. India has clearly shown, in a global economy which is struggling to grow at 2.5%, Indian economy is growing at 7%. So why should the corporates wait and watch for global economy? Go and, invest in the Capex now.
Go and invest in Capex now. Forget about what's happening in the world.
Yeah.
You've got enough working for you here as far as domestic demand is concerned. Rajiv Memani, from what we've heard now and the journey to June or July, whenever we see the final budget, what would the expectation be?
No, I think people will look at the March numbers. I think most of us feel they'll do better in March. Like the RE is always better than BE, and the RE2 is always better than the RE1. So I think the numbers will be better. So hopefully they'll have more fiscal space, and if they can address and work on some of the issues which don't have a budgetary impact but will have an impact in terms of ease of doing business, ease of paying taxes, which the government has done a great job of. I think that'll be great, and continue to invest in technology. One of the reasons why personal tax collections have gone down is the number of people who get SMSs between 15th March to 31st March saying that your ASI data or your data is showing X, your return is showing Y, do you want to revise your assessments, or have you fully filed this, are you fully, in end of December, end of March. And I think if they continue to do the analytics, continue to invest in technology behind it, they've assumed 12%, but I'm hoping that the actual revenue collection is even higher, giving them more space to extend and spend more on the Capex side.
Speaking of Capex, and again, ladies and gentlemen, our reporters are working the field, and this is a story that my colleague Sapna Das has just broken. Remember the OMC, the Capex for oil marketing companies of 30,000 crore rupees, it has been revised lower and it's been deferred to FY25. OMCs will raise funds after the 31st of March, so that's important as far as oil marketing companies are concerned. They will defer their fundraising plans to FY25. The interim budget has shifted the OMC Capex to FY25, and OMCs have sought a lower Capex of 15,368 crore rupees for FY24 versus the earlier budget aim of 30,000 crores. So that's as far as the oil marketing companies are concerned. And of course, lots of fine print coming in at this point in time. So gentlemen, on balance, before I let you go, CB, I'll start by asking you, sixth budget, she's created history, the second finance minister after Morarji Desai to do so. How would you sum up Nirmala Sitharaman's sixer?
So I think it was a good success. It crossed the stadium, if I can say in a way. But more seriously, I think I like the prudence, the prudent approach, no shocks, the entire feeling of a predictability, both in the taxation front. That was very important. And I really liked, and I repeat, going back, when you talk about manufacturing, Capex, what I like is the focus that India is doing today on, say, biomanufacturing, which came in, the focus on EVs, and therefore one sees newer avenues of the way we encourage green manufacturing, and that's going to be a very, very important trend which is coming out of the budget as I was looking at it. And I see definitely a lot now that would need to be done is to take it to the states, and I think lot of work there because the states have got a great opportunity being focused on agriculture, but it needs to be taken forward in a great way as far as states are concerned.
K.V. Subramaniam.
As I said in my first words, I'll repeat that, JNV, ambitious, non-populist, visionary, reflecting a confident, resurgent India.
Consistent, equitable, gives the right direction for the main budget.
Sanjeev?
I would go along with that, consistent and delivered on ticked all the boxes, and ticked all the important facets for building competitiveness, growth, also looked at inclusive growth, sustainability, and more importantly, again I will emphasize, has also touched upon the very important element of reform at the state. So all in all, an excellent budget.
Rajiv Memani, I'll give you the final say.
3 C's. Credible, consistent, confident.
3 C's. Credible, consistent, confident. We've got J and Y competing with the triple C.
J&B. But I must mention actually for the first time 3 C's are being used in a positive way.
That is true. That's true. Let's not go down that road. That's a whole other story. Gentlemen, appreciate you joining us here on CNBC-TV18 at the budget headquarters. And of course, we will look forward to seeing you again later through the day. But Sonia, the markets at this point in time slightly lower. The story on the Sensex.
It's actually very, very quiet. I think it's been a status quo budget largely, you'd have to say, and that's something that the market has taken in its stride and has perhaps moved on now. If you look at it, the Nifty is very, very flat. The mid-cap index is under a bit of pressure, down about 400 odd points. And, we have Rahul Arora joining in here, CEO of Nirmal Equity. So I do want to get him on board. But just for the people who've joined in late, the one thing that stands out as a big positive is the glide path to get the fiscal deficit below 4.5% by FY26. That will continue, and the government is firmly committed to that particular fiscal glide path. So that's the big positive. But apart from that, it seems to be largely a status quo budget, if you'd have to call it that. In fact, no rural SOPs, etc. The government has resisted the temptation to go populist in a pre-election budget, which is always a good thing. But Rahul is here with us. Rahul, your key takeaways, and from a stock angle, anything that stands out for you?
In a very tacit sort of way, this is kind of an election budget. I think if you look at Manrega going up from 60 to 86,000 crores, directly targeted at rural. So that will be a benefit, and I assume the rollouts will be very soon. And the interesting part is that 1 crore taxpayers that had disputes outstanding up to 25,000 rupees, they're gone. Just like that. So somewhere tacitly they have, it is a very soft touch at an election budget, if you will. And she's given the market what they wanted to hear on the fisc, right? So she's gone with 11% on Capex. She's spoken about 4.5% by FY26. She's ensured that the bond market will be stable. I think the yield should probably be hovering between 6.9 to 7.1% for the better part of the year. As this allows the RBI to cut rates, depending on what the Fed does. So I was just talking to my economist and I said, okay, what's the view now? So she thinks there is a good chance of a 50 basis point rate cut in the next fiscal. And I think the Fed may act in accordance as well. Maybe they'll take the first move. But I think she's given the market what they wanted to hear. She's tacitly hinted at an election. And I think she's kept the larger buzzwords of, green energy, EVs and so on and so forth also intact.
Homes.
Absolutely. 2 crore homes. And that will obviously benefit the affordable housing and anyone that's, doing affordable housing. Of course, you'll have to see how asset qualities and margins move. But, people immediately may get, excited about the Avases and the Aptuses and the Home First and the LIC housing finances of the world. But just on this, can you assume that all of these guys will grow at 20% plus? I don't know. But net, as she said in Hindi, in the next budget, she will lay the foundation for a Viksit Bharat. It'll be very interesting to see how they begin that journey. Because I think, Sonia, just in conclusion, I'd like to say, if you look at the last 10 years of this government, right, it's been a lot about regulation through DMON, GST, RERA, IBC, NCLT, bankruptcy, all of that. Then, of course, as any head of state, he had to contend with COVID. But then after COVID, he spent a lot of time balancing external sector, our relationships in the world. He's made a lot of trips across the world to secure relationships, right? And then the Ram Temple has opened. So I think if you look at from a macro standpoint, what could the next 5 years entail? It has to be about development. So I think the next budget could probably land up being the biggest and the best budget of this government that they have had since inception, because everything that he was voted to do in power over the last 10 years has been done. And there's nothing else to do but focus on the economy right now. So the big call to, ask is, can the Nifty potentially be at 50,000 by the time you go into the next election in 5 years, which is about a 15-16% compounded number, maybe a little higher than that. My sense is he's going to lay the foundation of that in July.
All right. Okay. Well put, Rahul. And we'll come back to you in just a bit. But there are so many individual names, right, which are moving, and the market is not doing very much. The Nifty Bank has, by the way, come off and given up pretty much all gains. And like we've seen over the last couple of days, it's not private banks, it's only public sector banks which are doing well. And why not? I mean, there is, of course, this mark-to-market and bond gains. But also, I mean, just look at third quarter earnings for PSU banks. There is potential for earnings upgrades. None of that for private sector banks, where there has been, at margin, more disappointments. So let's talk about some of these individual names. Aurobindo Pharma, for example, is one which is down sharply, I think recovered a little bit from the day's low. Sources say that its unit 4 facility is being inspected by the US FDA. Ekta is here with details. Ekta.
Thanks for that. Well, yes, sharp reaction which is coming for Aurobindo, and the rumor is that the street seems to be concerned about this Unit 4, which is currently getting inspected by the US FDA. Now, my sources have told me that the inspection did begin last week, and there are some concerns that maybe it could probably not be going as well as what was anticipated, though that is not confirmed by the company. Now, this Unit 4 is an important plant for the company. I'll come to that in just a bit. It does manufacture injectables as well as ophthalmics, and is a part of the Eugia Specialities arm, which is basically the injectables arm of Aurobindo. This particular Unit 4 was transferred to Eugia in 2021 and was after that called Eugia 3, which is basically Unit 3. Now, it has around 105 drugs which are approved from the facility and 31 drugs which are pending for approval. So it's one of the most important facilities for Aurobindo when it comes to fresh filings as well as current drug approvals. We don't know the outcome. The company has given a clarification to the exchanges. They did not comment on our story specifically, but they did say that the USFDA inspection of Eugia 3 has not been concluded yet. They will inform the exchanges about the outcome once the inspection is completed. So let's see what the outcome of the inspection is and what the remediation pattern, if any, would be undertaken by the company.
All right, Ekta, thanks a lot for that. Well, Godrej Consumer is really one of the stocks of the day, 10% higher on the back of strong Q3 numbers. Mangalam is here to give us the fine print. Mangalam, over to you.
Well, it's a record-setting, move that we've seen in Godrej Consumer. Double-digit gains is what we're seeing. Impressive domestic results. And it's not that the street was caught off guard, because the company had given the third quarter update as well. But what really stood out this time around was a solid operational performance, sharp margin expansion. And of course, overall, year on year, the revenue optically looked lower because of the LATAM currency impact itself. So the revenue at 36,660 crores is actually better than street expectations. EBITDA 841 crores. The street was working with a number of just around 799 crores, and the net profit was above expectations as well. Domestic organic volume grew 5% versus a poll of 4 to 5%. And if you include the Raymond Consumer Care brands that the company acquired, volume growth was 12%, which again is best in class. Importantly, the company continued to spend on ads. And if you just take a look at the geographies and categories as well, in the key category, home care grew about 5%, but the two big positives are the new launches that the company has done. In household insecticides, a business which has not been doing too well for them, the company said they're on track and they've launched Goodnight Agarbatti in January. Now, earlier, in the insecticide space itself, a lot of the unorganized market share was going to the Agarbatti space, and in which Godrej launching this tells you that there is an increased total addressable market of close to 1,200 crores, in which they do have exclusivity to that molecule itself. They've also launched a disruptive Fab liquid detergent in South India at a disruptive price of close to around 99 rupees per litre. So all these things are doing well for Godrej Consumer, and the stock is understandably excited in today's trading session.
Okay, well, that's a big move, 7.5% on Godrej Consumer. Mangalam, thanks for that. Oil marketing companies' capital infusion of 30,000 crores has been revised lower, and there's also been a deferral to FY25. Sapna is here with more. This is the investment plan that they had. Sapna, over to you.
Yeah. So what we have understood is that basically it's oil marketing companies who had sought a lower amount. However, in the current financial itself, so 30,000 crores was the original allocation. Some around 15,000 crores had been sought. But, the companies have taken this call. So basically looking at their own cash flow projections and their own requirements, it now stands deferred to FY25. So that's why the Capex has been shifted, the OMC Capex has been shifted from this year to next year. And the company companies will now go ahead with their fundraising plans only after March 31. So this is like basically to put these numbers into context and the timeline into context, because the numbers do look it's almost a 50. They are almost lower by 50%. So the question does arise that was this a cut on by the government, or the industry feedback has come? So it's a combination of both, looking at the overall numbers and plus the requirements of the OMCs. Two aspects here: A, lower capex of 15,368 odd crores, and plus deferral in the fundraising plans, because this interim budget has now given that capex allocation shifted into FY25.
Okay, thanks a lot for that, Sapna. Appreciate it. Well, fertilizer stocks are also on our radar. The stocks have actually slipped after the government has cut fertilizer subsidy by 13%. Sonal is here to decode the budget impact. Sonal, over to you.
Thank you so much for that. Well, there was an expectation that fertilizer subsidy would be cut because gas prices, remember, were lower. So that would have largely impacted the urea subsidy. But this time around, the NBS subsidy has seen a sharper cut. So the fertilizer subsidy overall is cut by 13%, after which urea subsidy is cut by 7.5%, while the complex or the NBS subsidy is cut by 25%. So IIFL has put out a note where they say that the NBS subsidy, it would be relevant to the likes of Coromandel International and other complex players, while the urea subsidy would be relevant for the likes of Chambal fertilizers. That one is down lesser than what we saw for complex fertilizers. Though the cut in allocation looks steep for NBS, and that is something which could impact the stocks like Coromandel International because of lower subsidy, they say that this could be taken negatively for such players. But they are saying that the government has been revising allocation through supplementary grants in a particular season, the Rabi season that is, if they think there is a shortfall. However, they see a downward revision this year amid the noise of increase in raw material prices dashes the hopes of industry, where they are expecting any upward revision to fertilizer subsidy as well. So all in all, the cut has been steeper than what the street was working with, and that's why the stocks which are in the complex fertilizer space, the likes of Chambal fertilizers, they could be negatively impacted.
All right, Sonal, thanks very much for that. Rahul is still with us. Rahul, I'm sure you've been in touch with your team as well. Anything they've picked up sectorally, bunch of stocks where there is an impact one way or the other, based on what we've heard?
No, I think it's going to be a lot PSU oriented is my sense. I think, of course, I'm sure you've discussed this 3 railway corridors as well and the impact, and we were discussing this in the morning as well. I think probably the best way to play any sort of infrastructure, Prashant, in India is cement. I think it's because of the cash flows. And I think those kind of cash flows can fund the capex themselves. I heard you talk about public sector banks. I think one of life's biggest mysteries for me is that SBI is an 18% ROE company, Bank of Baroda is a 16% ROE company, and they go at just 1.1. I'm not saying you need to give it an ICICI Bank kind of multiple, but do you need the discount to be so large? I mean, intuitively, if I reverse the question and ask you, is there one corporate that you can name today that's going to go bust in the next 1 year or 2 years? The situation is very different from where it was a decade back. Retail slippages thoda idhar-udhar ho jayega, by and large. Net interest margins maybe for a quarter or two. But logically, SBI and Bank of Baroda, according to me, should be at least 50% higher than where they are today. The entire PSU basket, whether it's railways, defense, across the board, have re-rated multiple times over. So I think that's probably something that one can look at. And lastly, I think because as Sonia was talking about affordable housing, I think the way to probably play it could potentially be through stocks like Kajaria. I think that's we like the tile segment, and I think there we do have an upside of almost 30-35% on that name. I think reasonable to assume a 14-15% kind of volume growth if these numbers are to come through. So I think probably that's one way to play home improvement in addition to the housing finance companies we spoke about. So I think those will probably be specific to this, but can these immediately react? I don't think so. It's just an announcement. It has to be implemented and then it will come into the numbers. But Prashant, I've always learned one thing after seeing cycles: focus on cash flows, focus on dividend yields, focus on growth. It'll stand you in good stead. I mean, your colleague was just talking about OMCs right now. I don't know how many people are aware. It's the only sector in India and probably one of the only sectors in the world where the free cash flow yield and the dividend yield is higher than the price to earnings multiple. Logically, the OMC should be multi-baggers from here theoretically, but obviously there's an overhang. But there's a lot to play. I mean, just because the Nifty is at 22,000 to say that, there's nothing to buy. I don't buy that.
Okay. By the way, the big story still remains what happened with Paytm, right? I mean, after that 20% circuit down. So I'm going to come to you in a bit. My colleague Ritu is standing by. In case you missed out on the news, you want to know what's the latest over there, Ritu is here to explain what this means, the impact, and what brokerages have said. There have been a slew of downgrades that have come in post this news flow, Ritu.
That's right. First, just to distinguish between the app you and I would be using on a daily basis, the Paytm app, which is owned by 197 Communications, that is unaffected, untouched. The restrictions have come in very much on Paytm Payment Bank, and with the restrictions that have come in from RBI, it is pretty much, the business is kind of shut, at least as of now. What RBI has said that Paytm Payment Bank must stop onboarding any new customers with immediate effect, and this action has been taken because of material supervisory concerns and repeated non-compliance with RBI directions over the last several months. In fact, since 2022, as we understand. So no further deposits, no credit transactions, no top-ups for wallets, no use of fast tags after the end of February, end of this month. By 15th March, of course, all the other, actions have to be wound up, whether it is, the nodal accounts of 197 Communication and Paytm Payment Services to be terminated and so on. But, in summary, no banking services can be offered. Now, why this action, stringent action on Paytm? And I'll take you back to March of 2022, which is when first RBI, stopped the bank from onboarding new customers because of deficiencies in their IT systems, in their KYC, risk monitoring, and so on and so forth. And now this circular does not even have a sunset clause where it says if you're able to satisfy certain compliance conditions, RBI will revoke this embargo. That is not mentioned at all. So, we'll have to see how this pans out. As far as the impact on customers is concerned, you can withdraw your balances or utilize your balance in your wallet, which as per our sources is not more than 3,000 to 4,000 crores of total deposits that is sitting with Paytm Payment Bank. As far as brokerages are concerned, you have the likes of Bernstein saying that, for all practical purposes, this ends the operations of Paytm Payments Bank, adds to the already heavy regulatory overhang, but there will be no immediate impact to the UPI payment business, which is the bulk of the business. Macquarie believes that these lapses are quite material, and it is indirectly revoking the PPI license of Paytm by imposing these restrictions. Jefferies believes that the direct impact can be 20 to 30% of EBITDA, which, by the way, Paytm has also said that the annual EBITDA impact will be about 300 to 500 crores because of these restrictions.
Okay, Ritu, thanks a lot for that. So that is the big headline of the day. Let's do one thing. Let's take a quick commercial break, but don't go anywhere. We'll continue with our coverage on the union budget, big takeaways, as well as the market. Market has clearly moved on. It's absolutely flat. The mid-cap index is under a bit of pressure, but the bank nifty has recovered in a big way. Lots of PSU banks are doing pretty well. Don't go anywhere. We'll come back in a bit.
capital fall. Welcome back. You're with us here on CNBC-TV18. We are starting closing bell half an hour early, and we've got the entire closing bell team here. Rima, hi. Surabhi, hi. Nigel, welcome back.
Long haul, Prashant? Good going.
But it's, this is the definition of the interim budget, right? I mean, it's actually just, in a way, a hand-holding exercise until, of course, the big one comes through in the month of July. Markets have been very well-behaved, no real big volatility. They've been quiet. I mean, 15 points lower as we speak on the Nifty, 21,710. We'll discuss more market stocks, etc. in a bit here. But let me go straight across to Mr. Amitabh Kant, who's the G20 Sherpa and the former CEO of Niti Aayog, who's joining us with his reaction to the budget and what we've heard. Mr. Kant, good afternoon. Great to have you with us here, sir. Prashant this side. Your first thoughts, first impressions of what you've heard. Many were thinking that this is going to be, a full-fledged kind of a budget. I think that view was in the minority. Most thought this will be interim, and we've got exactly that. So I have two questions. One, do you think what we've heard will be continued through in the big budget in July, or will we see big changes? And two, what are your first thoughts on what we've heard? Capital expenditure, spending growth, and of course, the fiscal deficit and the consolidation we've seen there. Go on, sir.
So, Prashant, I think it's a budget by a government which is demonstrating confidence that it will come back. And also it's a budget by a government which believes in fiscal discipline. So I was quite impressed by the fact that it's talking about fiscal deficit at 5.1% and then bringing it down, laying down a clear roadmap for 4.5% the subsequent year. And I think that's really critical because that would really mean that government will borrow less, interest rates should come down, the private sector should be able to access resources at a much lower rate of interest. We should be able to kickstart private sector investment in a much bigger way. I think those are all critical messages to be sent out, and I think this demonstrates a huge level of fiscal discipline. Also, the fact that from 2013-14, from 1%, it has taken the Capex to about 3.3%, and now this year to 3.4%. Now, government has done its bit in terms of Capex spend, and my view on that is that we should now crowd in private sector investment into infrastructure as well. And that will be important because if you want productive efficiency in the economy, if you want good private-public partnership, if you want good operation, good design, good execution, you need to bring in private sector in a big way, and that's important in all sectors, including, we need private sector to come in into areas like railways also. And I think that, to my mind, is a clear signal that government wants private sector to come in over a longer period of time. And the third is this clear messaging that which to my mind is very important, that if you want the country to grow at rapid rates, then you need the states to improve. And a lot of reforms now need to be driven by the states. So if you're putting in 75,000 crores saying that this is linked to reforms, and you are going to give money for infrastructure creation if you carry out reforms, it's a big message, and it's all milestone based. So it's incentivizing the states to push for reforms. And if the eastern part of India, which is talked about, if the eastern part of India can really avail of the 75,000 crores, they will really kickstart infrastructure in a big way. And I think the focus on the 1 lakh crore for R&D for the private sector, that will be critical. But, one point I want to make, which is about yesterday, the finance ministry reducing the duties on a vast range of items which are used for mobiles. Mobile manufacturing, a range of items, the duty rates have been brought down yesterday. And I think that'll make India a very, very competitive in the global value chain, which is to make India a leading manufacturing nation for export of mobiles from India. And that is a good move, to my mind. And So these are my few comments.
Mr. Kant, good afternoon, sir. Great to have you on the program. Just to press that point a little further, Atmanirbharta and manufacturing, make in India. I was speaking to, a couple of members of industry and the tax circles, and I think one surprise was that while the sunset dates on several, tax exemptions were increased, for instance, GIFT City, etc., that all-important 15% concessional tax rate for new manufacturing units, that was actually not increased. So I just want your perspective on how we should read this. There's a lot of talk about Viksit Bharat, becoming a developed economy by 2047, but no specific new announcements or no big mention on manufacturing. I mean, schemes like PLI, etc. So is it just because it was a vote on account and maybe we'll hear more big bang stuff in July? Is that how we should interpret this?
Yeah, I think you should wait for a long-term budget. This is an interim budget, and I think it's truly an interim budget. It's not the main budget, so I think you should wait for that. And that's why not too many giveaways in terms of taxes, etc. I think we should wait for the longer budget. Don't have too many, don't pin your too much hopes on too many policy announcements at this stage. This is a very good interim budget. This is an outstanding interim budget to my mind.
Absolutely, and very crisp, very short. And on a side note, we were planning for almost a 2-hour budget speech, so we had to change up as well. Mr. Kant,
so the speech was truly designed for an interim budget, and absolutely. I think it's done. It's hit all the right notes for an interim budget, and I think. You should wait. You don't expect too much. Wait for the long-term budget. But I think as an interim budget, it's an outstanding budget.
And I absolutely agree with you. Mr. Kant, just to one quick point on divestment. It's come up again and again. I mean, I think the RE has been revised to 30,000 and the budgeted estimate is 50. This is as good a time as any. I mean, maybe the best time for the government to collect funds. And many in the market believe, well, will we see that in a big way? And why not in the first year of the new term? Yeah.
No, I totally agree that I'm a great believer that if the country's productive efficiency has to improve, if India has to grow at higher rates, and incidentally, my view on this, on the nominal growth rates, is that it's very moderate rates have been put into the interim budget, and probably we'll end up faring better. But my view on this is very clear, and I've been a long-term advocate of the fact, as the Prime Minister has been advocating that it's not the government's job to be in businesses, except a few areas. Government should disinvest, government should do asset monetization in a bigger way. All this helps to bring in private sector, and I'm a believer that private sector brings in greater productive efficiency in the long run. In the interim period of the last 3 to 4 years, government has created a lot of infrastructure, but it should, in a transparent, competitive manner, put it out for private sector to bid and do operation and maintenance. A lot of more disinvestment should kick in in the coming years, and that will bring in, because the government will get the right values. This is the best time to get the right values. Otherwise, and it'll bring in great efficiency into the economy. In long term, if you have to look at a 2047 vision, it's very clear that private sector will have to play a far more critical role.
Mr. Kant, while in the speech there was a focus on women, youth and farmers, etc., and even the rural economy, but we haven't seen big measures which can boost consumption, particularly at the rural end, which some people in the market find surprising considering we are in an election year. How would you respond to that?
Well, I'm not a great believer in a consumer-led growth story. I'm a great believer in infrastructure-led growth story. It takes a little more time, but in the long run, that's what drives the economy. over a long, if you're looking at 2047, if you want to get into 9 to 10% growth rates over a long period of time. I mean, many countries of the world have done it. There are challenges in the global economy. But the only way for India to grow on a sustained basis is infrastructure, infrastructure, and infrastructure. And that will create rural demand. I mean, if you're going to create roads in rural areas, if you're going to put electric buses in rural areas, if you're going to provide rural houses, which the budget does, if you're going to do a rural solar rooftop, if you're going to provide piped water connection in rural areas, if you're going to do toilets in rural areas, whom will it benefit? It will benefit the rural population. It should all be infrastructure led, which will create great consumer demand in due course. And that is how the country will grow in the long run. So don't get into this bogey of creating artificial consumer demand.
That's put forward forcefully, as always. Mr. Kant, just one last question from my side. You wear so many hats. You're so involved with the industry on so many in different industries, really. Will we see, private participation in infrastructure spending picking up in a big way? I mean, can you see telltale signs of that? Your thoughts, sir?
I think post-election, you will see, after this government comes back, you will see a lot of more private sector. Private sector investment is going to kick in a big way. I mean, you can see all clear signals of that. And capacity utilization is at a good high. Interest rates will come down. There's good consumer demand. I only wish that the global scenario also improves, and you will see long-term private sector investment. We should put out many more roads, many more projects, well-structured, fully de-risked. After taking all approvals, we should put those SPVs out into the markets for private sector to bid for, and you will see good demand. I mean, move over to a lot of more well-structured, well-cleared, well-defined infrastructure projects, and you will see very good bidding for those projects.
Okay. Mr. Kant, so then to wrap it up with final thoughts, I'm going back to what the finance minister was saying in the speech when she outlined some of the key priority pillars for this government, for Prime Minister Modi, where she mentioned Garib, Mahila, Yuva, and the Annadata. As we look over to the concept of the Viksit Bharat, and she said that the next 5 years will be years of unprecedented growth, and that fills us with a lot of hope. How do you think the priorities will shift, if at all?
No, I've worked with this government for a very long time, and this government actually believes in inclusive growth. It believes in cutting across all segments. It doesn't, when you're implementing schemes on ground, and I did the aspirational district program with this government, it doesn't look at any particular section, it doesn't look at caste, it doesn't look at religion, it doesn't look at creed. It believes in saturating a scheme at the grassroots level. So if you're saturating all schemes at grassroots level, you're making a dent on poverty. And that's why, the multidimensional poverty index shows that 25 million people, such a vast segment of 25 crore people have got lifted above poverty line, because you've actually taken all the government schemes and actually saturated them at grassroots level. So the level of implementation has just been enormous. I mean, it's been phenomenal level of execution on ground at the grassroots level of all the central schemes, and that has made a difference to the lives of citizens. And I think we should continue to just do that. Have schemes which get fully implemented. And the power of digitization has really helped us. The benefit of that has been just enormous in terms of better quality implementation on ground, because the leakages have been very few now. I mean, there's just no leakage. Everything is reaching the actual beneficiary.
All right, Mr. Kant, we appreciate you joining in here on CNBC-TV18 and giving us your first thoughts on the budget. Looking forward to chatting up with you rather soon.
Thank you.
Well, for the markets as we speak, we are trading at more or less the flat line, mildly move into the green. That's because a couple of big names have moved up. Reliance Industries has moved to the high point of the day, so I think you'd like to get that stock back up. It moved into the green, now it's recovered a little bit, and that's a big weight in there. Adani Enterprises as well, smashing it out of the park. In the last few minutes, you have Adani Enterprises that's just taken off. That's moved to the high point of the day, and Adani Ports as well is seeing a bit of a pep up as we speak. Shiv Puri, founder and managing director at TVF Capital Advisors, joins us on the show. Hi Shiv, good afternoon. Thanks so much for joining in. Well, I wanted your first thoughts on the budget. At the start of today, people were saying, let's see if there is something for the rural economy to pep it up. And also the eye was on Capex spends. What is your first thoughts on what we've heard?
I think the first thoughts are really fiscal discipline, which we have seen across, heard from other people across the board. I mean, it's interesting, we're moving from a glide path of, say, 5.7, 5.8% to 5.1. And the US fiscal deficit's at 6.4. The roles have reversed. And I think this is a budget that really shows fiscal discipline at the moment. That's, India is going to be hopefully in the JP Morgan bond index by July. That's the expectation. So if you've got fiscal discipline, you've got the ability to attract foreign capital into the bond market, that is going to bode well for domestic, for liquidity and for the currency. So I think the macro is in really good shape. The other highlight, of course, is on Capex. While the number's up, I think about 11%, it's actually up a lot over a 2-year basis. Maybe 45 or 50% is the number for the last 2 years. So there's a major focus out there, and of course that has ripple down effects onto many industries in India. Rural spend is up, but I think that is much needed, and we all know the rural economy is a little soft. So perhaps something a little bit more happening on that front would be nice to see, I guess, when the full budget is presented in July.
No, absolutely. Shiv, hi, good afternoon. And every time I see you, you look younger. I don't know what the secret is. Congratulations.
Thank you.
Shiv, I don't think we have spoken after that entire HDFC Bank sort of saga played out post-earnings. Financials is your number one bet. Has been for years. How do you read this this entire thing on HDFC Bank? And do you think this is a great opportunity for those who want to buy?
Well, first, let's start with the industry. It's quite clear that we have a liquidity crunch in the market. I think the shortfall is something to the order of 45 to 50,000 crores. So therefore, deposits the rates have gone up. And at the same time, you're going to see so the NIM pressure is therefore clearly there. At the same time, you saw over-provisioning during COVID, and so NPAs were artificially low. And that is going to course correct and come to a more normal cycle. So I think temporarily, you're seeing across banks slight NIM pressure, as well as slight increase in NPAs. Banks are in pristine condition. It's just the base was really low. So that's applicable to all banks. I think specifically with HDFC, the issue has been around the merger. Pre-merger, there was the expectation that the earnings would be accretive, that the NIMs would remain steady. But it seems that along the way, once they've actually presented the combined company, there's been pressure on both those fronts. I don't think that is something that is structural. I think it's an issue that will get fixed over the next few quarters.
So Shiv, you will be looking to buy into HDFC Bank at current reckoning, at current valuations?
Not making any recommendation on any specific stocks, but what I would say is with respect to HDFC, as you see, that there is pressure which is very cyclical in nature. There is no structural issue that is there, I think, with the bank long term.
Shiv, would you bet on more interest rate cuts by the Reserve Bank of India based on what we've seen, the lower gross borrowing by the government, the decline that we've seen in the 10-year bond yield? And if that's the case, do interest rate sensitives, apart from financials, which you spoke about, do they make an attractive bet? I want to know what has changed for you in the last 24 hours with this budget.
Well, I think along with the budget, also you're seeing global interest rates that are softening. That's happening over the last couple of months. I mean, the Fed didn't cut rates yesterday, but if you look at the 1-year rate, the 3 and the 5-year, even the 10-year treasuries, they've all softened quite a bit. The 10-year has gone from 5 to 4%. So clearly the trajectory is for lower interest rates globally. Inflation is coming down globally. In India, we're seeing the same thing. Inflation is within the band. My sense is that the RBI is a little cautious on what's happened on certain segments of retail lending, as well as that inflation is still on people's mind, front and center. But as that recedes, I think interest rates are only going to head lower. And like you said, with the fiscal deficit at 5.1% of GDP, if we do manage to get to that number, that's an incredibly strong fiscal position to be in for monetary policy to ease.
So, Shiv, then sort of putting all these things together, really let's talk about, the overall positioning for anybody who's interested in Indian equities, right? We are heading into an election year, and as we were just discussing earlier, we'll probably get a better sense of bigger policy announcements or anything more big bang, in the second half of the year. So therefore, given where we are, where valuations are, the banking, issues that we've already discussed, what should the stance be, or what would your stance be on equities in the foreseeable future?
I think the backdrop for equities continues to be very constructive. And there are a few reasons for that. One, of course, is overall economic growth. You're seeing that to be pretty strong. India will this year undoubtedly be, again, the largest, the fastest growing large economy in the world. Therefore, you see it'll attract not only domestic capital, which you're seeing, but also foreign capital. Second, there is a push on very productive uses of capital within India, which is infrastructure and Capex. Third, you are sensing from entrepreneurs increased optimism in doing Capex and expanding capacity in the manufacturing sector. And fourth, you're seeing consumption increase, whether it's in domestic travel, healthcare, and other services. So when you put all of that together, along with the fact that you will see global interest rates declining and likely, therefore, a weaker dollar, that bodes very well for the Indian equity market. So I continue to remain constructive.
Shiv, just to wrap it up, you like financials. I remember you like hospitals as a space. Just what else as themes?
Financials, you have healthcare services, which is hospitals, consumer, which is not only just FMCG, but consumer services. I think these are the three big areas. Manufacturing selectively, I'm not sold on the China plus one just yet. There are some pockets of beneficiaries, but there are some really incredible manufacturing companies in India. I would say these will be the few themes that we look at this year.
Shiv, you mentioned consumer services. I have to ask you if you could elaborate. I mean, are you talking things like hospitality, tourism, or what exactly do you mean by consumer services?
Yeah, hospitality and tourism as one area. I mean, I think what you're seeing happen is also quite interesting, where, you saw this over the last decade, where a lot of people in China, when they got wealth of a certain level, started traveling the world and spending money across the world. And that's changed in the last couple of years. But as India hits that phase of GDP per capita, this might be a little different. We might choose to travel within the country and spend a lot of money within the country. And therefore, I think the benefit of that to the whole sector can be very structural in nature.
Shiv, we leave the conversation here for now. Thank you very much for joining in. We will slip into a very short break on that note. On the other side, we'll be joined by Nilesh Shah of Envision Capital and Dharmesh Mehta of Capital Advisors to talk more about the markets. Shireen will also be joining in with a whole host of guests.
Welcome back. Adani Enterprises is surging after reporting their numbers. The net profit is more than doubled to 1,800 crore, which compares with a number a little less than 900 crore rupees. So 1,888 on the bottom line. The EBITDA too for the company has gone up 98% and the stock has moved up. Reliance Industries too is seeing some buying. On the way down, L&T continues to struggle. I think since the start of the day, or at least in the last 2 hours, it's been the top Nifty loser. Following yesterday's 4% cut, we've got another 2.5% gone in that. Nilesh Shah, MD and CEO of Envision Capital, is now with us on the show. Nilesh, before we get to the budget and the nitty-gritties, Paytm, just the way the RBI has relentlessly come after. I'm not sure if that's the right way to put it, but it's just that it's been, a lot of bad news for Paytm, and now particularly this latest one on Payments Bank. How would you read it?
Yeah, so I think the series of bad news just doesn't seem to be stopping for Paytm. I think the regulatory challenges probably started maybe more than a year back, and it's been kind of being ongoing there very periodically. And I think this time it's probably the most damning one. I wouldn't say it's an existential crisis, but it surely is a very big challenge. And it could take some time for them to kind of overcome this challenge.
So if someone holds Paytm shares, if there is an possibility of an existential crisis, would you recommend selling out if they get a chance?
See, I think the stock price is surely going to head a lot lower, undoubtedly. And the reason for that is because these are growth stocks. They're not even growth stocks. Expectation are these are hyper growth stocks. I think right now hyper growth is ruled out. Growth is ruled out for the foreseeable future. You're not talking about whether you are in a position to even hold your base, hold your core. I think that's really where the big challenge or the big vulnerability is. So I think the case to own it for now doesn't seem to be there. And I think it's the first day of the bad news for them. This is something which could linger for some more time. And in this kind of a situation, even if it takes, say, another month for them to sort it out, a month can be a very long period of time.
3:30, by the way, there is a conference call.
Yes.
And we'll hear from maybe Vijay Sharma, Madhur, etc. will be on the call and they will take questions. Wonder if that can do anything to, because the RBI circular is so damning in that sense,
yes,
right? I don't know how much they can do. But instances like this, I mean, I'm going off a tangent also bring up the old topic of circuits, right? But there's no exit. I mean, if you, as Rima was saying, if you own shares, you just wait and try at 9:15 in the morning. And but as you said, perhaps could head a lot lower.
Yeah, I think that's a challenge, and I think unless a stock is not in the futures and options stock thing, I mean, once it hits the circuit, lower circuit, you obviously don't have the exit, and that's the challenge. Maybe if this situation happened maybe a year or two later when it was part of F&O or maybe part of an index, then this situation would not have been there. But that's what it is, and I think this whole circuit system, whether we like it or not, it's been working well for our capital markets, our equity markets. I've seen this for the last 10, 20 years, and I think, it has its positive, it has its own set of challenges.
Nilesh, okay, let's talk about the one set of stocks that's cooling off finally a little bit, and I'm talking about PSUs now. I don't know what to call it. I mean, after a 200% rally, you get a 2%, 3% cool off. How would you approach this part of the market, considering that this interim budget is out of the way, but then you have July, and then you need to see what comes forward in terms of more policy continuity. Even today, there was some mention on railways, but no major Capex numbers thrown around. What would you do with PSUs now? So
I think for now, the valuations surely look challenging. They definitely look overstretched. Okay, leave aside the PSU banks because this budget is done a lot of good to them. The whole path to fiscal consolidation, a significantly lower fiscal deficit estimate for next year, obviously is cooling off bond yields and driving up bond prices, which is good for PSU banks. But outside of PSU banks, I think most PSUs right now look very richly valued. They have gone up quite significantly. They're getting priced in like growth stocks, and they no longer represent the kind of value which they represented 2 or 3 years ago. So I clearly think for now, while there might be a structural change to them and they might end up becoming much bigger enterprises in the next 5 to 10 years, but I think a cool-off is warranted in them. I'm not saying a very severe sell-off, but a cool-off is surely warranted, and maybe wait for better or lower prices to get into them.
Just on that, a follow-up. Now, once the election is out of the way, one is waiting to see if this, divestment really starts taking off. And Prashant was also discussing this with our earlier guest, that this is as good a time as ever, right? And I don't know why they waited, but they have, maybe elections. As and when those OFSs start hitting the market, could it really puncture the whole PSU move? I mean, is that a risk that we're kind of walking towards? Or do you think the market will treat the divestment and digest it quite well, actually?
Yeah, I think it will treat it well. See, I clearly think right now, I mean, 2 years back or 3 years back, some of these OFSs were being looked upon as basically capital raising exercises. Today, the government's finances are not as constrained, and so they are not getting perceived as capital raising exercises. If at all, mutual funds or some of the institutional investors who are getting fresh liquidity, they're looking at this as an opportunity to be able to park that liquidity and buy into them. So the whole negative narrative has now become actually a positive narrative. And a more free float, which means the chances of getting into market indices, having a higher weight. So that's now so that's how the narrative is now playing out.
OFS is no longer bad.
It's no longer a bad word. It's no longer a bad word.
You know, it's a stark contrast to what we should see a few years back, right? And OFS is announced, you have LIC coming and picking up bulk of that, and after some time the stock starts trickling down. Case in point being in NHPC. You know, they didn't, government took some money off the table. In the last 10 days or so, the stock is up, what, 15-20% or even more than that. So the entire perception actually has changed. And also, if you look at, you know, companies like Concor, IDBI, yes, we're waiting for the divestment to take place, but the stock price is still at the 52-week high. That's tell you the kind of interest in some of these names. Just thought we'll put that point on board.
And one more thing, I think is also some of these PSUs are in sectors which have become the flavor of the season. So 2, 3, 4 years back, nobody wanted to buy energy stocks. Renewables was pretty much unheard of. Today, when you talk of names like NHPC or some of the other PSUs, they are part of emerging themes. Whether you call this as energy transition or renewables or any of the other, they've become clearly the flavor of the season, and that's also what is attracting investor interest into them. And they seem to be meaningful players. I mean, whether you look at NTPC and you speak to most investors, they really don't talk about it as now a thermal energy company. They are talking more about their initiatives of investing in renewables, the green energy, and all of that. Versus that 2, 3 years back, they were supposed to be, you know, guys who are probably spoiling the environment.
Indeed, and I pity those who said touch me not, you know, for some of these companies because you missed on the biggest rally possibly. Now, let's just hold that thought. You know, let's get in Dharmesh Mehta as well, Managing Director and CEO at DAM Capital, who joins us on the show. Hi Dharmesh, good to speak to you. Would like to speak to you more often though, but on the big day you join us. Tell us, what are your first thoughts with regard to Budget 2024 that was just announced?
Hi Nigel and the team, how are you? Well, this was a non-event in that sense because nobody expected the budget to finish so fast. Everybody was, you know, surprised, including you guys, saying what happened suddenly. That we had the shortest interim budget ever. And I think so, you know, the economy is in such a good shape. You don't need to tinker around too much any which way. So I think it was the most ideal time for a short budget and not to tinker on anything, especially in the interim, and wait for the elections to get over and then come with the full and final budget.
Okay. Dharmesh, hi, good afternoon. You know, you look at a lot of the deal action, the primary market action so carefully. And that's what I want to ask you about, because we heard some noises today and we'll probably hear more on a lot of the sunrise sectors, right? AI, digital and things like that. As more announcements come through, what is that entire ecosystem telling you in terms of primary market offerings? What are the valuation, what's the valuation chatter like? And what should we prepare for in terms of new paper hitting the market as we roll on beyond the election season?
I would say it is still too early for these companies to hit the primary markets. There will be more private markets which will absorb this paper first. And as you see in the tech companies also, you know, people took a lot of time to understand those tech companies, and even now they're struggling with the valuation. So I believe the sunrise sector is still a little far away for the primary market as of today.
Dharmesh, hi, afternoon. What about, you know, stake sales in PSU companies, government companies? Will we see a big year for that in 2024?
I would say it's the ideal time because there is enough demand in the market, and as I always say, supply brings demand, not the other way around. So if they intend to sell them, I think so those, you know, sales will go like hotcake. But, you know, if I'm a government, I will also see what is the need of the money as of today. And these companies are going to do actually better day by day the way things are shaping up. So there's no rush to sell because you've seen the valuations have actually moved up substantially in the last few years. So they'll take their time to sell it down rather than just sell it because, you know, markets are hot. I believe these companies are on a good growth path and the government will be very sensible to sell them not too early.
And I think the sense also is that some of these valuations are not fleeting, right? I mean, there's no, maybe in some cases there is, so I can't say that for all. but smaller, but very few. Generally, the larger ones, I mean, there is a growth story. The company is actually doing well. Actually, we were just discussing earlier with someone that if you look at the third quarter earnings season, it's the public sector banks which will perhaps see earnings upgrades. Private banks have all at the margin, disappointed a little bit here and there. Dharmesh, how's the market itself looking to you from here?
I think so. It's a tough market if you look at, because valuations are not cheap. But if I look at the large caps, they're actually very reasonable. In Nifty P is not at the highest or we've seen, or it's crazy. I think the valuations are reasonable on the large caps. And I believe that's what's going to drive the FI flows this year. And they actually come to India because they missed out India last year, as you know. And the China story is not looking great as we speak. There's no other option to actually come to India. So, and the large caps are reasonably valued, not overvalued. So you'll see a lot of FDI and FI money still coming in this country over a period of 1 year. Small caps have the exuberance, but those are high risk stocks which people know when they invest in. But are we looking at some catastrophe, or you're talking about some large scale sell-off? It doesn't look like as of now. Even in the mid-cap segments, you'll have your regular correction of 20-25%, or not some real scare, which generally we see sometimes.
Dharmesh, there are 8 strategic divestments which are currently in various stages. You've got IDBI Bank, BEML, Shipping Corp, and then some others, on the unlisted side like Ferro Scrap Nigam. And the government is also yet to seek expressions of interest for Container Corp. So amongst these, which ones do you think will move the fastest?
I'd not like to name few of them, but I'm very sure if government is out to sell strategically, many of them will see very strong interest and in fact good valuations. I believe there's a lot of value to be made in PSU stocks. So as and when people buy strategically versus financially, there's humongous amount of money which you make strategically. So I won't be surprised if you see a lot of strategic investors coming in those names.
By the way,
few months will be difficult as we see the banks or something, but the rest of them actually should get very strong interest.
Since we're on the subject of PSU stocks, I thought I'll pick out some names. I mean, look at the way these moves are happening in an ITDC, Indian Tourism Development Corporation, surging 17% right now. There's a Hoodco, which is up about 15-odd%. Then, of course, there are banks, the PSU banks, which are up and about. There's also NBCC, which is having a great afternoon, about 5% higher. So while some of the PSUs on the railway side are seeing a little bit of a cool off, and you've got new names surging on the screen really there, up and away. So Dharmesh, we were discussing primary market action. You said that, okay, wait up on the new sunrise themes of AI, etc., or maybe even energy transition. So, what else? Again, going back to that question, will it be sort of any specific theme? Are you seeing a lot of buzz? For instance, we've had some defense companies come out. We've had the whole EMS space very, very active. What do you see on the horizon in terms of primary market action as we go on through the year, in the foreseeable future at least?
See, we were the first in the EMS space, and we still continue. That space is going to see a lot more demand coming in. The kind of growth opportunity which you see in EMS, you're going to attract a lot of capital. So I think so the EMS party continues for some more time. Valuations may correct a little bit, but I think that there's going to be strong interest in EMS and manufacturing as a whole. So I think so that strategy still continues. And you're going to see a lot of consumer companies also coming in slowly, and you're going to get some kind of, IPOs coming in that space. Anything related to defense, railways is hot cake right now. So those are getting sold like, very, very fast. But I think so you're going to see a lot of paper coming in the market. So the only thing is there's infinite amount of paper coming to the market. So one has to be a little cautious on this. But if they're priced rightly, I think so there is enough demand today. If you look at mutual funds, they're getting almost 17,000 crores SIP every month. So they have to invest that money, and they are the ones who are actually going to slowly load up those IPOs which come at a reasonable valuation.
Okay, all right, Dharmesh, good to hear that. On that optimistic and positive note, we'll thank you for joining in and giving us your first thoughts in terms of the budget as well as the outlook on market. Wishing you a good rest of the day. But let's get in Timsy now. She joins us to give us more details on the new direct tax scheme. Timsy?
Well, as you rightly mentioned, the new direct tax scheme, something that found a special mention in PM's address, and Finance Minister Nirmala Sitharaman also said categorically about. It's about stability, tax stability and ease of doing business. That's what the aim is, and this time the idea is to give benefit to the taxpayers who've been paying taxes, and that's what the government said, that they will withdraw old, petty, non-verified, non-reconciled or disputed outstanding direct tax demands. Now, this was at the lowest strata, and about 1 crore taxpayers, that's what they are looking to address to. 1 crore taxpayers will get the benefit. Now, what will be the withdrawals for? The withdrawal of demand will be for up to 25,000 rupees pertaining to the period of up to FY 2009-10. And when it comes to the other demand withdrawal, up to 10,000 rupees for financial year 2010-11 till 2014-15. The scheme to benefit around 1 crore taxpayers. And yes, the aim being scheme to ensure ease of living and ease of doing business. So 1 crore taxpayers will get this boost, will get this benefit of non-verified, non-reconciled and disputed demands, outstanding direct tax demands. That's what the government is looking at addressing.
Okay, all right, Timsy, thank you very much for that. Guys, anybody has any outstanding tax issues with the tax? Some good news, huh? If they're old legacy ones, I'll go and check up just in case.
Actually, I know, but I think it doesn't fall in the
that
up
threshold.
to that. It's
pre-2010. Basically, if the tax dispute was 25,000 up to 25,000.
10 to 14 is
And then
10,000.
Your disputes must be around 2, 3, 4, 5 lakhs. Nothing less than that.
Pre-2010. No, it is a real pain. So in that sense, it's a great move, right? It's a big irritant. It causes anxiety and all kinds of things. So withdrawing some of this, really good.
And absolutely. I mean, it's pretty much in line with the ease of living kind of thing. So I think it's good. It's good that at least some of these small old irritants, which are large in number, I think are just kind of eliminated. I think it's a big positive.
I just wanted to get your thoughts in again on this Capex number. So one of the big drivers for the PSU stocks was this large Capex spend of 35% last year. And that drove very strong order wins. The order book was swelling, and therefore the market was giving that expected earnings multiple, earnings growth and multiple going ahead. Now, if that growth rate of spend is going to come down from 35% to 11%, will that not slow down the kind of order wins we're going to see for some of these, PSU companies, and therefore will it hurt the earnings expectations?
So I think, Rima, it's got a bit to do with the change in reality. 3-4 years back, nobody wanted to actually invest in infrastructure or lend to infrastructure projects. That was pretty much a no-go area, and therefore clearly it had to be the government which had to step in as the anchor investor, as the anchor lender, and come in and therefore allocate more money from the budget to the sector. In the last 3 to 4 years, infrastructure now has become no longer the kind of no-go area, and now private capital is willing to come in, either through equity investment or through lending. Also, you're going to see foreign capital come in as the Indian bonds become part of the indices, all of that. So now probably the government is trying to pass on the baton to the private sector, saying is that, look, you guys can now come in and lend or invest. And therefore, the need for government to kind of now incrementally allocate that much capital may not be there. Keep in mind, 11% still is a very large number on a base which has probably gone more than 2x over the last 4 years. And secondly, as a percentage of GDP, that number still is 3.4% versus 3.3%. That 3.4% is like at a historic high. I mean, many years back, that number was sub 2%. So these numbers are huge. So to that extent, I think it's still kind of, it's par for the course.
On the point of Capex, sorry, just to come in over here, since Rima asked that question, we had Mr. Amitabh Kant on the show just a while back, and he was, constantly making that point that it's time for the crowding in of the private sector.
Yes.
Haven't seen too much sign of that as yet. Your thoughts on this, Nilesh?
So private Capex, yes, it's still not yet picking up. Though, of course, the government had reduced the tax rate for manufacturing companies maybe 5 years back so that they could basically be incentivized to come in and expand capacity and set up new units. That has probably not happened to the extent that it may have been desired, but that's because the capacity utilization was trending below long-term averages. Now that is trending above long-term averages. So I think probably, again, it might just be a matter of a few months before the private sector comes in with its own share of Capex. But otherwise, still that doesn't happen. I still think the economy will have to rest on this pillar of public sector capex.
Okay, all right, Nilesh, we appreciate you coming down to the studio. Thanks so much for joining in this afternoon.
Thank
Looking
you.
forward to chatting up with you rather soon. Well, for the time being, let's turn our attention to one of the top sectors of the day, the PSU banking names. They're doing very, very well after the government stuck to fiscal prudence, and that's what's caused bond yields to cool off as well, which in turn will result in treasury gains to PSU banks. Abhishek joins us to fill us in with a quick analysis on that. Abhishek?
As you mentioned, fiscal prudence will aid in GSEC yields to soften. I've been speaking to various analyst estimates and to certain treasurers as well. They say that there are good chances of, bond yield or 10-year GSEC cooling off by anywhere between 50 to 100 basis points is what the range they have given me. So this positive news for PSU banks that FY24 budget deficit target is at 5.8% of GDP, FY25 is at 5.1% of GDP, and target is to reduce the fiscal deficit to below 4.5% by FY26. So prudent fiscal targets will aid in decline of 10-year GSEC yields as well. Gross and net market borrowing through securities for FY25 is estimated at rupees 14.1 lakh crore and rupees 11.75 lakh crore respectively. Now FY24 RE gross market borrowings is at rupees 15.43 lakh crore. So lower borrowings can also aid in bond yields softening down, and this can help the treasury profits of the entire PSU pack who have GSEC securities in their portfolio, especially in the available for sale category. Back to you.
All right, Abhishek, thanks very much for that. I mean, that's a sector which is doing well, and the PSU Nifty PSU Bank Index is it was up 3. It sold off about 1.5%. It's back up, I think, almost a full 3%, 2.93 or so. We'll take a very quick commercial break here. On the other side, we'll be joined by Sandeep Bhatia of Macquarie. Devin Choksi will also be with us, and Gautam Trivedi of Napian Capital will come in as well. Focus stays, of course, markets last 40 minutes of trade coming up.
Welcome back. Well, we're going through budget announcements one by one, and now let's look at railways. It seems the Capex announcements have kind of disappointed the street a little bit, or perhaps it's just become an excuse for profit-taking after a surge of 200, 300, 350% on a lot of these stocks. We have Hormaz joining in with the latest. So Hormaz, little bit of red today, right?
Absolutely, a little bit, as you can say. It's not a 5-6% kind of a cut, but a 2 to 3% cut. And as we can call it, the railway stocks, they are kind of sulking at the moment because of the Capex announcements, as you mentioned. So IRFC, RVNL, IRCON, RailTel, all of them are trading lower between 2 to 3% after the FM speech. And the Capex announcements that were made today, they may have disappointed the street because 2.52 lakh crore were allocated to the Ministry of Railways. That was higher than the 2.4 crore number last year, but not as high as the street was anticipating, because this is around about 5% growth compared to last year, but the street was anticipating somewhere between 10% on a conservative basis. And brokerages like Nirmal Bang also said that railways should get a higher share of the capital allocation that the FM makes in this interim budget. Now, some of the other announcements made by the minister during the budget speech were the 3 new railway corridors that she has announced. And those 3 corridors are the energy, mineral and cement corridor, the port connectivity corridor and the high density traffic corridor, which according to the finance minister will improve efficiency and also reduce logistics cost, thereby accelerating the country's GDP. And the other announcement that they made were around 40,000 ordinary bogies that would be converted onto Vande Bharat standards for the safety and convenience of passengers. So not extremely big bang announcements, but which is kind of expected considering it was the interim budget and not a full-fledged budget. But as you said, that the stocks having had a run like that, having gone up 100%, 200, 300%, and with RVNL and IRFC in particular, they were up 70% in January itself. So a little bit of profit taking, not unsurprising, but par for the course, as you can call it.
Okay, all right, Hormaz. It seems some of these railway companies, looks like they missed a couple of stations. They zoomed ahead, and now, in fact, they're just catching up because the way these stocks have run up in the last year or so. Well, before we move on, just want to pull up the Maruti stock. Those numbers look quite good. They almost clocked 200,000 units in a single month. That's a big growth if you look at it on a year-on-year basis. It's close to around 15% growth on a year-on-year basis, so that's looking quite good. Exports on a low base, well, very strong, though. That's up close to around 37%, and domestic sales as well, up in the early teens, up close to around 13%. That explains why Maruti now is one of the biggest gainers, speeding away as we speak. But let's welcome our next panel. We have Sandeep Bhatia of Macquarie, Deven Chauksi, as well as Gautam Trivedi of Nepean Capital, who joins us on the show. Good afternoon, gentlemen, and thanks so much for joining in. Well, Gautam, let me put this question across to you. And my colleague Hormaz was just talking about these railway stocks flying away. And maybe, in fact, now they're a little bit disappointed because we were prepared for an interim budget, but maybe the street was hoping for something more. What's your view on this entire railway as well as defense theme? Because both those 2 pockets are a little bit soft today, though they've seen a big run in the last 12 to 18 months.
Well, I think to your point, Nigel, the run in the last 12 to 18 months itself has played out very well, and it's factoring in a lot of more. I would say factoring in as much as FY26 into the numbers in terms of the way these stocks have run up. So I think given the fact that, yes, I think that the push from the government for both these sectors still remains very strong. But the fact is, I think profit booking at some point was necessary. And I think that's exactly what's happening. Nothing has otherwise significantly changed from an order standpoint, at least not in the budget.
Sandeep, the question for you is that is there anything in the budget which changes your investment narrative? Would you be making any changes in your portfolio? Weightages up, weightages down, in, out, based on what we've heard?
I think this budget essentially gives me the message that India is in a long-term growth path with actually lower interest rates than would be for most Western countries. The consolidation in the fiscal deficit consolidation is a very good thing, and India has been on this path for at least 3 years. India did a lot of right things, especially post-COVID, because we didn't spend as much. The US, the largest economy in the world, is actually cranking up a fiscal deficit. It is not able to control its inflation as much. India, on the other hand, has controlled fiscal deficit and continues to be the largest large economy, which is the fastest growing economy. If you look at this just 3 years, if you project this 3 years on, assuming the same kind of policies continue after the elections, India's entire consumption, durable, banking sector will all be for a massive positive benefit. We've seen some benefit come through in Maruti, in autos. Interest rates will continue to trend down. There would definitely be, therefore, better lending. Corporates will also benefit. Currency will remain stable. So I think it actually shows you what can be done if we have a stable policy, and that continues for the next 3 to 5 years, which I hope will happen.
All right. Hi, Sandeep. Good afternoon. Nigel on this side. The street was bracing for this mid-teens earnings growth. Suddenly it appears some of these banking names a little bit under pressure. Could be just in the near term. Not a big structural change. But give and take everything that we've seen from the banking names, is that earnings growth at risk that we are factoring in for FY25?
I think near-term earnings growth will be at risk. I think there was a lot of anticipation that this kind of positive cycle will continue. I think there's been a bit of a hiccup there. But if this fiscal deficit consolidation cycle continues, I think public sector banks are the largest beneficiaries. SBI is a beneficiary there. The private sector banks, I think they may not be as clearly a beneficiary as the public sector banks, because most people think that public sector banks are very short cycle. So the benefit to the public sector banks potentially is higher, because this could be a longer cycle benefit for public sector banks.
I want to extend this debate around banks with the rest of the panel as well. So let me bring in Deven. Deven, good afternoon. Good to have you on the show too. So initial thoughts, of course, on the interim budget or any specific takeaways. And then really the question to both you and to Gautam, because I think this banking dilemma is the immediate sort of issue before the market in the near term right now. And I want to get both of your sort of comments and thoughts on this, and whether this is just a passing phase, whether we're making too much of it, or whether this could become a bit of a slightly more important hiccup that the market can't ignore. Deven? Deven, I think you're on mute.
Okay,
I think while we fix that, Gautam, let me take that question to you in the meantime. Banks, and really, I don't think the street was prepared for any kind of sort of disruption at the end of the third quarter. Maybe just some minor compression on margins. But what we've got are bigger questions than that. How do you see it?
Fair question you raised, given the fact that I think the government still, whether we like it or not, seems to be still the biggest spender in terms of whether it's infrastructure and doling out subsidies, etc. So the bulk of the Capex is still being shouldered by the government of India. Unfortunately, we've not seen that pick up as yet in the private sector, which we've been waiting for the last at least 2 to 3 years. So the fact is that on the corporate lending side, you don't see that pickup. Almost every second promoter that I meet ends up saying, I want to get to net debt zero. So there is some sort of a race to get to net debt zero, in the hope that that basically we end up having better cash flows. The market ends up re-rating our stock price, and the burden of debt, which is unfortunately the wrong way to look at it, because every company should be having a judicious mix of debt and equity, but that seems to be some aversion even now to debt, given what's happened to some of the over-leveraged companies. So given that backdrop, the question I have really is that will banks be focusing still and competing with each other more on the retail side and less on the corporate borrowing side, which is the government doesn't come to banks to borrow, the private sector does.
All right. Gautam, I think we had this chat a couple of weeks ago and we spoke about various other financials, and I think IRFC as well as another stock that we had discussed at that point of time. And I think you were still fairly positive on it. And after the big run, the stock did even better. What's your view on that, and how do you look at the other financial themes?
I think IRFC is a unique case. And again, not all of them have performed as well as it has. So my view is that, continue holding something that's performing for you versus trying to sell something, a book profit. And because then what do you do with the money, given exactly what Sandeep said, that, the next, I guess, few years for India look extremely sound from a fiscal standpoint, from a corporate earnings standpoint, and political stability standpoint. So given all of these factors, I think, my view to people is, if you've made money in a stock, even if it's made 2 or 3x for you, But if the runway is still strong, you're still looking at a 20 to 30% top line CAGR, earnings CAGR, hold on to these stocks. Don't sell them.
Sandeep, L&T is the poster boy of India's infrastructure spend, Capex spend, but the company is struggling when it comes to its numbers and the old legacy orders. Thoughts on L&T from here on?
So L&T is a very complex entity, and it essentially has multiple parts to it. The large part, which is sort of still growing strong, is of course the international orders, and the domestic orders are also there. I would think it is a slow burn situation, as pointed out by Gautam. The Capex cycle is coming in much later than what people thought it would come in at. So on L&T, I think there's still some time, and the wait would be a year. In the interim, please watch out for geopolitical movements. We have seen that, time and again, the construction companies, especially for international orders, face pressure when there are some negative developments overseas where they are operating and their projects get impacted. So I would be careful about that. So I would still think the best stories would be India domestic, especially in the manufacturing and Capex side.
So, Sandeep, just to expand on that point, since you're still optimistic on manufacturing and Capex, just complete that point on banks as well. And what's your own thought? Gautam raised a very, very, very interesting perspective, and it's true. 10 years back, everybody was over leveraged and everybody wanted to expand, and today we're in the polar opposite world. So in that context, how are you looking at large cap financials, and what do we do with the historic high price to book multiples? I mean, do you see them coming back?
So if this current fiscal path continues, India will benefit from longer term lower interest rates. Consumers will benefit from lower term interest rates. The most important statement which Gautam made was the attitude of businessmen is still to cut debt. Right, and that is a fact which we all witness. And the memories of what happened in 2012, 13, 14 are still fresh in the minds of people. I would think if we see this fiscal consolidation happen, there would be therefore a mix of debt and equity coming through. Today, equity looks extremely cheap because the PEs are very high, and we can see capital raising happening. A bit of semblance of correction, therefore, in the market will actually help companies to look at raising some more debt rather than just depend only on equity or so on. So I would think wait for 6 to 12 months. Capex definitely will pick up. There's no doubt about that in my mind. But whether it gets funded entirely by equity or by debt or a mix of both, we'll need to wait and see.
So what's the better play, Sandeep, then from a market standpoint? I mean, if you want to play for Capex, then should you stick to, the big names like an L&T or an ABB, etc., or should you play it through financials, which has been traditional wisdom?
I think the big names of L&T, ABB cannot be the bulk of your portfolio. The advantage of playing financials is that you get not only the consumer lend, not only the corporate lending cycle, but also you get the consumer lending cycle. And on top of that, which I've been highlighting from the very beginning in this conversation, you get the the lower interest rate benefit also come through. So all told, I think financials should still be the bulk. The real question for every market participant is that whether we will see continued fiscal consolidation and responsible fiscal outlook. If that happens, public sector banks are the best place.
Okay, all right. Just hold that thought, gentlemen. We have Titan's numbers that are flashing for you on the screen, and we just have the profit number that's flashing as of now. And it appears just on the bottom line, there was a very, very small miss. Top line, I think, is fairly in line with what we're working with. For the time being, the stock is down. But I think the two numbers that we've got pretty much in line with what we were expecting. A small miss on the profitability front, and the top line, I think, is more or less in line. We'll wait for the profit number as well. Remember, for Titan, we get a cheat sheet that already comes out, an operational update. So we already have that with us. These numbers look pretty much okay, but the room for disappointment is very limited, going by the valuations that the stock is trading at. Mangalam will join us to give us a quick insight into that name. But since we're talking about, inward-facing themes, Gautam, I wanted your view on the real estate theme. We have real estate companies, the MDs, the promoters who join in, and they sound so confident, that it's just the second or the third year of this 10-year cycle that we're talking about. It breaks my heart because I can't get into a bigger home. But be that as it may, how would you approach that theme? Would you look at real estate companies? Would you play, say, via pipe, cement, or would you go for housing finance companies? How do you play this theme if you're bullish on it?
Yeah, fair question. I think the demand in real estate, of course, also has been aided significantly by the money made in the equity market. So it's every bull run, I've seen this in my working career, that as the bull run, I wouldn't use the word peaks, but as the bull run, at some point, people realize that maybe we should book some profit and buy a home for us, for our children, or move into a bigger home, which I hope you do also very soon. But the fact is, I think that momentum which is there in the real estate sector, which was dead literally for the last 8 years, has come back with a bang, which is the good news. And I think even today's budget, in some sense, again, it's more lower income housing. The fact is, the runway for housing in this country is huge, and it will continue for the next several years and maybe several decades. So I think from that standpoint, the real estate companies, in terms of the run-up in the stock price, has been phenomenal. Now, I was talking to, for example, one of the ceramic tile manufacturers. I'm currently in Delhi, and I was meeting some of these folks. They said that last quarter hasn't been great, but the fact is that a lot of their demand comes towards the end of the construction cycle of projects, and they're expecting the next 12 months to be actually quite good. So I think given the run-up in the real estate stocks themselves, I think cement and the building material space is where I'd today put money on.
Okay, all right. Got that. By the way, just take a look at Titan's numbers. The top and the bottom line didn't look too disappointing. But on the EBITDA front, there's a miss. There's close to around 80 basis points miss in comparison to our poll. And that explains why the stock is down close to around 2.5% or thereabouts. But let's get in Deven into the conversation. Hi, Deven. Good to see you in. And glad we got all of that sorted out. So we have you back with us. Your view on Maruti first. The biggest gainer, I think, today on the Nifty, it's up close to around 4.5%. We had the operational numbers that came out. They almost clocked close to 200,000 units in a single month, with good growth both on domestic front as well as exports. Your view on the stock?
Hi, Nigel. Good afternoon. Well, I think the most importantly for Maruti, the product portfolio shift is definitely helping them more in the area of margin than in the area of revenue alone. And that's practically very important, as I think more amount of cars being bought, which is SUV category, where the margins factor remains relatively on the higher side. It ultimately helps, I think, the companies like Maruti, even for that matter, even Tata Motors in this particular scenario, where I think the larger amount of optic on the SUV is basically giving them a better amount of realization in the margin. So this trend is likely to continue. As we see it, I think most of the companies are introducing the models in this category. So this trend is likely to continue. And as we see in this particular month, I think some amount of price increase taking place. Along with that, in the later part of the year, the prospects of interest rates coming down, they all are well as far as I think the likely position for the auto companies in particular is concerned. We should be seeing relatively better performance continuing in the subsequent quarters as well from most of the auto players.
Okay. By the way, just looking at global markets as well, while we're digesting, of course, all these big events here at home, gentlemen, just want to point out that European markets are still sulking a bit. There's a little bit of red, and we of course had that disappointment from the Fed overnight. Some of the Asian markets are weak. So in that context, I think we've done rather well. We've kind of brushed aside some of the disappointing global developments, and then Gautam, therefore, let me ask you, what next really? We're done with the budget. Now we move to the general election. I think the market's, going in with complete consensus on that. So what lies ahead? 2% away from all-time highs. What next for this market?
Yeah, so I think let's look at, separate two things. One is the market. One is the, underlying fundamental economy and how that's behaving. If you look at on the fund flow side, I guess the biggest concern that I've voiced over the past about 6 months or so, including on your channel, is the fact that the re-emergence of China, and that's really a concern from a FPI flow perspective. I don't think that impacts domestic flow, and that obviously remains extremely strong. I've spoken to a whole bunch of domestic mutual fund managers, and they still continue to see strong momentum in domestic flows into their funds, which is good. But on the FPI front, we've seen already in the month of January, 25,000 crores of selling. China's taken in already 6 billion of net northbound inflows. into those markets. So as a result, I think our concern, given where we are in terms of absolute valuation, 21 times calendar 24 PE versus China, which is about 9.5 times, I think that is potentially a concern from a flow perspective. But otherwise, I think domestically, as I mentioned earlier on this interview, that the fundamental economy is doing extremely well. I don't think domestic investors care much about FPI flows because the SIP momentum, which is there, I don't think is going to get turned off or slow down anytime soon.
You're basically saying China will do well, right, Gautam? There are some China mutual funds offering these China funds as well. My point really is, I'm not China expert. All I'm saying is, in terms of valuation, when I speak to foreign institutional investors, they find China at this level significantly more attractive than other emerging markets. Sorry.
No, go on.
No, I was just saying that there are, I think there is Mirai runs a fund, there are a few others. But, the last time people got really bullish on China tech, that went down. There was another downturn, a bigger downturn. But maybe, at some point this year, we will see the final bottom and things will start to do better. These things are cyclical more than anything else.
And the counter argument to this India versus China thing is, India is getting premium valuations because you are giving premium earnings.
No, but the thing with China is what I was saying was that the problem is what's happening in China and whom do you believe? Because just over the last 24 hours, you've got the Caixin PMI numbers, which are showing third straight month of expansion. That number is above 50. Then you have the official data, which is showing contraction. So sitting here in Mumbai, kind of hard to guess what's going on.
But everything's good at a price, I think, and that's the reason why things
all at some price, basically. All right, gentlemen. Thanks very much for joining us, Sandeep, Gautam, Deven. Appreciate your time here on CNBC TV18. It's always a pleasure. We'll move on our segment D Street Chatter. Nimesh has been speaking with a whole bunch of people across dealing rooms to get a sense of what they made of the budget and, of course, what from here. Nimesh, tell us more.
Hi, Prashant. So, day of consolidation as the two big events are out of the way, right? The Fed outcome last night and the interim budget. From an interim budget point of view, the market feedback is no bad news, is good news. So, life moves on. And there are individual gainers as well. The mid-cap index may look weak, down 0.5%, but there are equally amount of large gainers as well in today's market. The PSU basket, the PSU housing stocks, a lot of PSU stocks are buzzing in trade. The drawdown in the broader markets is largely on a few large stocks like, Paytm is down 20% down circuit, India Cement was down, so was Aurobindo Pharma. So those stocks are dragging the broader markets down, but there are equal number of gainers as well. I've been saying for the last many days, the institutional interest seems to be within the financials in the PSU stocks, and that's PSU bank stocks. And that's playing out again in today's trade. Big move on the PSU bank stocks. Of course, the cool off in the bond yields is helping. But generally, there is money now chasing the PSU bank stock. That's the overall feedback. So net, life now moves on, and there is equal amount of interest back in the broader markets now.
Nimesh, what about stocks? What have you picked up today?
Well, a couple of large blocks that will have an impact on the overall institutional data as well. So watch out for a large block, a disclosure in PB FinTech. There is a large block, 5% equity got changed hands. I understand the P investor was a seller in block, which was an FDI, so it will only reflect in the institutional data. So is the case with the Indus Tower block deal as well. 9% equity got changed hands. A couple of large, P investors sold out. They were FDI investors, and a clutch of domestic and FIs were buyers in today's block. So both the disclosures will be quite interesting, but that will have an impact on the overall institutional data. The second name is Kalyan Jewellers. After the results, a bit soft in today's trade, but Citi is now anticipating a large block. Remember, there is a PE investor who's been selling constantly. So again, a large block is expected from the PE investor in Kalyan Jewellers as well. So that's the second name. The third name is Eicher Motors. Overall, the autos have done well in trade today, but Eicher stands out largely on back of very strong buy flow. So expect high delivery volumes, and that's largely on the buy side from the larger institutions. And the last name is Bank of Baroda. I spoke about the PSU banks overall, but Bob stands out on strong buy flows, as well as there was a Nomura update as well today morning. So that's helping Bob to outperform in the PSU basket today.
Okay, all right, Nimesh, got that.
So
Thank you very much.
Just one minute. Nimesh, have you heard anything on Fusion MFI? Because they're also, I think, Warburg, and I think there's one more entity which owns. Is that stock's been down sharply since the morning? Anything you picked up?
Not really, Prashant. I spoke to a few large investors as well. Looks like, the Paytm concern is spreading out to all the other financials as well. So whether it's NBFCs, whether it's MFIs, all are under pressure today. It's not only Fusion Microfinance. There was a block as well. Looks like one of the, not the private equity investor, but one of the FI investor would have sold out. but no specific reason for the stock to be down more than 10% in today's trade.
Okay.
Sometimes when you ask Nimesh, have you heard? I want to say he's definitely heard, but I don't know how much he can tell us.
He can say on air.
television.
Yeah. Probably that's the case. All right, Nimesh, we'll let you go on that note. Won't pull your leg any longer. But, since you mentioned Paytm, aside of the budget, that is the biggest story of the day, really. So let's bring in Ritu to just once again dial back and understand all the concerns that the RBI has raised on the fact that, after the 29th of February, customers cannot use, any of the services, not even put more money in the wallet or withdraw from the wallet. From now till the 29th, there is a window open. Let's go to Ritu to understand all the specifics. Still a 20% slam dunk on that stock, Ritu.
That's right, Surbhi, because for all practical purposes, Paytm Payment Bank cannot operate until what period of time? That is yet to be known. But just to distinguish for the viewers, the Paytm wallet or the Paytm app rather that you and I use to make UPI transactions, etc., that is not affected. That's a different payments part of the business. This is the payment bank part of the business on which restrictions have been imposed. What has RBI said? It is said that Paytm Payment Bank cannot onboard any new customers with immediate effect. There will be no deposit, no credit transactions on any of the customer accounts. Even wallet top-ups will not be allowed after the 29th of February. However, if you are a customer who has some money in the Paytm payment wallet, you're free to utilize it or to withdraw your money without any restrictions whatsoever. But no banking services can be provided by the bank, and that includes your bill payments, your IMPS transfers, etc. Because remember, this is a payment bank, which means it cannot lend. All it can facilitate is transactions. And that is where now the activity has been completely stopped. Why this action? And I'll take you back to March of 2022, because right now RBI said it had to take this drastic action because of material supervisory concerns and persistent non-compliance from Paytm. So in March of 2022, they had barred the payment bank from onboarding any customers because of deficiencies in their IT processes, KYC, risk monitoring, and so on. And that even after 22 months, RBI finds has not been satisfied, which is why you've seen them take this action. But that aside, there was already an embargo on them onboarding new customers, and that now continues indefinitely as of now, because there's no sunset clause or no wording in the circular which says that if you're able to comply, we will lift these restrictions. Now, Paytm has said in its statement that this will have an impact of 300 to 500 crores on their EBITDA because of these restrictions, but they're continuing on their trajectory, working towards the path to profitability, and they will be working with other banks here on and not Paytm Payment Bank for the payments business. Now, brokerages, of course, are quite negative on the stock. You have the likes of Jefferies downgraded to underperform with a target price of 500 rupees. Bernstein believes that this practically ends operations for Paytm Payments Bank and adds to the already heavy burden of regulatory burden on the stock. Macquarie believes that this is as good as RBI indirectly revoking the PPI license for Paytm, which remember rests with the payment bank, and that the bigger issue is that Paytm is not in RBI's good books. So will its lending partners, for instance, also relook at the relationships? That remains to be seen.
Okay, Ritu, thank you very much for that. Let's also get in Ambrish Baligaon on the show now. We've got about 12 minutes left for markets to close on budget day, and things are very, very quiet. The Nifty is just a shade below 21,700, 35 points down, while the Sensex is lower by 120 points. Ambrish, first, straight away, let's get to the stock that you're recommending, and that's TVS Motors. I remember when the numbers came out, it was on the same day as Bajaj Auto, and Bajaj Auto went up 3%, while TVS Motors was under pressure. So tell us why you like TVS Motors.
It was under pressure despite the fact that the performance was better than what the analysts were expecting. But then clearly I see still value in this stock. A leader in two-wheelers. They have manufacturing facilities in Tamil Nadu, Karnataka and Himachal, and overseas facilities in Indonesia. If you look at the installed capacity, it's about 55 lakh two-wheelers and 2 lakh three-wheelers, and they have a very decent global presence. If you look at the last 9 months, they have sold about 31.28 lakh two-wheelers and three-wheelers. And the industry growth is expected to be 16% CAGR, which is huge over the next 10 years. And in this, the contribution from EVs would be significant. And because of which, for TVS, this is a focus area. About 1,000 crores Capex is planned out. They've sold about 48,000 two-wheelers in Q3. If you look at the January numbers, which have just come out, it's about 15,000 EV two-wheelers they have sold, which means they have about 18 to 19% market share. And this segment is growing at about 60%. If you look at the Q3 numbers, which I was just talking about, I mean, they had the highest ever revenue, which they reported, 25% growth Y-on-Y, EBITDA margins about 11.2, PAT has improved by 68%. So looking at that, my EPS expectations for FY26 is about 61, and my target here is about 2,440.
Okay, that's TVs Motors. Ambarish, good afternoon. Also want to ask you about the stock of the day. ATM, what thoughts? And I don't know if anyone's going to be a braveheart enough given the uncertainties, but what would you advise to people who are even holding right now and watching this circuit?
I think they have to just keep watching, because there could possibly be another circuit, because market is clearly pricing in the fact that this part of the business, this vertical, will be shut down. But then we should remember that they've still not cancelled the license. So I suppose that small window is still there. And I don't know when the markets will start, giving some weightage to that small window which is open. But then very difficult to, stick my neck out and say that it's a buy at an X price. I'll still continue to watch.
Right, Ambrish, hold that thought. Let's get in Jay Bala as well into this discussion. Hi, Jay. Good afternoon. Good to see you in. How are you feeling about the Nifty Bank? I want to ask you about that index, because 3 straight sessions, it's being a relative outperformer. Is it a bit of a dead cat bounce? So you expect it to go and visit lower levels, say the 200 DMA? Your view?
Yeah, that's what it looks like, Nigel. And thanks for having me on the show. And the bounce for SBI, if you recall, go back to my prepared notes of Tuesday, I have mentioned there that SBI could go back to reclaim the 660 high, all-time high, and slightly go over, but it will not be sustainable. So the banking index, in all probability, has put in a medium to long-term top. I'll be quite surprised if the banking index goes any further higher than 47,000. That's the max I'm seeing in this pullback. So to me, it's just a counter-trend rally.
Just what, 2% away from where we are, and that's it. On the higher side, right? Jay, coming to you, Jigar Mistry of Boyne Capital is also with us. Jigar, great to see you as always. What did he make of things? And I wanted to come in on this banks.
Yes.
I don't know if you heard Jay was saying that he thinks banks have made a medium-term kind of a top, but that's technical, and reading of the charts. But your thoughts?
Right, Prashant. So as always, great being here in the studio with all of you. I think, see, when you're looking at Bank Nifty, sometimes we think that's a representation of all banks in India, but you look at HDFC Bank and Kotak, that account for 40%. Now you look what's happening in the banking sector since COVID. Other than these two, a lot of other banks have actually gone up. So essentially, you could now make a case that, those banks which have not run up may continue to not run up, but a lot of other places and other banks might continue to see value. So bottom up, we see, values in even the sort of top private banks per se. But I don't completely concur with what he says.
So you've been bullish on banks for a while. HDFC Bank, have you topped up after the fall?
Yeah, that sort of continues to be among... So for the first time in 8 years, I would say that we have been running this fund. It features even in the top 5 ownerships, but now it's in the top 3. So for the first time, we think... Look at sort of, at 1450 odd levels, 100 rupee EPS, 200 rupees sort of, subsidiary valuations. You then think that, oh, this is the ownership issue, this is what they communicated versus what it is. But you go back, say, 2017, ICICI was in a very similar space. 2018, SBI was in a very similar space. So as we spoke last time around, it's one step away from being a meme stock. We might be getting into that zone very soon.
Any other bottom-up ideas in the last, 1 or 2 weeks or recent?
No, I think, see, what we are approaching increasingly is that small and mid-cap space in general, given the flows, given the low free float, is getting very, very difficult to pick and choose, right? So, sort of the way we have positioned the fund is get a lot more into larger caps. Banks within that is the clear winner. But pharmaceuticals is interesting. Some bottom-up ideas are interesting as well, but that is where we are.
Pharma, financials.
Pharma, financials, some small and mid caps. We can discuss a lot of sectors, but see, think of automotives, right? Two-wheelers, 80% of incremental volumes will be EVs. Now the market, those stocks have gone up 100%. The market seems to be believing that that's equally profitable as the ICE, which is virtually impossible to happen. Correct. So why are we paying such a huge valuation premium? Yeah, they were inexpensive. Now they are not all that expensive, which is the same argument made for IT as well. Right? That sector has had the worst performance in the current quarter results. We are hiring the lowest number of freshers into that sector. Captives are hiring more than the third-party products. So increasingly, it's not expensive, it's not cheap, but there is no growth. So let's go ahead and buy that at least.
So my sense is you're not too optimistic on IT because frankly, when the reaction after the Q3 numbers with pedestrian commentary, pedestrian performance,
but
the stocks the stocks were rallying as if, wow, there's a breakthrough. So
so I think it's very similar to a lot of, back in the sell side days, a lot of my IT sort of colleagues used to tell me, ADR is up, so results must be good.
No, since you're talking about a sell side days, then you should track the metals sector very closely. What's it? I mean, some of those numbers are looking very good. The stocks but are not moving too much up because they seem to be factoring in that in. Do you think ferrous and non-ferrous is looking good from here? Or would you say, Nigel, there are plenty better opportunities? Now I'm not on the sell side where I have to put out a note. I rather avoid it.
Right, Nigel. So there is a reason why I'm no longer in the sell.
But give us a view. I mean, you've tracked the space so closely.
So I think back in the day, Nigel, we used to have this whole super cycle, right? Because one country was building it out, and that's not the first time that has happened. You look at post the sort of Korea War, 45, Vietnam War, America used to rebuild, and during that time you had this super cycles where you start looking at steel in use, aluminum in use, and then you make your estimates from there. The way China growth was different from the other parts was that, let's take aluminum, right? With no bauxite, no alumina, no coal to make power that you can smelt it into aluminum, you become the largest exporter of aluminum. So the way in which China has grown has sort of disrupted the sector so badly that everybody had to create these virtual walls, right? So it started with Europe, went on to US, then India did it as well. So now you're just playing off for those 20-25%. You don't really have years when, say, iron ore is up 100% each year for 3 years in a row.
So that we're not getting those long cycles. I think we're just a minute away from close. Jay, very quickly, before we hit the bell, what is the mothership telling you? The US market, we had the Fed overnight and we've got this wobble now, so what indications? NASDAQ, S&P 500, what are the cues?
Yeah, if you recall from our December conversation, Surabhi, I had said be prepared for a January surprise, and I don't know if you'd count the Fed chairman saying that rate cuts in March is out of the table. Most probably that's as a surprise. And we got inflation data in January where people are saying that if you exclude shelter, inflation is actually not going up. So my belief is that one final low for the US 10-year yields maximum, or it's already bottomed. We're going to see inflation come back with a vengeance. That's what the chart setup is. So, the technicals for the Dow is such that it's still got one more higher high to come through. But most probably technology and the broader S&P has possibly topped out. If we see the Dow Jones go up to make higher high and the technology and broader S&P not make new highs, that'll be a confirmation. That's the final top.
Okay, got that. I think we're just racing to the market close now. Maybe we can squeeze in one more question. Ambrish, with this, with the budget out of the way, and we heard a little bit about the railway sector, right? 40,000 wagons to be converted into the Vande Bharat, right? Absolutely. So, are we going to see something there? I think the government has already said they plan to build out 1,000 Vande Bharat trains. The number is under 100 right now. But this number, this 40,000 number would equate to, a much bigger number of trains, I think 2,000 plus. Any thoughts?
No, because 100 Vande Bharat trains are different. I mean, those are new trains. Here, they're talking of replacing the existing 40,000 rail bogies into Vande Bharat standards. So this is going to be a new order flowing out to all these companies. So I think this is extremely good news for people like Titagar.
Although we don't know that, Amrisha, we need to wait, because if that's going to be what we heard was 1,000 new trains, but now with this announcement, so we'll need to get maybe some clarity as we go along. But I think we'll wrap up the discussion here. Thank you very much, Ambrish, Jay, and of course, Jigar, thank you very much for dropping by. Appreciate your time here, as always, on CNBC-TV18. We are ending with about a 30-point cut. So, like the interim budget, it's a very interim kind of a close as well.
Well, let's wrap up the markets then, Prashant. With all the day's action. So today, for the entire day, we moved in a band of close to around 170 points, 160 points or thereabouts approximately. And from there, in fact, we ended more or less flattish. Well, in terms of stocks that were in focus in today's trading session, you had Maruti that was one of the big gainers in trade today. You had Cipla as well that was up and about in today's trading session. And Eicher Motors, that's been a rank outperformer for this week itself. On the losing end, well, a couple of these domestic-facing themes as well did see some selling. So whether it was Ultratech Cement that was under some pressure, you had JSW as well that did see some selling in trade. Titan came out with its numbers. Well, the stock was a little bit under pressure in trade. And you had L&T as well that was down in today's trading session. From the broader market, the stock that was really in focus was Paytm. It got a rap on the knuckles from the RBI, and that one, in fact, went home with a cut of close to around 20%. And a couple of these lenders as well, Indiabulls Housing Finance, Fusion Micro, both of them were down more than 10%. And there were two stocks that were reacting even to negative news flow. One was Aura Pharma because of reports of, a visit from the US FDA, from the regulators out there. So that was under some pressure. And you had India Cements because the ED, well, they had visited them. So both those two go home with some cuts. So to wrap things up, well, we moved in a band of close to around 200 points approximately in today's trading session. But, we ended with a mild cut of around 15 to around 20 points out, guys.
Okay, well, that wraps up the market. Bank Nifty, I guess, was the shining star. It managed to retain most of the gains over there, and we'll see if there's any further continuity. But otherwise, mid-cap setting, I think just the market digesting the event, letting it get out of the way, and then perhaps taking a fresh guard from tomorrow.
Absolutely. Historically what happens is if there is a big move on the budget day, you get a move in that same direction, up or down, over the next 1 month. But today, this is nothing, right? I mean, this is absolutely flat kind of a close. So neither here nor there. But I think it's goodbye from all of us here on closing bell. But the coverage will continue here on CNBC-TV18 in just a moment from now. Stay with us.
OCL as a payment aggregator for online offline merchant, and already works with various other banks, and Paytm Payment Bank is one of the key banks in that. And from here on, we are very clear that we will work with only other banks and not PPVL. And PPVL is just one of the various other banks, any which ways. OCL has already been working with other banks since last 2 years, and especially when embargo had come to the payment bank, we already had started to work and accelerated the plan for movement to other banks, and other banks have actually already started working with us. So it is an important thing for me to tell you that we continue to decline and decrease the slant-wise dependency on Paytm Payment Bank, but there is a still significant enough dependency, I would rather say, there. And we now accelerate the plan and completely move to other payment banks partners. And remember, these are payments-related relationships, which means all banks have necessary technology and capability already there. And I'm very happy to tell you that we are genuinely overwhelmed by the support that we've received from the various banks, large banks of this country and our country, and those who are already a partner, and more additional large banks have reached out at very, very senior level to say that they will be very happy to help us and happy to execute relationships that we in past have been doing with Paytm Payment Bank. And we obviously very clearly, we are going to take that as a step forward and work with current and many more incremental bank partners. Going forward, the keyword is that we will not work with Paytm Payment Bank, and that is what probably means that other banks will come. With regard to the direction on termination on nodal account of OCL, that is 197 Communication PBSL by Feb 29, OCL and PBSL are already in process of moving nodal account to other large commercial banks, and that will be done definitely before the due date. And OCL's marketing and financial services businesses, where we market and sell other services to the consumers, are not affected due to these directions. And these directions are towards the associate company, Paytm Payment Bank Limited. It is important for me to point out that there will be requirement to have operational change for the merchant relationships that we have, where the merchants have relationship with Paytm Payment Bank, and those relationships needs to be operatingly be changed, and there will be an operation change there. Overall, I can say that it is on behalf of Paytm, I can say that it is more of a big speed bump, but it is something that we believe that with partnership of other banks and capabilities that we have already developed, we'll be able to see it through in next few days or quarters, as the case would be. So thank you so much. And with this, we'll take the question answers.
First question is from Sachin Salgaonkar. Sachin, you may unmute your line and ask your question.
Thank you. Vijay, I have 3 questions. First question, actually, can you help us and understand what exactly went wrong where, I mean, for some time we were hearing from you guys that, this should get resolved, But when we look at some of the words being used of persistent, non-compliant, need continued material supervisory concerns, can you help us explain what is something where RBI is not fully comfortable and what further needs to be changed from that perspective?
We are in recipient of the same letter that is very public.
Sachin, could you just ask all 3 of your questions, then we can answer it all at once? Sorry, Vijay.
Okay, yeah, that's right. Yeah, because we want to take a lot of questions, so we will suggest that whenever you are asking questions, just put all 3 questions or 2 questions that you are asking to.
Got it. Okay, so that was first question. Second, Madhur, if you could help us understand how to quantify the 300 to 500 crore impact on annual EBITDA. How much is coming from revenue, how much is from EBITDA, and I presume this is for this year, right? You are looking for. And third, what Vijay mentioned in the opening remarks, the operational changes which are needed from a merchant perspective. Just wanted to understand what kind of changes are these and how much time will it take?
Okay, so I'll take the first one, Sachin. As you saw the letter that is publicly sent there is another letter that bank has received. But based on that, I cannot foresee what we did not see or not see. There is obviously RBI believes, and we totally are believing of the fact that there is something that RBI would have seen. Have they sent us details? Answer is no, they have not sent us any details. So something that is based on over the period what different audits they would have done and their solutions based on that is the opinion that has come based on. So we don't know the exact nuance, what triggered or one line item.
And then Vijay, so how does one get a comfort that RBI should get comfortable going ahead with these changes, right? Because if you are exactly not clear, Paytm is not exactly clear in terms of where RBI was not fully convinced, then, I mean, how do you look to fix those issues?
Actually, the key word here is that it is in discussion with Payment Bank, and Payment Bank cannot share these facts with, let's say, parent or shareholders out there. So that's also one of the reasons that we can't discuss this. This is an interaction between bank and Payment Bank, central bank and Payment Bank.
Sorry, so if I can just clarify, there's certain direction, as Vijay said earlier, there's certain direction that they've given to Paytm Payments Bank with respect to their operations. If we are doing a service in partnership with Paytm Payments Bank, those services, and we'll come to your third question, would go through some operational changes and so on. But like Vijay said, going forward, we would work only with third-party banks who don't face such issues from the RBI, and who also do provide these services to other consumer technology companies. As I'm sure you're aware that that is a pretty standard business model in the industry, where consumer technology companies such as ours, who have a lot of app traffic, will work on payments products with various large banks, right? In our case, we were doing various things with other banks, but various things also with Paytm Payments Bank, and those services would be affected. So that's sort of the Paytm point of view on this, about what we need to do going forward. With respect to your second question, the 300 to 500 crore that we have mentioned is the worst case annual EBITDA impact. That does not take into account the expectation that we will be able to, sort of continue all the businesses or that Paytm Payments Bank, that we're dependent on Paytm Payments Bank for. That is primarily there's primarily two lines of businesses that we do. One is Paytm Payments Bank has a wallet. For that wallet, we provide two services. One is that we ask, we are the app on which a vast majority of customers come and add money to that wallet. On that, we make some revenue and some profitability. And the second is that we are a payment provider effectively. And the second is that we also offer, as a part of our merchant services, where we provide payment services to merchants, we both online and offline. We also allow those merchants to accept Paytm wallet. In those cases, the merchants pay us a revenue, and we pay an interchange effectively to Paytm Payment Bank. So the worst case margin, EBITDA margin impact of that is 300 to 500 crores. We have called that an annual EBITDA impact. I do expect that we over time will be able to offset this in a big way, but we have called that out as a sort of an annual impact.
Okay, thanks, Madhu.
Pavish, did you want to take the third question? That's Sachin.
Sure. So Sachin, the operationalization piece means two things basically. So when you are a merchant, you have and it's an offline and online merchant conversation. So I'll take both of them. But let's start with the offline merchant, where you see a Paytm QR, which is powered by Paytm Payment Bank, right? And now that QR has a VPA, a virtual payment address of the Paytm Payment Bank. So now that QR will have to be changed. The VPA will have to be changed to any other sponsor bank. And we have multiple sponsor banks who anyway work with us, large sponsor banks who anyways work with us, while we used to predominantly work in the offline space with Paytm Payment Bank, but in large enterprise and online space, we work with other operators in the UPI space, etc. So when we say operationalizing difference, we basically now have to work in making sure that the VPA is changed to another bank. We have multiple options of the banks that we are currently in conversation with. We'll obviously conclude one bank, two bank, or a large number of banks to make sure that we're able to do this exercise. This will be a large exercise, so it will be split into two parts. One, there is a new acquisition, which is much easier, that the new acquisition can immediately start to happen on other bank BPS. So we decide. So that decision will take in the next maybe a week or so, because there'll be some commercial involvement, etc. And we have proposals to that regard already in the system. So we are evaluating them appropriately. And then there will be, how do we move the existing merchants who are accepting on UPI to any other bank or banks. So that discussion will involve discussions with regulator, NPCI, etc. That can it be a one-time movement or a case-to-case movement. So we have had some discussions, but obviously they are yet to be concluded formally. And it will take maybe a couple of days more when we have more direction on how we do this migration.
Right. Bhavesh, one small question. Will the terms of VPA with Paytm Payments Bank and other banks be materially different and hence expensive for Paytm?
It will be largely similar, because the fact is that today, purely from a P2M, there is a UPI incentive component. So we have a commercial on sharing of incentive with the other VPA banks that we have, which is largely in the similar range that we have with Paytm Payment Bank.
Got it. Thank you so much.
Hello.
Hi. Next question is from Vijit Jain of Citibank. Vijit, you might go ahead.
Yeah, hi, thanks. So just a clarification. First question is on the 3 to 5 billion rupees impact that you're talking about. Is that basically assuming wallet ceases to operate? Is that it, or are you assuming some kind of a smaller size of the wallet business? And does it also include different commercials as you move some of these relationships, including the nodal account, to other banks? And related to that, I would just request if you could break down, your core net payment margins a little better, the 7 to 9 bips a little bit better, so we have a better handle on that post these developments. So that's my first question. My second question would be, so if you need to, let's say, shut down PPBL, either because it doesn't take deposits, so has lower reasons to exist going forward, could you take over the Paytm UPI and the Paytm wallet products back into OCL? Are there challenges with that if you wanted to do something like that? That's my second question. And any commentary on the financial services side from your partners post this development? Those are my 3 questions.
So Vijay, let me take the questions in the reverse order. So we've been working with our various partners. So our equity broking and our insurance business obviously remains unaffected, because they do this business independently of any relationship that they may have with Paytm Payment Bank. So that business is 100% unaffected. With the lending business, lending business has no relationship of any kind with Paytm Payment Bank, other than the fact that there would be merchants who may have taken a loan and have their repayments coming from a Paytm Payment Bank account, which is not a very large number, but I will give you a directionally number, maybe about 10-15% odd merchants on a ballpark number who would have the repayment set up happening from the PPBL bank account, because they were taking settlements there. There we have to move their settlement accounts to any other bank account that they would like to take the settlement, so the repayments can keep coming. And that process is already on. It's not a very large process, because we have about live 400,000 merchant loans. Even if you take 15% of this, we're talking largely about 60-70,000 merchants. And we have a 30,000 sales force on the ground, which is already in the market to make sure that those repayments and the settlement account changes, etc., are done on or before 29th of February. Same is on the personal loan side, that there is a much lesser number than 15% who have their e-NACH or autopay set up through the PPBL account, and hence they have to be changed as a mandate. That work obviously is also on. It will not be physical work, but it will be done digitally. So we are in the process of doing that piece. Earlier, the effort was to make sure that they are able to convert their autopay into other mandates or with other banks that they have. And that effort is now got amplified further, just to make sure that that exercise can get completed before 20th of February. Beyond that, there is no operational challenge for the continuation of the lending business. Obviously, the new lending business will not have an option for the user to have a PPBL bank account as a repayment bank account. And hence, the new business can continue as it is. Having said that, as expected, because it's a material development in one of our associate companies, each lender have their own set of areas of concern and clarification that they seek from us. We are in the process of discussing and engaging with them on clarifying a lot of nuanced questions like you may have and others have as to what's the impact on the portfolio, what's the impact on the overall business. We've been able to answer all those questions, and now they have to process those questions and come out with their further incremental questions or call to action. Till that time, we have proactively worked with our partners to say, till the time we're able to make these operational changes, let's pause the new origination of loans for that period of time. And once we are able to solve the operational things for existing and the new one, we restart. So there will be some disruption, and hence this 300 to 500 crore number that Madhur was saying will have some impact from coming in from lending, that we will not be originating loans for maybe a couple of weeks before we solve for the operational challenges, and then we go back to normal.
Okay, well, that is optimistic, and that is coming in from the Paytm management. Vijay Shekhar Sharma and Madhur Deora addressing questions and taking questions from analysts on the Paytm call after, of course, what the RBI circular said yesterday. Remember, the stock ended 20% lower. I mean, it started in the morning down by 20% and never sort of, circuit never opened through the course of the day. The last part of the answer, the Paytm management essentially saying that, maybe origination of loans, they'll be able to do maybe in a few weeks' time once they solve for some of these issues. Is it going to be as simple and as fast a resolution as that? Something which we will need to see. Ritu is with us. She's been, of course, tracking the story. Ritu, you've been listening to the full call.
Yeah.
Top takeaways?
Well, to begin with, it's very clear from Vijay Shekhar Sharma's commentary that, beyond what is publicly available as to why RBI has taken the action, and they're also linking it back to what happened in 2022 when, they were first asked to stop onboarding customers. There's nothing beyond that which had warranted this action. So I believe they'll also be, seeking some sort of redressal on that front. Operationally, yes, he said for a couple of weeks, loan origination may be hit. Again, to clarify to the viewers, this is a payment bank, which means it cannot lend. The lending is with, tie-ups with other NBFCs, etc. That's what it does. That will pause, he said, for a couple of weeks. Interestingly, he called it a speed bump. And he said,
a big speed bump.
A big speed bump, which could be resolved in the next few days, a few quarters. It remains to be seen. But that is not the reading of the RBI notification if you look at it, because there's nothing that says that once you're able to rectify these deficiencies, whether or not this embargo, these restrictions will be lifted. So the street is viewing it a little more negatively than the management, of course. And there's nothing much that they've been able to add, but they made it clear because this embargo on onboarding new customers on Paytm Payment Bank was in place since 2022. They've already started to work with other banks, and which, by the way, is a rule, which NPCI says if you have more than 5% market share in the UPI transaction market, you must be banking with at least two players. And that happened after Yes Bank had, issues back in the day, and then, some, transactions were getting affected. So NPCI came out with this rule that if you have a large share, you must have at least two banks in place. In the case of Paytm, it was only Paytm Payment Bank. And since that embargo was brought on, they said they've started to work with other banks. And that is what I think he's
deepening their tie-ups and relationships with, other banks.
I believe he was talking about the support he's got since this RBI action was taken.
Okay.
Because they've already started engaging with banks because of the embargo. But I think since this new action, and they have to shut down, any ties with Paytm Payment Bank, they have to bank with others. And so that's what he's referring to by saying we've got overwhelming support from other large banks.
But Ritu, the interpretation, the management constantly, kept maintaining that things will kind of get back to business as usual, maybe in a couple of weeks or a couple of quarters with respect to loan originations. But again, the interpretation, this needs to pass through the RBI. The RBI needs to come out and say that they're satisfied with the operational changes that, payment banks has made. So
very much.
I mean, it can't be taken as something which is in the management's hands right now, right?
It's not. And typically when we've seen embargoes on various other financial entities in the past, it's taken, like in the case of HDFC Bank, it's taken over a year for them to lift those restrictions. In the case of Paytm Payment Bank, it's already been 22 months. since that first embargo was placed on onboarding new customers. So clearly RBI is not satisfied with the sort of progress that the bank has made, and therefore this drastic action that they've now put in place.
Sorry, just a basic question. Did they address what is the reason behind the action? Did they say?
Yeah, I think that was the first question. And they said that, there is little that we know outside of what is in public domain, that, in their audits and in RBI supervision, they found some deficiencies because of which they have taken this action. But beyond that, he said, even we're not aware if there was anything besides this that caused them to take this action. And that's, I think, one of the first few questions Vijay Shekhar Sharma did address.
No, absolutely. I think a lot of sort of analysts who've written on the subject are on that call. So we'll leave you to listen to the call and sort of come back with more details. But I think we'll wrap up this special broadcast. Stay tuned. There's more coming up in terms of news and updates after a quick commercial break. Stay with us.
No surprises from Finance Minister Nirmala Sitharaman as the government opts for prudence over populism in this interim budget. No change to income tax rates and capital gains tax, pegs nominal GDP growth for FY25 at 10.5%. Finance Minister sticks to the path of fiscal consolidation and springs a pleasant surprise, projects a fiscal deficit target of 5.1% of GDP for FY25, expects to end this financial year with a deficit of 5.8%. Government banks on lower borrowing and higher revenue mobilization to keep the deficit in check, proposes to borrow just over 14 lakh crore rupees from the market, which is 8% lower than last year's estimate. Also pegs gross tax revenue growth at over 11% in FY25. Government's infrastructure push continues. Capital expenditure outlay hiked by 11% to more than 11 lakh crore rupees. Finance Minister Nirmala Sitharaman promises to build 3 major rail corridors. 40,000 rail bogies are going to be upgraded to Vande Bharat standards. Stock markets gave up early gains to end marginally in the red. The rupee gained strength and bond markets cheer the budget after the government scaled down its borrowing plan. The government sets another big 50,000 crore rupee divestment target for FY25 after a tepid show so far in FY24. Even the revised target, 30,000 crores for FY24, is well above market estimates of near 20,000 crore rupees. A sharp 13% cut in fertilizer subsidies helps trim the overall subsidy bill. The outlay for food subsidy is also 3% lower at just under 2 lakh crore rupees. No capital infusion for oil marketing companies this financial year. The government halves the 30,000 crore rupee funding plan and defers it to FY25. The government overshoots the FY24 budget for the Rural Employment Guarantee Scheme by 43%, maintains the revised 86,000 crore rupee number as the outlay for FY25. Finance Minister proposes to set up a research and innovation fund with a corpus of 1 lakh crore rupees, promises long-term financing at low to nil interest rates for a tenure of 50 years. Well, those are the big headlines from the budget. You are watching CNBC-TV18 and I am Ritu Singh. Here are the other headlines that we're tracking for you this evening. Shares of Paytm plunged 20% after the RBI crackdown. Brokerages believe that the new restrictions will end all operations of Paytm Payment Bank for all practical purposes. This even as Paytm clarifies or claims that the annual EBITDA impact will be 300 to 500 crore rupees. Viacom 18 is in advanced stages of talks to buy a majority stake in Disney India, according to a Wall Street Journal report. The deal will likely value Disney India business at around $3.9 billion. Global markets remain largely subdued after US Fed Chair Jerome Powell signals a rate cut is unlikely in March. Crude oil prices also post the first monthly gain since September.
Honorable Speaker, I present the interim budget for 24-25. We need to focus on 4 major castes. They are Garib, Mahilayeं, Yuva and Annadata. Their needs, their aspirations and their welfare are our highest priority. The revised estimate of the fiscal deficit is 5.8% of GDP. The outlay for the next year is being increased by 11.1% to 11,11,111 crore rupees. Our government will launch a scheme to help deserving sections of the middle class to buy or build their own houses. Prime Minister Modi has furthered that to Jai Jawan, Jai Kisan, Jai Vigyan and Jai Anusandhan.
भारत में 21वीं सदी के आधुनिक इंफ्रास्ट्रक्चर के निर्माण के साथ ही युवाओं के लिए अनगिनत रोजगार के नए अवसर तैयार होंगे.
At 57 minutes, this was the shortest budget speech by Finance Minister Nirmala Sitharaman. Now, there were no surprises as the government opted for prudence over populism. No changes were made to income tax rates, and capital gains tax as well as nominal GDP growth for FY25 has been pegged at 10.5%. The government has stuck to the path of fiscal consolidation, projected a fiscal deficit target of 5.1% of GDP for FY25. However, the government expects to end this financial year with a deficit of 5.8%. The government is now banking on lower borrowing and higher revenue mobilization to keep the deficit in check. Now, she proposed to borrow just over 14 lakh crore rupees from the markets, which is about 8% lower than last year's estimates. The minister also pegged gross tax revenue growth at over 11% in FY25. Now, what did India Inc. make of this? Here's a slice of that conversation. Shireen Ban with top industry leaders on their budget take.
Gentlemen, I have to say, Nirmala Sitharaman, speaking to you as CII, had made it clear this is going to be a vote on account. She's delivered on that. Perhaps one of the first few finance ministers really sticking to the script on what a vote on account is and what a vote on account should be. Dinesh.
Yes, totally agree. As you said, it was on our event where she mentioned this. I think she has walked the talk. But equally so, she has given the direction in terms of what it's going to be. So I think that's great.
Oh, absolutely. She made it very clear we're coming back for the next 5 years. So that pitch was made. But Rajiv Memani, nothing for you to do today. No changes as far as direct or indirect taxes are concerned. But, you know, we were discussing the fiscal conservatism, and that was the point that you were making as well.
Yeah. So just to answer on your first point, I think it's this is a budget of a very confident government, both politically and economically. So no big softies announced. Just a very good articulation of what they've achieved, of what they've done over the last 10 years, and then a broader vision of what they intend to do going forward. And even if I look at the macroeconomic thing, you know, all of us have been covering and seeing the tax growth. Direct tax growth of almost more than 20%, indirect tax growth of 11%, actually GST growth of 11.5%. So everyone was estimating that the revenue, the tax growth this year will be higher than budgeted, and the expenditure will also be higher than the budgeted.
It's actually lower, a little bit lower.
Both of them are slightly lower. So my guess is when we eventually end up, you know, and the gross number and the net number. So I'm assuming they are doing a lot of refunds will be given in the next few months.
All right, let's now go across to Suman Berry, Vice Chairman of Niti Aayog. Mr. Berry, thank you and welcome to CNBC-TV18 on Budget Day. Over the last few weeks, we were hearing about some big-ticket schemes, maybe increased interest subvention for MSMEs, maybe increased allocation under PM Kisan Samman Nidhi, maybe a 12,500 crore rupees FAME 3 scheme. None of that has happened. Why do you think, and what is the thinking of the government for sticking to the path of fiscal discipline? When it came to the interim budget in 2019, you had the PM Kisan Samman Nidhi, you had certain tax tweaks also for the middle class. Why do you think the government has stayed away for some of the popular measures, some of the big bang announcements that were being discussed in the media and also by analysts?
Well, it just proves to me that the media exists to create its own bubbles. I'm sorry. Am I speaking over you? May I go ahead?
Sure, sir. We can hear you.
Okay, fine. Look, I think the important thing about this budget, and indeed this government, is that it is sober, responsible, credible, and confident. Okay, so it was indicated that, by the FM in the media that this was going to be, in effect, an interim budget. I don't know if that exists kind of constitutionally, but And so it proved, particularly on the tax side. To me, what is perhaps under-remarked is really the fiscal consolidation guide path. I know that the markets have been rather excited about this because of what it means for, as it were, the demand on bond markets. But let me make the larger point, which is also picked up in the FM speech. I don't think this government gets the kind of credit that it deserves for what is referred to in the budget speech as economic management. So we are not that far away from COVID, the fastest growing major economy in the world, inflation more or less under control, reasonably, certainly buoyant stock markets, looking now for both FDI and for the private sector to start investing. You don't get here, as it were, by luck or by chance. And so to me, I think it would have been a mistake to spoil this track record with last-minute populism. And frankly, the recent election results suggest that there wasn't a particular need to do so. Back to you.
Right. Mr. Berry, when it comes to job creation, it is often said that a lot of people are actually going back to agriculture, so there is actually a lot of unemployment in the country which needs to be addressed. Now, how will this budget do in terms of encouraging job creation? We're looking at the defense sector as well, which has got a major allocation, a record over 6.2 lakh crore allocation to the Ministry of Defense, 1.72 lakh crores for the defense budget, that is the capital acquisition budget, 1 lakh crore corpus for deep tech, for youth and for companies, 2 crore more houses under the PM Awas Yojana, schemes for helping slum dwellers living on rent or to build their own houses, a new housing scheme for the deserving middle class as well. Overall, these are quite a few things that I have mentioned across sectors, but overall, how do you think this budget will increase job creation?
Parikshit, I'm not sure what time horizon you are talking of. I have, my job is to look at the medium term and to work with the Prime Minister on a vision for India, Viksit Bharat. Now, I think the philosophy in the budget is crystal clear, which is that we can't anticipate where the new jobs are going to be. What we do know, and one reason for the focus on Capex, is that the immediate multiplier from capital expenditure is a great deal higher than revenue expenditure and certainly subsidies. And so I have not had a chance actually to look at the fine print of the allocations. Obviously, you have done so. But I just want to talk about the underlying philosophy of the budget speech, and indeed of the government's policies overall. They are to equip individuals with the skills and the financing to allow them to realize their entrepreneurial capabilities, to explore new options, and frankly to get away from what had been the goal of our educational system, which was to prepare graduates for Babu jobs. That is not the India of the future. That's not the India of Viksit Bharat. And so the focus is on skills. The focus is on women. The focus is on empowerment. Now, there's a lot of controversy about the what employment numbers to track and follow. And, we are 1/5 of humanity. A lot of our employment is so-called informal. I would also say that the minister's budget speech pays a lot of attention to what they call formalization, okay? Which is that moving people from, mom and pop operations into registered entities, be they startups. And formalization is partly responsible for our very buoyant taxes. I would also say, while again, it's not easy to measure, the indications that we have is that by and large rural wages have been going up. And I hear from people who are in the South, this is anecdotal, that there are huge skills shortages.
Right. On that note, sir, I'll request you to hold on. The Finance Minister has just started speaking. We are going to cut across to that press conference. Let's hear from the Prime Minister in a post-budget press conference.
Honorable Finance Minister, Srimati Nirmala Sitharaman ji, in Parliament today. The Finance Minister is joined by Honorable Ministers of State for Finance, Shri Pankaj Chaudhary ji, Dr. Bhagwat Karaj. Also on the dais are Finance Secretary and Secretary Expenditures, Dr. TVs Motors, Secretary Economic Affairs, Shri Ajay Seth, Secretary Deepam, Shri Tuhin Khan Pandey, Secretary Revenue, Shri Sanjay Malhotra, Secretary Financial Services, Dr. Vivek Joshi, and Chief Economic Advisor, Dr. V. Anantanageshwaran. A warm welcome to the Finance Minister and her team at the National Media Center. At the beginning of the press conference, Finance Minister will make her opening remarks. After that, we will open the floor for discussions and questions and answers. Thank you. Over to you, Minister Ma'am.
Thank you for coming here today. Thank you very much for coming here today. Slightly longish opening remarks. I'll try to cut it down. But over and above what you heard me say, I just want to give the overall perspective, so I'll take a bit longer than I desire. See, this is an interim budget presented just before the election, obviously. The four large things that I want to draw your attention to is GDP. You get the numbers, you see it and so on. But I want to bring in this dimension, that governance, development and performance. On all of these three heads, I'd like to say what actually we have achieved, because that forms the backdrop. So, on governance, we have delivered on development. We better manage the economy with correct intentions, correct policies, and correct decisions. So it's a governance with care, conviction, and confidence. If that stood for the GDP's G, the D stands for people living better, earning better, and having high aspirations for the future. And if I move to the P, the performance, 3 consecutive years of 7% growth. Fastest growing economy in G20, all parts of the country participating in the growth. Price stability and inflation management. Handling the health and economic fallout of COVID. Build out of physical, digital and social infrastructure. DPI as a factor of production almost for formalization and financial inclusion and growth of the economy. cleaning up the banking system, GST, one nation, one market and one tax, the IBC. So if you were to look at performance, I've listed some of them. So your GDP, as we look at governance, development, and performance, I have something to say on each of these. So this budget, or vote on account, is getting presented with the GDP that we want to speak to you about. And in that, the fiscal management actually is something which I would like you to spend some time, even as you go through the budget. But I'll flag it here. Bringing down the fiscal deficit in spite of very challenging times, as per the announced consolidation path, and with transparency and prudence. So in fact, I was just remarking to my officers this morning, most of you all had already calculated the figures, RE revenue, RE expenditure, this is what it is, because every month you get the reports coming out. So you don't need to wait till the budget statement. Every month you get the accounts, and so budget process has become absolutely transparent and questionable. If there are any, you're there to question, we are here to answer. But we set in the process of keeping everything brought on budget and nothing kept aside from it or underneath it. So with that, the budget deficit, fiscal deficit, 5.8%, which is much lower than the 5.9, which was at the BE. Similarly, for the 24-25 budget, we've given 5.1 as the fiscal deficit, so clearly indicating that we are on track to meet the glide path which was set in 2021-22, and that we are well on track to meet the 4.5% fiscal deficit, on or below 4.5 even by FY26. If this is the background with which I'm talking and the presentation of the budget happened, I want to very clearly put some things under the heading, if you want to call it that, Disha Nirdeshak Baatein. You must have heard the Honorable Prime Minister speak before the Parliament session, well before the session commenced. His usual customary remarks. He said the budget will be presented tomorrow and you will have some Disha Nirdeshak Baatein in it. So, what are those Disha Nirdeshak Baatein? There are about 5 of them I highlight. Social justice as effective and necessary governance model. So it's not just a slogan for us, social justice, we'll have to work for Nyay. No, we've shown you that it is a governance model and a successful one at that. So social justice as an effective and governance, necessarily a governance model. Then 4 major caste groups, as we call it, as Prime Minister has emphasized, the poor, the women, the youth, and the Annadata. So Disha Nirdeshak Baatein, you have the second point. Third, focus on infrastructure. This year again, massive increases of Capex happened in the last 4 years. This year too, there is 11% increase, resulting in a very recallable number, 11,111 crores. So continuing the trend of the last 4 years, where capital expenditure has been the route, one for revival earlier from COVID, and now for sustained growth towards Amritkal, towards the Vikasit Bharat goal. Fourth is the using of technology as a huge opportunity. DPI as almost a new factor of production. So it is actually bringing in the value addition to the economy. It is facilitating every sector to bring in the value addition which is so required. and improves on our productivity. And the last Disha Nirdeshak Batein is high-powered committee for extensive consideration of challenges arising from population growth and demographic challenges. So if these are Disha Nirdeshak Batein, what were the major announcements? I'll recall very quickly 12 of them. I'm not spending any time except for reading out what those 12 are. 2 crore more homes under the PM Awas Yojana. We already completed nearly the 3 crore. Housing for middle class. Rooftop solar for at least 300 units of power generation every month, which will be muft bijli for the households. There will be some assistance and some kind of a funding which will be extended. So you're generating renewable energy, providing the renewable energy generators the free they would want to use, and over and above that, the surplus that they produce can be used for selling and earning money out of it. Enhancement of target for Lakpati Didi from 2 crore women to 3 crore women. Preparing and empowering the MSMEs to grow and compete globally, aligning regulatory environment for them. The sixth is making sure that the eastern region, and when I say eastern region, I'm not talking about Northeast. Northeast will get the attention that they've been getting all the while. They will still continue to get it, and they will be on the top of our priority. But when I say the eastern region, I'm talking about Bihar, Jharkhand, Chhattisgarh and Orissa, making sure that they will become the engines of growth for the new Amritkal India that we are trying to use as a bridge towards leading to Vikasit Bharat 2047. And Eastern India, I've missed out on West Bengal, please add it. Bihar, Jharkhand, Orissa, Chhattisgarh and West Bengal. Next generation reforms will be carried on, building consensus with states and stakeholders for reform, perform, transform. 3 major corridors, which are programs for railways, for logistics efficiency, and they have been explained. The important point that I want to highlight there is to make sure for Vikasit Bharat, you just don't need to build for better passenger convenience, you need to build for better passenger convenience. You need to give them safety. You need to shorten the traveling time for them. So one of the corridor is going to give emphasis for high density routes where passengers traffic is very high. We need to bring efficiencies and better safety in those areas. But for Vikasit Bharat, passengers need to move as they wish. But equally, materials, raw materials, building goods, cement, rare earths, minerals, we need them to move efficiently as well. So the corridor will take care of that as well. So the synergy between movement of people and movement of goods is what is being highlighted in the 3 corridors that we're talking about. Ninth announcement, that is urbanization, looking at Metro and Namo Bharat. One of the railway related things which I missed out on telling you, 40,000 bogies are going to be improved in the standards with which they can be effective rolling stock and also give the convenience in the passenger experience inside the bogies as well. So 40,000 coaches are going to be brought up to the level of Vande Bharat standards. Metro and Namo Bharat I did mention, so that urban transformation through transit-oriented development can happen. The 10th announcement which I draw your attention to is 1 lakh crore corpus for research and innovation by private sector. So that's coming in at the 10th. 11th is boost to tourism, including spiritual tourism. Interest-free loans will be given to states so that they can build on iconic tourist centers. And the 12th one is supporting reforms in state. They are separate from the development of tourism centers, and therefore I want you all to have the clarity that help to centers are supporting reforms in state is slightly different from boost to tourism. There will be a white paper on economic performance of the last 10 years compared with the previous 10 years. The 12th announcement is so much a statement that I would like to make, which is what I made in the budget speech as well. Government has got the trust and the confidence and the blessings of the people based on its exemplary track record of GDP, as I said, governance, development and performance, effective delivery, and also on Jan Kalyan. So highlighted points have been realized as goals of Vikasit Bharat till now, and they are the realizable goals also continuing to be so, because what we want to underline is we govern with good intentions, true dedication and hard work in the coming years, and that's why Amrit Kal is also now called Kartavya Kal. In short, that's the budget. Thank you very much.
Yeah. The Finance Minister has just now encapsulated the key highlights of the budget. We'll now open the floor. We can begin with the front row here. Please go ahead, 53. Please hand over the microphone here.
Hello, ma'am. This is Priyashmita from Informist Media. Ma'am, I wanted to know about the projections in your tax collections. So tax collections are seen currently growing at about 14.4%. Your April to December data shows. However, the projections in your budget are lower than that. So a back of the envelope calculation shows that you're going to get about 55,000 above your revised estimate if the collections continues. So your estimates are conservative, would you say that?
I'll certainly ask Somanathan to come in on that. Estimates are always realistic with us.
So let me clarify this. If you look at page 6 of the budget, you can look at it later. I'll just explain it to you. We are projecting that gross tax revenue. Now, this gross tax revenue in this sheet is net of refunds. So, net of refunds, we are projecting that in this financial year, it will grow by 12.5% with reference to last year's actual. So, from 30.54 lakh crores last year to 34.37 lakh crores this year is what is presented in our revised estimates. However, the sharing of taxes with the states is different for different taxes. Not all taxes are shareable in the same ratios. What has happened this year, if you look at the numbers, and they are given on page 6, union excise duties have actually shrunk. They have not increased. Most other taxes have grown at, as you say, 14%, etc. Union excise duties have grown minus 5%. That reduction is almost entirely on the account of the center, because the same way that cesses are not shared, reduction in cesses is entirely borne by the center. So as a result, the state's share has increased by 16.5% in our revised estimates. Between the state share in the revised estimate and the state share last year, there's an increase of 16.5%. So taxes are growing 12.5% net of refunds. State share is growing 16.5% net, and therefore net to center is growing only 10.8% approximately. So there is no expected further padding or anything here. This is our realistic but slightly conservative estimate.
Okay, the next question, please. 65. Please go ahead.
Hi, ma'am. Yeah. I'm Kriti from Informist Media. So you mentioned that Capex, there has been a push towards Capex. However, the Capex jump for this year is 11%, right? Which is lowest in the last 4 years. So are we moving towards a place of moderation in Capex? And secondly, while the budget, this is another unrelated question, while the budget clearly says that you are committed to your 4.5% target, you have also been recommended to bring down your debt to GDP ratio to 40% level, which still stands above 50%. So how are we looking towards moving towards that target? Thank you.
First of all, I'm on the second, your second bit was on the debt to GDP. What was your first one on? Capex. 11% growth in Capex. You've got used to about 30%, 23% from a low base. And today 11% on a high base appears low, informist. 11 lakh crores going for capital expenditure. And you're seeing also that the private sector is coming in with their investments. So one has to have a clear understanding that when the government wants to spend through capital investment, it can be for one, triggering the economy so that private sector also comes in. At a time when private sector didn't come in, we still fully came in. Now we are seeing also signs of private sector also coming in. So it's only natural for two reasons, therefore, for you to look at. One, on what base are you saying 11% is less? Growth it is. And second, please do look up if private sector is coming in or not. Does that answer you?
Yeah. The next question, we'll take it.
Wait.
Still?
On your 40% of, first of all, that was a figure that was set before COVID. Its relevance today is something that has to be looked at completely afresh. And in fact, in 21-22, the finance minister had set out a particular fiscal consolidation glide path, which is the post-COVID glide path. I would only point out that today India's debt to GDP ratio is one of the lowest in the G20 apart from other countries. So we have to look at things in today's context, not based on a historical relic of a report which was prepared long ago before COVID happened.
Yeah.
And again, our external debt also is something which you should notice is never been high, not high even now.
Yeah, second row, I would request you to confine to one question, please, because there are many questions coming up. Yeah, thank you very much. Please go ahead. Yeah. दूसरा दे दीजिए. Give this another.
नमस्कार मैम, आलोक प्रियदर्शी हूँ मैं CNBC आवाज़ से. मेरा सवाल मैम ये है कि एक कंज्यूमर के नाते, एक टैक्स पेयर के नाते हमेशा लोगों की ये उम्मीद रहती है, या इस देश में कैसे कह सकते हैं कि चुनाव इतने ज़्यादा आते हैं कि लोगों को लगता है कि जब चुनाव आएंगे तो उनकी जो मांगे हैं वो पूरी हो जाएंगी, टैक्स के मोर्चे पर कहें, या फिर जो पॉपुलिस्ट मेजर्स सरकार लेती है. लेकिन क्या इस मिथ को क्या ये सरकार तोड़ना चाहती है कि जब चुनावी साल होगा तो पॉपुलिस्ट बजट नहीं देंगे? जिस तरह से फिस्कल प्रूडेंस की आपने बात करी, आपने फिस्कल प्रूडेंस को लेकर काफ़ी जोर दिया है इस बार बजट में, तो ये इस बात का कॉन्फिडेंस सरकार को ज़्यादा है कि वो अगली बार पूरी तरह से आके और जनता के जो उनकी उम्मीदें हैं उनको पूरी करेगी, या फिर सरकार इसी तरीके से जिस तरह से फिस्कल प्रूडेंस का जो रास्ता है उसको अख्तियार करेगी और उसी हिसाब से चलती रहेगी, और चुनाव के मौके पर लोग आम आदमी एक्सपेक्ट ना करें कि कोई पॉपुलिस्ट बजट आ सकता है?
आप डिस्कशन जैसे प्रश्न पूछ रहे हैं भाई. मैं पहले से बोलते आई हूं और माननीय प्रधानमंत्री जी भी इस विषय में बोलते थे, कल परसों भी उनका बयान है. वोट ऑन अकाउंट क्या है, कैसे है, आपको मालूम है. सो वी लार्जली केप्ट vote on account as vote on account, but also showed how the economy will be moving forward and what's our plan for it. Who are we going to aim at when in July, when we come back to present a budget? Who are the sections who will be addressed? What are the kind of investments we'll make? However, very clearly showing that on capital expenditure, we are showing an increasing growth. More money is being put in for that, for innovation, and so on. So announcements भी है, ये नहीं है कि वोट ऑन अकाउंट है इसमें कुछ और नहीं है. Announcements है, दिशा निर्देशक बातें भी है. So वोट ऑन अकाउंट एंड इंटरिम बजट को कैसे किस हद तक उपयोग कर सकते हैं, और वो भी कॉन्फिडेंट सरकार, उस हद तक हमने यूज ही किया है.
Yeah, Z Business, and after that you hand over the microphone to your right. Yeah.
मैम आपने दो बड़ी स्कीम्स का ऐलान किया, एक अर्बन एरिया के अंदर हाउसिंग स्कीम का, दूसरा रूफटॉप सोलर के लिए। मैम इसका बजट एलोकेशन कितना है? एक सवाल। दूसरा सवाल मैं मैम पूछना चाहूँगा डाइवेस्टमेंट के ऊपर। मैम पिछली बार 51,000 करोड़ का टारगेट था, वो टारगेट नहीं मीट हो पाया। इस बार बजट में ये नहीं मिल पाया कि कितना टारगेट अगली बार के लिए रखा गया है, और ऐसे टाइम पे टारगेट नहीं पूरा हो पा रहा है जब मार्केट, इक्विटी मार्केट बहुत अच्छा परफॉर्म कर रहा है।
पहली बात तो मैं ये स्पष्ट करना चाहूँगा कि जो डिसइन्वेस्टमेंट है उसमें हम वैल्यू लॉकिंग का प्रिंसिपल लाते हैं। आपको एक मैं छोटा सा उदाहरण देता हूँ। हमारे जो 61 लिस्टेड CPSCs हैं और 16 PSBs हैं, एक यानी कि 1 जनवरी 2021 में, यानी कि 3 साल पहले उनका कंबाइंड मार्केट कैप 15 लाख करोड़ था और आज के वक्त में वो 58 लाख करोड़ है। तो हमने 42 लाख करोड़ की वेल्थ क्रिएट की है पब्लिक सेक्टर में, और उसको माइनॉरिटी शेयर होल्डर्स जो उसमें हैं उन सब के साथ उनकी वेल्थ शेयर हुई है। तो आप वेल्थ इफेक्ट नहीं देख रहे हैं, आप सिर्फ उसमें से वेल्थ में से हम क्या निकाल रहे हैं, लेकिन वो जो वेल्थ जनरेट करना भी इक्वली इम्पॉर्टेंट है। एक साल अलोन में हमने 25 लाख करोड़ का एडिशन किया है। तो आप समझ सकते हैं कि 2014 से जब हमने 4.2 लाख करोड़ का डिसइन्वेस्टमेंट किया है और 4 लाख करोड़ का हमने डिविडेंड लिया है CPSC से, 8.5 लाख करोड़, उसके मुकाबले एक ही साल में 25 लाख करोड़ का हम मार्केट कैप ऐड कर रहे हैं। तो ये जो वैल्यू अनलॉकिंग स्टोरी, इसका मतलब ये है कि आपको डिसइन्वेस्टमेंट करना है तो वेल्थ भी इम्प्रूव करनी है, शेयर की वैल्यू भी लेनी है, और तब डिसइन्वेस्टमेंट कैलिब्रेटेड वे से करना है। इसलिए सरकार ने डिसइन्वेस्टमेंट का एक तो हमने कोई फिक्स टारगेट भी इसे नहीं रखा है। हमने ये कहा है कि हम एक अदर रिसीट्स में एसेट मोनेटाइजेशन हो, डिसइन्वेस्टमेंट हो, वो सब जाते हैं। और दूसरा रिसीट का एक इशू है कि हम कभी भी यदि हमें अपॉर्चुनिटी मिलेगी इससे ज़्यादा भी कर सकते हैं, लेकिन एक उसको फिक्स्ड मार्केट सिग्नल ये देना कि हम शेयर बेचेंगे ही बेचेंगे, इसी प्राइस पे बेचेंगे, उसके कारण उसका प्रतिकूल असर मार्केट में पड़ता है। इसलिए जो हमारा वो है, अर्थ ये है कि हमारा जो रेवेन्यू है, और दूसरी हमने इम्पॉर्टेंट स्ट्रैटेजी है कि डिसइन्वेस्टमेंट और डिविडेंड ये दोनों ऑपोजिट डायरेक्शन में हैं। जब हम कंबाइंड कह रहे हैं हम 92,000 करेंगे तो कंबाइंड आप देखिए, और नॉन टैक्स रेवेन्यू इज़ द बिगेस्ट स्टोरी। लगभग 75,000 करोड़ का नॉन टैक्स रेवेन्यू ऐड हो रहा है और हाईएस्ट ग्रोथ उसमें ही है। और अब लगभग 1 लाख करोड़ जो है, यदि आप बजट से देखें और नेक्स्ट बजट में देखें तो 1 लाख करोड़ का नॉन टैक्स रेवेन्यू हम ऐड कर रहे हैं। और नॉन टैक्स रेवेन्यू ऐड में डिविडेंड की बहुत बड़ी भूमिका है और डिविडेंड हम एक्सीड कर रहे हैं। तो इसलिए आप कंबाइंड वे से इस सारे, यदि इस सेक्टर को देखें तो हमको एक नई दिशा में जाने की ज़रूरत है, जो हम गए हैं।
रिगार्डिंग द न्यू स्कीम्स, रूफटॉप सोलर के लिए 10,000 करोड़ का प्रोविजन है बजट में। As regards the urban housing scheme, its contours are being worked out, and there is a token, and it will be funded when the exact contours are finalized.
Yeah, the next question, please go ahead. 81, please. Okay, I mean, I'll...
Hello.
Yeah, go ahead.
Yeah, sir, Prakash Pedashi from ET now. Ma'am, the benefit of lower tax rate of 15% has been extended for startups and investment by sovereign wealth funds. My question is, I mean, has it also been extended for manufacturing unit? No, I'm asking, I'm seeking clarity. No. Thank you.
Yeah, Bloomberg, Ruchi.
Ma'am, some of the rating agencies have said that they will take a call on a ratings upgrade for India only after the next budget. But given that this budget of yours, you did say that it has been transparent, you've maintained the path of fiscal prudence as well, what will be your message for rating agencies?
not only aligning with the fiscal consolidation roadmap that we gave earlier, but bettering it. Is that one simple, straightforward message which every rating agency should take on board? Should take on board.
Ma'am.
Yeah, please go ahead.
Yeah. Sapna here from CNBC-TV18. Ma'am, two questions. One very broad, generic. Excellent work in terms of fiscal consolidation. Just want to understand, is it slightly ambitious to have a 5.1 number right away in the interim budget? I mean, broadly expectation was July budget, you will start kind of... No, I don't mean that. No, I don't mean that, but just try to understand, like in 2 years, you'll be able to do below 4.5%. Very broad understanding, ma'am. One is that. Second, ma'am, you're talking about next generation reforms. Within that context, the government has had a massive privatization agenda. There doesn't seem to be, any mention of that as of now.
Just heard to him. Sapna, you're asking the same thing.
No, but
you went elaborately on it.
But will you still be sticking to it? Just broadly wanted to understand.
Yeah, please go ahead.
Yeah.
Timsi Jaipuria from CNBC-TV18. Ma'am, in your budget speech, you've given a very ambitious target of 1 lakh crore worth of a fund for private sector for research and innovation, where you've promised 50-year interest-free loan. If you could give the contours of this scheme, which are the sectors who will benefit in terms of the private sector, which are the specific sectors who can avail this corpus, and what kind of work or research and innovation are we focusing on? Sectors and how this scheme will work.
So I'll tell you the quantitative part, and Secretary EA can expand on the sectors. There is the 1 lakh crore is a provision over a period of time as the need emerges. This will be provided as a 50-year interest-free loan to a financial institution which will be identified, which will be within the government ambit of financial institutions, who will then finance or refinance projects at long tenors and at concessional rates of interest. Money has been provided in this budget in the Department of Economic Affairs for multiple purposes, including this one. So there is a provision for this in the Department of Economic Affairs, which covers many other things also. As regards the sectors, I'll leave Secretary.
See, as announced in the budget speech,
of the Indian rail so important for safe travel and also ease of living travel and comfort will need upgradation, and this is what we're aiming.
Yeah.
All right, so that was Finance Minister Nirmala Sitharaman addressing the media after the budget. Broadly, they were the key highlights, but I think one of the big headlines that's to come out from this press conference is the budget outlay for the rooftop solar scheme, and that is at 10,000 crore rupees. Several other highlights that we have for you on our ticker flashing right now. Thanks for tuning in. With that, we've come to an end of this special edition. But stay with CNBC TV18. More news and updates will continue after this break. No surprises from Finance Minister Nirmala Sitharaman as the government opts for prudence over populism in the interim budget. No changes to income tax rates and capital gains tax, pegs nominal GDP growth for FY25 at 10.5%. Finance Minister sticks to the path of fiscal consolidation and springs a pleasant surprise, projects a fiscal deficit target of 5.1% of GDP for FY25, expects to end this financial year with a deficit of 5.8%. Government banks on lower borrowing and higher revenue mobilization to keep the deficit in check, proposes to borrow just 14 lakh crore rupees from the market, which is 8% lower than last year's estimate. Also pegs gross tax revenue growth at over 11% in FY25. The government's infrastructure push continues. Capital expenditure outlay hiked by 11% to more than 11 lakh crore rupees. Finance Minister promises to build 3 major rail corridors. 40,000 rail bogies will be upgraded to Vande Bharat standards. Stock markets give up early gains to end marginally in the red. The rupee gained strength and bond markets share the budget after the government scaled down its borrowing plan. The government sets another big 50,000 crore rupee divestment target for FY25 after a tepid show so far in FY24. Even the revised target, 30,000 crore for FY24, is well above market estimates of near 20,000 crore rupees. A sharp 13% cut in fertilizer subsidies helps trim the overall subsidy bill. The outlay for food subsidies also 3% lower at just under 2 lakh crore rupees. No capital infusion for oil marketing companies this fiscal. The government halves the 30,000 crore rupee funding plan and defers it to FY25. The government overshoots the FY24 budget for the Rural Employment Guarantee Scheme by 43%, maintains the revised 86,000 crore rupee number as the outlay for FY25. Finance Minister proposes to set up a research and innovation fund with a corpus of 1 lakh crore rupees, promises long-term financing at low to nil interest rates for a tenure of 50 years. Well, those are the big headlines from the budget. You're watching CNBC-TV18 and I'm Ritu Singh. Here are the other headlines that we're tracking for you this evening. Shares of Paytm plunged 20% after the RBI crackdown. Brokerages believe the new restrictions will end all operations of Paytm Payment Bank for all practical purposes. This even as Paytm claims the annual EBITDA impact will be 300 to 500 crore rupees. Viacom 18 is in advanced stages of talks to buy a majority stake in Disney India, according to a Wall Street Journal report. The deal likely values Disney India business at around $3.9 billion. Global markets remain largely subdued after US Fed Chair Jerome Powell signals a rate cut is unlikely in March. Crude oil prices post the first monthly gain since September.
Honorable Speaker, I present the interim budget for 24-25. We need to focus on 4 major castes. They are Garib, Mahilayeं, Yuva and Annadata. Their needs, their aspirations and their welfare are our highest priority. The revised estimate of the fiscal deficit is 5.8% of GDP. The outlay for the next year is being increased by 11.1% to 11,11,111 crore rupees. Our government will launch a scheme to help deserving sections of the middle class to buy or build their own houses. Prime Minister Modi has furthered that to Jai Jawan, Jai Kisan, Jai Vigyan and Jai Anusandhan.
भारत में 21वीं सदी के आधुनिक इंफ्रास्ट्रक्चर के निर्माण के साथ ही युवाओं के लिए अनगिनत रोजगार के नए अवसर तैयार होंगे.
At 57 minutes, this was the shortest budget speech by Finance Minister Nirmala Sitharaman. Now, there were no surprises at all as the government opted for prudence over populism. No changes were made to income tax rates and capital gains tax, and nominal GDP growth for FY25 has been pegged at 10.5%. The government stuck to the path of fiscal consolidation and has projected a fiscal deficit target of 5.1% of GDP for FY25. However, the government expects to end this financial year with a deficit of 5.8%. Now, the government is banking on lower borrowing and higher revenue mobilization to keep the deficit in check. Now, Finance Minister proposed to borrow just over 14 lakh crore rupees from the market this year, which is about 8% lower than last year's estimate. The minister also pegged the gross tax revenue growth at over 11% for FY25.
Building on the massive tripling of the capital expenditure outlay in the past 4 years, resulting in huge multiplier impact on economic growth and employment creation, the outlay for the next year is being increased by 11.1% to 11,111 crore rupees. This would be 3.4% of our GDP. The revised estimate of the fiscal deficit is 5.8% of GDP, improving on the budget estimate, notwithstanding moderation in the nominal growth estimates. We continue on the path of fiscal consolidation, as announced in my budget speech of 2021-22, to reduce fiscal deficit below 4.5% by 25-26. The fiscal deficit in 2024-25 is estimated to be 5.1% of GDP, adhering to that path.
Okay, my colleague Parikshit Luthra also joins us with leaders from industry body FICCI on their budget verdict.
Finance Minister Nirmala Sitharaman has delivered the interim budget. No big bang announcements as were being predicted, as were being spoken about. The government has stuck to the path of fiscal consolidation and good macroeconomics. Joining us right now is Shubhrakant Panda, former president of FICCI and managing director of Indian Metals and Ferro Alloys, Anand Goenka, vice president, vice chairman of the RPG Group. Gentlemen, thank you very much for joining us. Shubhrakant, if I can begin with you, how do you see the budget? A lot was being discussed about PM Kisan, about Capex growth to the tune of maybe 30%. Are you disappointed, or are you feel that it's good that the government has stuck to the rule book as far as the interim budget goes?
So, I think it's a very clear articulation of intent on the part of the government, with the finance minister highlighting the accomplishments over the past decade or so, as well as charting out, the trajectory for the, going ahead. And in that context, the clear articulation of the the areas of focus, which is the poor, the women, the youth, and the farmers, means to build on their capability and empower them to contribute to Viksit Bharat. I think all of that was laid out very, very, clearly. And in that context, I think taking forward the Viksit Bharat journey further, the focus now is on getting the states on board. And to that extent, the 75,000 crore outlay for milestone-linked reforms, I think is a good measure. But specifically on the Capex question that you asked, I don't think it is something that we should be disappointed, because keep in mind that last year was a significant 33% hike to 10 lakh crores, and a further 11.1% hike on that record number is not something to be scoffed at. I think the government has done a very good job of doing the heavy lifting and providing support to the economy when it was needed the most. And now the finance minister has acknowledged in her speech that private sector capex is starting to pick up, and buoyed by tax receipts, etc. What they're looking to do is cut back on the borrowing so as to give headroom to the private sector to fund its own expansion plans, etc. So, I think the public and the private capex working in tandem is what will take us forward. But most importantly, I think from an industry perspective and indeed on a larger perspective of the economy, is the commitment to fiscal prudence. So containing fiscal deficit at 5.8% for the current year and bringing it down sharply to 5.1% forecast for FY25, I think is something which is absolutely commendable.
Right. Let me go across to Anand Goenka, Vice President of FICCI at this point. Anand, what do you feel about this path that the government has taken, especially the commitments, the targets around fiscal deficit of 5.8% for FY24, 5.1% for FY25. So do you feel that this is a government which does not want to fall for populism, which wants to stick to the path of fiscal consolidation, good economics? And as far as the RPG group goes, are there certain announcements in the budget which make you excited, make you more confident?
Right, I think this reflects a lot of focus on continuity by the government, the fact that they're continuing the journey on fiscal prudence, especially in an election year. So to me, it's a very positive sign that they're continuing to stick to improving on fiscal prudence and better than what was expected. So that's very positive. With respect to the RPG group, I'd say the positive has been the continued investment in infrastructure, highways, which bodes well for our company, KEC International. In addition to that, I'd say the infrastructure spends are very well divided across the board, whether it is roads, ports, railways, all areas of infrastructure are being looked at. And I think that will have a positive impact as a multiplier on the economy, as well as infrastructure companies across the board.
Right. Let me go back to Shubhrakant at this point. Shubhrakant, just yesterday we had seen a reduction in duties on certain components. This was with regard to the mobile phone division. Now, when it comes to adjustment of duties, reduction of customs duties, for the sake of Atmanirbhar Bharat, we didn't hear of too many announcements, but the push towards green energy, the push towards solar and renewable schemes, how do you see all of that?
So, the finance minister articulated in her speech that in keeping with the tradition of vote on account, there are no direct or indirect tax proposals contained in the interim budget. But I guess from what was announced yesterday for the mobile phone sector, etc., is something that was needed for a very, very important sector, one which has grown rapidly. So that's where that stands. But clearly, coming to the question you're asking about green growth, I think all of us agree on one thing, that what we need is not just growth, but sustainable and inclusive growth. And the interim budget had clear directionality on both, carrying forward the good work of the government of previous budgets. So when it comes to sustainable growth, the viability gap funding for up to 1 gigawatt of offshore wind, the emphasis on EV ecosystem, including charging infrastructure, public e-buses for public transportation, and not to mention the rooftop solar scheme for households, which will benefit 1 crore households, if I'm not mistaken. I think these are all very, very significant measures which shows India's commitment to the energy transition initiative. And this is something, keep in mind, that has the emphasis and the push from the very top, with the Honorable Prime Minister, making it a hallmark of his government, and talking about initiatives like LIFE, which is lifestyle for the environment. So there is plenty of steps in there in terms of directionality, in terms of vision for sustainable growth, and from an inclusivity perspective as well. Looking out for those at the bottom of the pyramid, and that is something that I think all of us support. That where help is needed, it must be provided. So and not just in that manner, but also creating opportunities through the R&D fund, etc. I think sustainability and inclusivity are the hallmark of not just this interim budget, but sustained action over the past several years.
Right. Anand Goenka, does this budget in a way give you confidence about Capex deployment, about the private investment cycle?
No, absolutely. I think, as Shubhrakant mentioned, this is already on a high base of 33% increase that we saw last year. We are seeing a further 11% increase. Implementation of projects has been excellent. If you look at the number of kilometers of roads that are being laid, is the highest ever that we have seen in the country under Minister Gadkari. So to that extent, not only are projects or investments being announced, but they're actually being implemented at a great pace. They have been very targeted investments also that have been announced. Corridors for certain elements such as cement and minerals that were announced on the railway side, port connectivity, decongestion of high traffic zones. So each of them are very focused and will result in high ROI as that investment as well. So to that extent, it will bode very well for business. It will bode well for the auto industry, for the infrastructure segment, as well as decongesting the entire logistics space where India has some area to cover. Logistic cost as a percentage of GDP is around 14%, and through Gati Shakti, the government is looking at single digits. So all of this will help in various sectors across the board.
Thank you so much for joining us, giving us your views on the interim budget, and how do you see this encouraging the private sector to invest more in the coming months. Thank you once again for being with us, and that's a wrap of this broadcast for the moment, but our live coverage of Budget 2024 continues on CNBC TV18. Keep tuning in through the day.
Well, it continues indeed, Parikshit, but we have to take a short break. Don't go anywhere. We're back with our budget special coverage on the other side. Welcome back to our budget special coverage, and my colleague Parikshit Luthra also spoke to Anish Shah of M&M on the budget, what he made of it, how it could impact his business and the economy. Listen into that conversation.
This is actually an excellent budget. It's very thoughtful. It's not easy to meet all the constituents' needs, but I feel that this does it well, because first, let's start with the long-term vision, which is really around Viksit Bharat and positioning India in the world as a growing power. And there are a number of elements of the budget that enable that. In terms of the logistics focus that we have, in terms of the states that are brought in and the incentives given, to be able to make business easier. And these are actions that will really position India very well in the long term. In addition to that, it's an inclusive budget because there's a lot of emphasis on social empowerment, on homes, and a number of other areas that address the four constituents that you mentioned. And beyond that, it's also one that showcases and takes further India's leadership on the climate front. And a number of initiatives that have been outlined in the budget that will be climate friendly. So on balance, I would say that this is one that is very positive for the country overall for the long term, and for the industry and for various different constituents in the country.
Right. Let me speak about the climate action and the opportunity there. The rooftop solarization scheme, which would cover 1 crore households, and they will be able to obtain up to 300 units of free electricity. The government believes this will lead to savings of 15,000 to 18,000 annually. Then you have the green growth schemes, where you have spoken about coal gasification, viability gap funding for offshore wind energy for about 1 gigawatt. You've also spoken about phased mandatory blending of compressed biogas in CNG. How do you see these measures, and how do you think the industry will pick up cues from this?
So the world is concerned about energy transition, and there are multiple discussions around that. I think India is showing the way. India is showing leadership in energy transition in terms of how it can happen. It started with utility scale solar plants, and now hybrid, which is solar, wind and storage that have come in as well. And with rooftop solar now and other incentives around it, this is one that will transform the way India uses energy. And first, it's cheaper, and therefore it's beneficial for users, whether they're industries or individuals. And second, it's cleaner, and that will enable, again, a better environment, which is something that we all look forward to. But beyond that, for the long run, it really helps in that fight against climate change. So I think it covers a number of areas. Today we see utility scale solar plants being much cheaper than fossil fuel based plants, and that's something that is not only at the utility level, but even as we put in smaller captive plants for specific uses, and as we extend that to rooftop solar, that's exactly the same principle. The technology is there, it is better overall, and this budget is enabling it. So industry should welcome it and actually drive a much faster conversion to renewables for everyone.
Right. I would just like to quote Anand Mahindra as well. He tweeted some time back, "For many years I have been saying that we create too much drama around the budget and raise expectations of policy announcements to an unrealistically feverish pitch." What do you think India has done by giving a budget which covers all the major segments of the population, of the industry? No big bang announcements, as this is a vote on account, but at the same time also indicates that we don't want to go in for open populism. We want to maintain fiscal discipline. How do you see the messaging in this budget?
For this, I would look at the past few budgets, not only this one. And we've seen economics really play center stage as compared to politics. And that is always better for the economy. As you rightly said, there are no big bang announcements, there are no populist measures. At the same time, it's about inclusive growth, and there are segments of society that are not left behind. And therefore, I think this balances everything really well.
Right. And finally, there was no announcement on the FAME scheme, but yes, the FM indicated that the support for electric mobility would continue. A payment security mechanism for electric buses will also be brought in. How do you see that? Are you hoping for some clarity on the FAME scheme?
I believe there will be clarity in terms of the operating mechanisms. That was not required in the budget itself. But the positive aspect is that that scheme is continuing right now. And the other aspects also around buses as well as around the EV charging infrastructure is a positive step forward, because we will see the country really starting to adopt EVs as we see a slew of EV products start coming in over the next 12 to 18 months.
Okay, so that's as far as the budget is concerned. But in other big news that we've been tracking for you today, shares of Paytm hit lower circuit on opening. This after the RBI imposed major restrictions on Paytm's payment bank yesterday. Now, as per brokerages, the restrictions are likely to cause reputational risk. It may also hamper the firm's ability to retain customers. Now, while immediate impact on business is ruled out, analysts believe that it can have medium to long-term repercussions on revenue and profitability. Further, Macquarie claims that Paytm has not been in good books of the regulator, and additionally, Jefferies also downgraded the stock to underperform and trimmed the target price to 500 rupees per share. Now, during the con call, founder Vijay Shekhar Sharma called the restriction a big speed bump and said that the company will sail through with the support of banks and that many have already reached out to him. Remember, Paytm had earlier outlined that the impact of this move is going to be about 500 to 600 crores on the EBITDA. Hear him out.
Going forward, the keyword is that we will not work with Paytm Payment Bank, and that is what probably means that other banks will come. Paytm, I can say that it is more of a big speed bump, but it is something that we believe that with partnership of other banks and capabilities that we have already developed, we'll be able to see it through in next few days or quarters, as the case would be.
Okay, with that, we're going to wrap up this special show. Thanks very much for watching, but stay with CNBC TV18. Our budget coverage and other news will continue after this break.
Honorable Speaker, I present the interim budget for 24-25. We need to focus on four major castes. They are Garib, Mahilayeं, Yuva and Annadata. Their needs, their aspirations and their welfare are our highest priority. The revised estimate of the fiscal deficit is 5.8% of GDP. The outlay for the next year is being increased by 11.1% to 11,11,100 11 crore rupees. Our government will launch a scheme to help deserving sections of the middle class to buy or build their own houses. Prime Minister Modi has furthered that to Jai Jawan, Jai Kisan, Jai Vigyan and Jai Anusandhan.
भारत में 21वीं सदी के आधुनिक इंफ्रास्ट्रक्चर के निर्माण के साथ ही युवाओं के लिए अनगिनत रोजगार के नए अवसर तैयार होंगे.
Well, at 57 minutes, this was the shortest budget speech by Finance Minister Nirmala Sitharaman. There were no surprises as the government opted for prudence over populism. No changes were made to income tax rates and capital gains tax, and nominal GDP growth for FY25 has been pegged at 10.5%. Now, the government has stuck to the path of fiscal consolidation and has projected a fiscal deficit target of 5.1% of GDP for FY25. However, the government expects to end this financial year with a deficit of 5.8%. The government is banking on lower borrowings and higher revenue mobilization to keep the deficit in check. Now, the finance minister proposed to borrow just over 14 lakh crore rupees from the market, which is about 8% lower than last year's estimate. The minister also pegged gross tax revenue growth at over 11% in FY25.
Building on the massive tripling of the capital expenditure outlay in the past 4 years, resulting in huge multiplier impact on economic growth and employment creation, the outlay for the next year is being increased by 11.1% to 11,11,111 crore rupees. This would be 3.4% of our GDP. The revised estimate of the fiscal deficit is 5.8% of GDP, improving on the budget estimate, notwithstanding moderation in the nominal growth estimates. We continue on the path of fiscal consolidation, as announced in my budget speech of 2021-22, to reduce fiscal deficit below 4.5% by 25-26. The fiscal deficit in 2024-25 is estimated to be 5.1% of GDP, adhering to that path.
Okay, my colleague Abhimanyu Sharma also spoke to Commerce Minister Piyush Goyal on the interim budget presented today. Listen into that conversation.
We are joined by the Union Minister for Commerce and Industry, Consumer Affairs, Food and Public Distribution and Textiles, Mr. Piyush Goyal. Sir, thanks for speaking with CNBC-TV18. Though it's an interim budget, of course, many announcements, many data points have been highlighted by the Finance Minister. Your first take on the budget?
Well, I think it's remarkable that Prime Minister Narendra Modi and Finance Minister Nirmala Sitharaman ji have been able to demonstrate their care and concern for the poor, their desire to see a developed India on the back of 140 crore Indians' work, Sabka Prayas, and do all of this within fiscal prudence, keeping the macroeconomic parameters extremely stable and strong. I think it's a remarkable budget, very progressive, very forward-looking, full of hope to meet the aspirations of young India, new India, and a very comprehensive budget touching upon different sectors of society, touching upon a better future for the poor, opportunities for our youth, women-led development, and increased incomes of the farmers. So every segment of society have been addressed in this budget, interim budget. Madam Sitharaman ji spoke about transforming India through reforms and through very aggressive performance to make sure that the fruits of development reach the last man at the bottom of the corridor. We see inclusive and sustainable development.
The FM also spoke about the fact that FDI into India has increased in the past 9 years to the extent that it's double than the preceding 9 years. How do you see this momentum sustaining since we are seeing global uncertainties? There are several geopolitical reasons as well as inflationary concerns in the West. What is the rearguard action being planned by the government in this regard?
Well, very clearly, foreign direct investment has been on an upswing almost since the time Mr. Modi came in. And a lot of it is to do with trust, the fact that today the world looks upon India as a trusted partner, as a friend, where they would like to work and expand more. And Prime Minister Modi has been able to give confidence of a decisive, honest leader who has devoted his entire life for the welfare and for the better future of 140 crore Indians. Having said that, I think it's important to note that the country today stands on the cusp of rapid growth and development. Fiscal prudence has prevailed. Even our last year's fiscal deficit target has not only been maintained but bettered. From 5.9, we'll actually end up with 5.8%. This year it is expected to come down to 5.1%, and next year go down to 4.5%. This shows that most of the money that we are borrowing is going in for development of infrastructure. 11,000 crores being given for infrastructure development is truly phenomenal. And I have absolutely no doubt in my mind that this budget, based on strong macroeconomic fundamentals that we've been able to achieve over the last 10 years, will be a budget for all and a budget for the laying the foundation of a developed India by 2047.
The FM spoke about the spirit of first develop India. Now, even as India is looking at not just self-sufficiency but also export competitiveness in several domains, is there any policy measure or any larger government plan for duty rationalization across several segments as India wants to become more globally competitive? We are also negotiating several bilateral investment treaties and FTAs.
Well, if you will note that this has been a very dynamic government. It's always been proactive in its approach. It's always been ahead of the curve to meet the challenges of the day. In fact, only yesterday we were seeing vaccine wars, and it shows that this is a prime minister who has always seen and been ahead of his peers. When the world was grappling about what to do with COVID pandemic, the Honorable Prime Minister was already figuring out that science will find the way out of the vaccine of the COVID pandemic. And clearly, even in the deft handling of the economy, we have seen a similar trend. He has focused largely on strong macroeconomic fundamentals. He has focused on providing opportunities for the youth, providing women-led development as the mantra for the future, ensuring that farmers get a better deal going forward. And the sub-theme, subtext of all his work and the roadmap towards Viksit Bharat is on the strength of making sure that just like in the last 10 years, we have removed 25 crore people from multi-dimensional poverty. Even in the years in the future, our government will be focused for the welfare and a better future for every poor, every middle-class family in this country.
There has been an extension of benefits, not just in tax, but in several other areas till March 2025. Now, speaking of tax benefits particularly, there have been exemptions and relaxations for sovereign wealth funds. How is that going to benefit Indian companies, particularly startups, in the short to medium term?
Well, we've seen significant traction in foreign direct investment. Current year, of course, because of geopolitical situation or rising interest rates in developed world, we've seen a little bit of slowing down of FDI in the short run. But clearly, the India opportunity is so compelling. The 3Ds, the demography, the democracy and diversity that India offers, leading to increased demand, is such a compelling case that foreign direct investment is going to find opportunities in India. We're doing a number of free trade agreements. We're doing a number of bilateral investment treaties, which will further give an impetus to international trade and investments into the country.
Well, that is the Commerce Minister Piyush Goyal in conversation with my colleague Abhimanyu, laying out his thoughts on what the budget has highlighted, more importantly, the road forward from here. Well, it is that time of the evening when we are joined by the budget makers at our budget headquarters here in the capital, the team that's been working day and night over the past several months to get the budget ready and, of course, has been delivered today. Thank you very much to the CBIC and the CBDT chairman for joining us here today. Nitin Gupta, the chairman of the CBDT, and Sanjay Kumar Agarwal, the chairman of the CBIC. Gentlemen, many thanks for joining us. Relieved the interim budget is out of the way, but you've got another couple of months and the full budget coming up. Sir, all set for that?
Yes, definitely.
I want to start by asking you about where the government believes it has been conservative as far as tax collections are concerned, or at least that is the perception that the market has that the government has been conservative. I know that the finance minister was asked this question and she said, we've been realistic. But if you can explain to us the calculations on page 6, which the benefit of our viewers don't have at this point in time, to explain why you have decided to factor in 10.5% as far as tax collections are concerned.
I'll talk about the direct taxes, and if you see the numbers, our revised estimate is 19.45 lakh crores, and this growth is around 17% over what we have achieved last year. Our BE, the budget estimate which was laid down in the last year's budget, was 18.23 lakh crore. So we are moving ahead with 1.22 lakh crore more, despite paying more refunds. Which are around 11% more refunds we have already paid this current financial year. So our growth over the what we have achieved last year of 16.63 lakh crore has been 17%. So I believe this is quite a fabulous numbers, and with this number we would be having highest tax to GDP ratio, direct tax to GDP ratio in the entire century of this from 2000-2001 onwards till date. And for the next year, we are growing at the rate of 13%. The budget estimate is 21.98 lakh crores, which is 13% higher than 19.45 crores. So lakh crores. So there is sizable increase so far as direct taxes is concerned, and I think we would be in a position to achieve these.
You said that we are achieving the highest that we've ever seen as far as tax to GDP ratio is concerned. What is the aspiration from here on, given the fact that you've been able to deliver on this promise and this number? What is the potential? Where do you see this number?
See, we are working consistently, and despite the reduction in tax rates, a new regime which has been set into, so the trajectory is quite good, and we hope that we would be moving ahead in the same direction and bringing better results for the government.
One question, though, was that the 15% concessional tax rate, the sunset clause, comes into effect in March 2024. The expectation or the ask of industry was that extended by another 2 years, but the government has chosen not to go down that road. You've done it only in very specific cases. Why is that? Why did you feel the need not to extend it?
This is interim budget, that's it.
So we should have hope that in the full budget perhaps there could be...
Can't say anything as of now.
But is that the thinking?
There could be change in tenor, there could be change in anything. So it's again a discussion stage. So as of now we are where we are. That's the thing.
Well, that's a very important point that's coming in there from the CBDT chief, that this is an interim budget and perhaps the window has been left open to make some changes. We don't know. We're speculating on the back of the comment that you've made. But let me get Mr. Agarwal into the conversation, the chairman of the CBIC. Sir, GST numbers ahead of the budget, in fact, just 24 hours ahead of the budget, coming in very strong, and you've revised those upwards now to 1.74 lakh crore rupees. What's the assessment now in terms of what you can do as far as GST is concerned, given this run rate?
For GST, the budget estimate is 9.57 crores in the indirect tax revenue of the central government. And on GST side, we are seeing a very healthy growth in revenue, and in fact, for the third time, the revenue has crossed the mark of 1.7 lakh crores. And in the month of April, it was record high at 1.87 lakh crores. And in the month of January, the revenue collection on GST front was 1.74 lakh crores. That is the second highest. And the growth in GST revenue is healthy, and it is above the nominal GDP growth. And we are expecting that this growth will continue. And the indications are that, looking to the collection in the month of January, we will do very well in the financial year and will achieve the target.
So 1.7, you've achieved that number, crossed that number 3 times already. Should we expect that to become the sort of ballpark as far as collections are concerned going forward?
Yeah. In the current financial year, in the first 3 quarters, the average monthly revenue collection is 1.66 lakh crores. And that could set the benchmark for the next financial year on GST side.
One question that I had, and of course this was a decision that came ahead of the budget, the tariff revision from 15% to 10% as far as the electronic components are concerned for the mobile phone manufacturers specifically. That of course has been taken very well, very positively, welcomed by industry. But the expectation was that we could perhaps see tariff revisions for other sectors as well. Is that a proposal under consideration?
Regarding the mobile parts, I can mention to you that there were certain disputes on the rates, and there was a need felt that on the mobile parts we must rationalize the rates, and therefore on certain parts which are mechanics or die cast parts, on which rates have now been lowered from 15% to 10% to rationalize it and to take care of the disputes which have arisen in past.
But more sectors and more revisions likely under consideration could be taken forward ahead of the budget even?
Yeah, it's an ongoing exercise, and maybe when the full budget will be presented, that time many more such steps will be taken.
The suspense continues ahead of the full budget. A quick question on excise and why we've actually seen the drop as far as excise collections are concerned.
On excise, on union excise duties, I would like to mention that it is levied only on very few items. Mostly it is collected from petrol, diesel or aviation fuel. So on that the rate is drastically reduced in May 2022, and the reduction was 8 rupees per litre on petrol and 6 rupees per litre on diesel. That has impacted the revenue collection on union excise duty. Apart from that, another levy has been levied, that is known as special additional excise duty, more popularly known as windfall tax, and that is linked to the international crude prices. So depending upon that, the windfall tax rate is fixed, and this year the windfall tax has gone down by 56% depending upon the international crude oil prices, and that has impacted the collection on union excise duty.
Okay, sir, let me ask you, Mr. Gupta, as far as what the finance minister said, that there were about 10 or 12 items in terms of the Nai Disha Ki Baatein. Now, as far as tax was concerned, the expectation was a long one that the budget would address, or at least directionally signal the government's position and stance as far as the BEPS regime is concerned, for instance, or the capital gain simplification, which has been a long-standing demand. So again, suspense there, wait till the full budget?
BEPS is a continuing discussion stage, so even at the international arena, the discussions are on. So nothing can be said as of now. So the benchmark date is March 24. But on capital gains and there are other aspirational issues, I think that will be taken care of in the regular budget when it comes.
But have the consultations reached some degree of finality as far as capital gain simplification is concerned? Because this has been a process that's been underway for several budgets now.
It's a complex process. You should understand the asset class, the period of holding, the rate of taxation. So it's a complex process, and
with very competing demands being made of the government.
So let us see at the time, whenever the opportune time comes, we will definitely work on it.
So there is no finality or no consensus or no agreement on the treatment of any of these issues at this point in time?
As of now, at the interim budget stage, no.
Okay. Where do you get comfort from as far as tax collections are concerned today, given the fact that we are now likely to see the economy grow closer to 7%, even in FY25? That's the projected estimate. What's giving you comfort at this point?
Comfort is arising out of, our corporate tax rates are growing at a lower rate as compared to the personal income tax. So income tax is giving us a good buoyancy, and technology is the biggest enabler for us, and we are serving the taxpayer in the right spirit, and we are getting the benefit of that of the arising therefrom. And the growth in the personal income tax is around 27%, 26 to 27%, which is giving us the real jump in collections.
And, you talked about technology, and I want to ask both of you this question because we have now seen both departments working much more closely together, using technology to be able to make sure that we get the tax that the government is owed. On the back of that, this improvement that you spoke about as far as tax to GDP is concerned, how much of this is linked to the efficiencies that you've been able to draw as far as technology use is concerned?
Very difficult to put into some classification. It's a cumulative effect. It's the effect which is coming out from a number of factors which could be there. So it's difficult to identify that role of technology into the development means increase in taxes and therefore the tax GDP ratio.
Again, there were expectations that as far as income tax is concerned, there would be some sweeteners. Going by the fact that the 2019 budget had brought in sweeteners on standard deduction. So again, the government choosing not to do anything at all in this budget. But is there a case to be made now as far as, enhancing limits are concerned? Is that something that is under consideration at this point in time?
Last year we have come out with a new regime, sweetened new regime. And this is the first year for the operation of the regime. Let us see what happens, in what way benefit.
Are you more satisfied with the migration?
We will actually know in July, because the due date for filing return will be July. But I think, as I said last year, we'll see a very good range of migration running into 60% or so.
60%, that's the expectation?
Yeah, Sharon, you mentioned about the use of technology and the department. I can mention that we are using the big data because we are now getting the transactional data and we are receiving the data from other sources. And now, as you mentioned, there is a data exchange between Income Tax Department and GST. So that is helping us in ensuring by doing the data mining, using the data analytics tools to identify the areas where there is leakage taking place. And apart from that, we are using GSTN to upfront informing the taxpayer that if there is a gap between their different returns, so that gap is intimated to them so that they can voluntarily bridge that gap, make that differential payment.
Right.
So we are encouraging that voluntary payment by the taxpayers. And apart from that, the return filing by the GST taxpayers have now gone up to the extent of 90%.
Okay.
So that is a very good return filing even by world standards.
Okay, so good news coming in there as far as GST return filing is concerned. But good news that is expected or hoped for on the GST front is when will we move to a 3-slab GST regime? And I know that this is not a budget-related issue, but I would imagine that perhaps in the next budget, the government could signal its intent to move closer to that or to a 3-slab regime. Has there been any work, any consultation at the level of the officers, etc., with the state officers as well on the move towards that?
I would like to mention that GST Council, they have already set up a GOM, that is a committee which has been set up to look into the rates. And that committee has now recently been reconstituted also.
Yes.
So that committee would look into all this rate structure and will make their recommendations which will go to the GST Council.
What do you think is a viable rate structure? Is a 3-rate structure a viable rate structure for the Indian economy?
As we all understand that, yes, there should be one mean rate and there should be a lower rate for essential goods and there may be a higher rate for the luxury commodities. So that should be the ideal rate structure, but it will depend upon how the recommendations will be made by GOM, which will be placed before GST Council, which is the ultimate deciding authority.
Which is why I said it's not a budget item specifically, but of course the government, the union government will directionally signal its intent to take this forward and get the states on board. But let me understand from you, sir, there was an announcement as far as the dispute withdrawal scheme was concerned as well. If you can explain to us the contours of that and how that's likely to work.
It's not dispute withdrawal scheme. There is nothing like dispute. See, you have to see it in the perspective of demand management. And whatever outstanding demand we have on our register, see, our act came into operation from 61, 62, and it's such a long time has elapsed that there could be demands of any era, any period. and when the taxpayer may not have the records, we may not have the records. There were manual system of like if a taxpayer makes the tax payment, there were manual system of adjustment because earlier there was no online payment. So it's a legacy issue. And while doing the demand management, we are of the view that on the bigger demands, we are working separately through demand management center at Mysore, and they are working through our entire chain of offices on higher demands. But these small demands are a matter of concern to us insofar as the grievances are arising out of that. We are not able to process the returns in a faster way. Like the FM has said, Honorable FM has said that 10 days we are processing, the average time is reduced to 10 days. So from the overall perspective, the decision has been that if we can extinguish these demands at the source stage itself, that will cleanse our books of accounts, and we will be able to focus more on the effective way on a larger demands, and we will be able to give a taxpayer service which is expected of us. So it's an innovative step taken by us. I think all tax department will be facing this sort of problem, that old legacy issues are pending, and because it's a 61, 62 we are in operation, you can think of, and the taxpayers are not aware of the issues, that it could be because of tedious mismatch, smaller demands. We want to clean our books of accounts and give a relief to the taxpayer as well.
Well, since we are talking about demand, let me address the issue of demand notices that have been going out both from the Income Tax Department as well as from the GST wing. Practically every other day there is news or reports suggesting that there is somebody that's being searched, somebody that's being raided, and so on and so forth. Can you explain to us the quantum of these operations, of these demand notices that have gone out so far, and what concerns you there?
I don't think these are two different matters. One is the enforcement matter, that what you are talking about, some search or survey or something, which is on a different perspective, and the demand notice is being issued on completion of assessment, which is a regular exercise, and obviously it picks up at the end of the financial year because the time available for the assessing officer is limited, so it picks up at the end of the assessment year, at the end of the financial year. So that could be, these are two different phenomena which will happen simultaneously.
No, so on both these parallel tracks now, especially as far as the enforcement operations are concerned, I mean, what is the universe of companies that is currently under sort of scrutiny?
I won't have the data often because the selection of cases is through computer-assisted selection methodology, and so I won't have the data right now with me on this.
But good news coming in for the department, with the Delhi High Court upholding the anti-profiteering provisions of the GST law, which was something that many companies had moved the courts against. And I want to understand from you at this point in time, again, many notices being sent out by the GST department, especially a whole bunch of insurance companies and so on and so forth. What are the pockets of concern for you today?
You mentioned about number of GST notices which have gone to the taxpayers recently, but that was mainly because of the time limits which were going to expire in the end of December or in the end of March. So depending upon that number of show cause notice which were selected, cases of scrutiny or audit or enforcement action were to be issued within the time limit. So therefore number of show cause notices have gone to the taxpayers, but I have already issued instructions to the field formations that they should be careful, they should examine the representation made by the taxpayers, and after considering their representation, then only once they are satisfied that a demand notice is to be issued, then only they should issue the demand notices.
But any sectors, like for instance, we've seen virtually every insurance company being sent a notice. Are there any sectors in specific where you find that there are vulnerabilities that the department is looking at?
You mentioned about the insurance sector. In that, certain notices have gone to them on certain issues, and we have received the representations. Those representations are being examined by the respective committees which are set up in the GST overall framework of, that is, one is the law committee, other is the fitment committee. They are looking into these issues, and in due course, after examination of issues, the matter may be taken up.
Mr. Gupta, as we head now to the full budget, the odds the possibility of a higher upward revision on the numbers that have been presented?
Can't say that now.
Does it look like a strong case for an upward revision, you think, on the back of the available data?
Can't say anything as of now.
Can't say anything as of now. What will be the priorities as we move closer to that date?
The priorities are already set for the tax department, and we are working in that direction. And like the first quarter will be very important for us to give taxpayer services for the entire year's data, AIS statement, which is being used by the taxpayer, the return form availability, the softwares, and that is a regular exercise which we do for the months in June and July. So that will be the priority, simultaneously budget formation. So that's.
And the use of AI, I want to understand from both of you what both departments are doing in terms of using artificial intelligence, if at all, at this point in time, or is there a roadmap or a plan to be able to do that? I'll start with you, sir.
The system side is very complex, and it will not be appropriate to talk about this right now because it's a separate exercise altogether. It's a huge, because everything is on the system now. And our endeavor is to put whatever is not available on the system to put it on the system. So it's a immaculate exercise, a very huge exercise which is being done definitely at our end. So it's a separate, we can discuss it separately at any point in time.
Fair enough. We look forward to that because that's going to be important as well. Let me get you to comment on that as well.
Yeah. Use of AI is definitely happening in the department on GST side as well as on custom side. We are using AI to refine our target because we are adopting a targeted approach. And now we are refining our targets so that we can increase the facilitation percentage in case of imports. And because of that, we have now able to increase the facilitation percentage to that extent of 85%. So that is the use of AI in the department on custom side. And we are not only using AI, we are using many more multiple tools. Like machine learning we are using, and we are using generative AI also for tax analysis. So these are the new tools which we are using for provide better services to the exim community and to increase the facilitation percentage. And that is leading to decrease in average release time. So we are conducting these studies on regular basis, and that has indicated that there is drastic reduction in the average release time on import side as well as on export side.
So I'm going to go back to the suspense that we were speaking of. We were given to understand that maybe about 40 items are up for consideration as far as customs duty revisions are concerned. We only saw the components linked to mobile phone manufacturing being changed. So that's up for discussion, up for approval perhaps in the next few months?
I would like to mention, Shireen, that in customs, now all the conditional notifications, they have the end date. So before the end date, all those customs notifications are examined, whether there is a need to continue them or they have to be phased out. So that exercise is an ongoing exercise. And you might have seen that recently government has extended the date, which was 31st March 24 to 30th September 2024, so that this exercise can be completed and maybe before the full budget.
Maybe before the full budget. Well, gentlemen, a well-deserved rest for the two of you this evening as you presented the interim budget, of course, part of the budget makers team. Thank you very much to both the CBIC chairman and the CBDT chairman for joining us here at the CNBC-TV18 budget headquarters. We look forward to seeing you in a few months from now as the full budget is unveiled. Thank you so much for joining us. More budget makers joining us right after this short break. Don't go anywhere. We're back in a moment with more.